Corners Investor Summit, your roadmap to scary good profits. We're thrilled you're here for one of the most anticipated trading events of the season. The markets are a cauldron of opportunity right now, bubbling with volatility, global headlines, earnings surprises, and tariff tension. And that means big sit-ups if you know where to look. Today, we've summoned an all-star lineup of master traders, educators, and innovators who will share actionable strategies to help you conquer uncertainty and capitalize on the chaos. Whether you're a seasoned pro or just getting started, you're in the right place to sharpen your edge. Now grab your coffee or your candy corn and let's get started. Decoding market cycles. First up is Jody Samuels. She's going to be, I apologize. First up is the incredible Jody Samuels, a world-class coach, Elliott Wave expert, and the creator of FX Trader's Edge. She's here to show us how to anticipate market direction using her powerful market map and how to align your entries and exits with precision across stocks, ETFs, futures, and Forex. So let's welcome Jody.
Thank you so much, and thank you for inviting me to the Traders Corner Investors Summit. I'm really pleased to be here. And today I'm excited to share with you a 3-step playbook for trading trends and corrections, hopefully which will give you more confidence. And as noted, in today's volatile markets, uncertainty is inevitable, yet price action often remains in sync with underlying market cycles. And mastering the timing of these cycles and actually learning the patterns of these cycles is really crucial. So I'm going to share with you a structured roadmap and straightforward timing tools so you can navigate the markets better and make better decisions as a result. But first, please read the disclaimer. It's very, very important to do so. Thank you. Before we dive in, let me quickly introduce myself a little bit more. My name is Jody Samuels. I began my career as a professional trader with JP Morgan, trading currencies on both Wall Street and Bay Street, where I managed positions that generated millions for the bank. Over the years, I've expanded into future stocks and options. And for the past 20 plus years, my passion has been teaching traders how to move from emotional inconsistent trading to consistent rules-based success. I also wrote The Trader's Pendulum, the 10 Habits of Highly Successful Traders. And in this book, this book describes 3 pendulums that every trader must manage. The market pendulum, which swings between trends and corrections, and that's what we're going to discuss today. The financial pendulum, which governs risk, reward, and capital. And the emotional pendulum, which swings between fear and greed, patience and impatience. The pendulum framework, markets, finances, and emotions constantly in motion, is at the heart of what I teach. And before we wrap up today, I'm going to share the details about my Wavy Tunnel Pro accelerated training. It's on demand. We had a wonderful week last week. It's totally recorded, so you can still join. Recently, my work has also been recognized in major publications, including USA Today and International Business Times. It's always an honor to be featured, but what matters most to me is showing traders like you how to apply these ideas in a practical way. And that's exactly what we're going to do today. And I'm told that I'm very passionate about what I do, and that's why traders love to work with me, because I am still so passionate, even after all these years. Imagine that. So here's why this matters. Volatile markets create opportunities, but they also bring about risks, as we all know. But most traders blow up not because of the market, but because of their emotions. And with limited capital, you don't always get a second chance. That's why having a repeatable system is non-negotiable. Now, it's great today with all the funded accounts, the ability to trade somebody else's money, but you still need a repeatable system that removes the guesswork and the emotions to a certain extent. So this is the coming up. I'll tell you about it at the end. It's on demand now. We had the sessions last week. Everything is recorded. It was a wonderful week. But let's get started. So what process do I follow to find trades have the confidence to pull the trigger and manage my trades with clarity. I use a 3-step process. It's a 3-step playbook. The first is the market map, reading the market map. That's the analysis that I do. I'm going to teach you about the market map today and about all the setups that I look for. 2 is the strategy, the Wavy Tunnel Pro strategy. And 3 is trade management with optimal risk reward. So I'm going to share with you the market map and what Wavy Tunnel Pro strategies I use on each cycle of the market map. The first step in achieving consistency is to have a thorough knowledge of the market to determine possible future scenarios and be prepared to take advantage of opportunities that arise. So what that means is we want to know the risks when we're looking at the charts. If we go below a certain level, we're going lower. If we pause at this level, we could go higher. So that's the kind of thing that I'm talking about. And in our system, we use the market map in order to provide market context and increase the likelihood of successful outcomes. The other thing that we base our work on is Elliott wave analysis. Ralph Nelson Elliott studied various market indices over a 75-year period in the 1930s while he was bedridden, actually. He discovered that stock markets traded in repetitive cycles and that these cycles or waves reflected the emotions of investors. Now, the good thing about this, he did it a long time ago, but these cycles repeat themselves in all the asset classes. So whether you're trading stocks or futures or Forex options, it's all about reading the market cycles. And the other key character in this story is Leonardo Fibonacci, who was an Italian mathematician born in the 12th century. And he discovered the Fibonacci sequence of numbers, a sequence of numbers after 0 and 1, where each successive number is the sum of the 2 previous numbers. These numbers, the Fibonacci sequence, are very, very important when calculating Fibonacci retracements and extensions. By dividing these numbers one by the other or going forwards and backwards, that's how you get the retracement ratios and the extension ratios. And this is the complete market cycle on the left. And this is based on Ralph Nelson Elliott's work that patterns are tied to collective human behavior related to Fibonacci numbers. So here you see the Fibonacci sequence, and the wave form here, counting the waves, it counts the Fibonacci sequence. But what I want to point out here is that after a market trends, so the trend is on the left and it looks like a 5-wave structure, but it can be extended, an extended 5-wave move. Then we have a market correction, and it can be a very significant market correction, an ABC, because, and this is a zigzag ABC pattern. There are other corrective patterns. However, a significant corrective move is what we look for basing action at this point. And I'm going to show you how we use it with the Wavy Tunnel Pro. So we don't count the waves with the Wavy Tunnel Pro. We count the waves through the market map, through the setup. I'll show you what I mean. Warren Buffett says, be fearful when others are greedy and be greedy when others are fearful. That's a contrarian move. What that means is after we move up in a trend, this is when traders tend to load up. They tend to get greedy. They tend to be very optimistic and exuberant. And that's fine. But this is the time to say, okay, I can continue to ride the trend, but where am I wrong? Where am I wrong if we start to do this? And maybe we should take some profits up here and wait for a significant retracement, or just take some profits up here just to lighten the load. And this I call point T. And this is the time not to load up. It's the time. It's not the time to load up. The time to load up is during the down here. during the trend. And then if we have a significant ABC correction, this is where traders tend to be fearful because they're still long up here, and they get panicked and discouraged, and they tend to bail. And this is an emotional pattern. This is where the emotions fit in with the market cycles. And this is what we're going to try to learn about today in more detail. So we have an uptrend on the left, and we have a downtrend on the right. Okay? And when we draw out, put the indicators, the wavy tunnel indicators on the chart, which is on the right, I hope you see that it mimics the 8-wave market cycle on the left. This is the wave, and this is the tunnel. When the wave separates from the tunnel and price bounces off the wave, we're in an uptrend. And then when we break down below the wave, our first target is below the tunnel. That's our first target. If we're going to maintain this uptrend, we are going to hold this level and then continue to move up. How do we know that this might be a top? There are lots of topping indicators that we use, or indications that we use, one of which is the awesome oscillator. So when we see divergence in the awesome oscillator, which means that price makes a new high and the awesome oscillator makes a lower high, it means that the momentum is running out of steam and that we could be ready for a pullback. And the first pullback is the A wave, and then we have the sideways wave B, and then we have the wave C. So that brings us to our strategy, our trend continuation and trend reversal. And this is the second step in my playbook to reaching the path to success, which is to have a highly effective strategy, which is easy to understand when making a trading decision. After a good analysis, strategy is used to identify the exact entry point, the stop loss level, and profit target to know when to trade and when to stay out of the market. And of course, removing the emotions is key, and that's not easy to do. So the wavy tunnel solution, introducing our roadmap and simple timing tools. What if you had a system that explained how to understand and trade the market cycles using the market roadmap, identified where to place trades for optimal entries and exits? And what if you had simple tools to trade the roadmap effectively, scan for trades, and follow a trade plan to effectively trade the setups? And then what if you had accountability to do what you say you're going to do? So accountability is really key. Side note, really, really very important, because trading, when you're trading your own account, you're just reporting to yourself. It's your own business, you're reporting to yourself. It's really good to have accountability, whether that's a trading group or a coach or a mentor. Master the market cycles, anticipate market direction with confidence, achieve better timing for trades, improve trade entries and profit targets, engage in rules-based trading, enhance consistency through structured trading, and develop, most importantly, develop independent thinking with clear trading goals, reduce stress and uncertainty in trading. Even if you're following somebody else, it's really important to have independent thinking and to do your own analysis. So by following the wavy tunnel solution, traders can navigate market challenges with confidence. I'm going to show you how to do that now. I'm going to just show you. Because this system is based on these four sciences, the DNA of the Wavy Tunnel Pro. Elliott wave gives us the rhythm of the market, the impulse and corrective phases you just saw, but we're going to dig deeper into that. Fibonacci symmetry allows us to measure timing and price levels, identifying where markets are most likely to turn. And harmonics patterns enables us to confirm price targets at key Elliott wave and Fibonacci levels. And finally, momentum shows us whether a trend has strength or exhaustion is setting in. Together, these four elements create a structured, rules-based way of reading the markets, and from this DNA, we get the Wavy Tunnel Pro setups. And these are the Wavy Tunnel Pro setups. Simple, visual, rules-based, designed for clarity and repeatability. I'm just going to state them here, and then we're going to get right into it and show you examples. The start of the trend is the breakout 1. That's the trend kickoff. And then we have our trend continuation trades. We call them the breakout 3 and the breakout 4. This is just a naming convention that we came up with many years ago. For the breakout 3 trade, that's for writing the strong trends. The breakout 4 trade is a blast off after the wave 4. And then we have the end of trend trades at point T, called the PW, the price to wave, which is the reversal to the wave, and the fill the gap, which is the extended correction to the tunnel. And then we have our sideways range bound trades. So this is what it looks like on the right. We have the market map below, and then we have the Wavy Tunnel Pro setup on top, and you can see the moving averages. I'll tell you what these moving averages are so you can set them up on your charts yourself. The indicators, these are our proprietary indicators, but I'll tell you what the moving averages are. The filter, that's the 12 EMA. The wave is the 34 EMA on the high, low, and close, and the tunnel is the 144 and the 169. So here we go. The start of the trend is when the wave crosses the tunnel for the first time. So let's just assume that it crosses the tunnel back here. It crosses up above the tunnel. That's how I define an uptrend. When the wave is above the tunnel, we're in an uptrend. Even if the wave is above the tunnel over here, it's still narrowing the gap. This is the correction. The trend continuation trades, the breakout 3 trades, are along the wave. Every time we move down into the wave, as long as the wave keeps separating from the tunnel, we're in an uptrend, and we can take trades bouncing into the wave. The breakout 4 trade is after this very steep correction. That would be down here. And one caveat for that is we still want the wave to be above the tunnel or in the tunnel. If the wave starts crossing below the tunnel, that trade is off the table. And then we have the end of trend trades, the price to wave, and that which is the move into the wave, and then the fill the gap, which is the move to below the tunnel. We see these patterns over and over and over and over and over and over again. Here is an example of the PW fill the gap and how to spot the end of trend reversals. When we see divergence in the awesome oscillator, when price makes a new high, that's one indication that price is running out of steam and that we could have a significant correction. Now you see all of these. The purple indicates the end of the significant move. And then the price to wave is the move down into the wave. And then we have the pullback. And then we have the continued move down below the tunnel. And as long as the wave stays above the tunnel, we're good with this. So this is the PW, and this is the fill the gap. Okay, this is a short trade or a getting out of long position trade. The short trade would be on the pullback without making a new high. You leave your stop above the high. That would be the trade plan. What is your target? Below the tunnel. That's the fill the gap trade. I don't look for anything more than that. When I see this uptrend move and we move down here, I don't. But if yeah, that's what I'm looking for. I'm out of the trade. I'm out of the PW fill the gap trade at this point. So we want to identify exhaustion points and enter with clarity and confidence with a clear strategy. And this is the PW fill the gap strategy. Now let's look at another example. On the left, we have a downtrend, okay? We have awesome oscillator divergence, and then we have a move back to above the tunnel. We have the initial move, and then we have the correction, and we have the move above the tunnel. That's the trade, the PW fill the gap trade. This is the PW fill the gap trade on the right for an uptrend. Okay, that's a significant correction. And certainly there are many ways that we discuss in the training how to enter the trade. There are many more things that we look for the end of the trend move, many things, but this gives you an idea. So this is called the bearish PW fill the gap trade. This is called the bullish PW fill the gap trade. And these indicators are wonderful, really wonderful indicators. And the bungee as well. I'm not going to get into that, but this tells part of the story as well. Let's look at another example. What happens after we have this significant correction is that we get the breakout 4 trade. This is the breakout 4 trade. We have a significant ABC correction down to below the tunnel, and this is the breakout 4 trade for the next move higher. I mean, this is what we're thinking, that we're going to be moving higher. All bets are off if the wave crosses back down below the tunnel, okay? But this is one of the high probability setups where in an uptrend, we are going to correct when we have a deep correction. And this is where we would look to enter. Better to enter here than to enter up here, right? Better to enter here than to enter up here. So I don't know how many of you trade, what markets you're trading. I'm showing you some stock examples. I'm going to show you some futures examples as well. And all of these setups occur in all the markets, Forex, futures, stocks, on any time frame. So if you're day trading and you're trading on the smaller time frames, you see these setups. If you're swing trading and trading on the bigger time frames, like the hourly, the 4-hour, the daily, even the weekly, you're going to see these setups. Because the markets are fractal and the patterns repeat themselves. These are all Elliott wave patterns, and the wavy tunnel expresses it beautifully. So I don't count the waves, I count them just by looking at the Elliott wave patterns, and that's what I teach in the program, although we do have the first part is the Elliott wave analysis. So here is the breakout 4 trade. After the PW fill the gap, we have the breakout 4 trade on the left. After the PW fill the gap, we have a breakout 4 trade on the right. Now, if you enter on the breakout 4 trade, and we show you how to enter, you need some confirmation. You want to make sure that, well, you have your stop loss in the market, obviously, but you want to make sure that the wave, if we are going to continue down here, that the wave doesn't cross above the tunnel, because it could be the start of a new trend. That would be the breakout 1. Right? And this is a case study on the XLK 5-minute chart. So here we had the initial move down, and then we had the correction, and then we had the move down into the tunnel. This didn't make it below the tunnel, it made it into the tunnel, and then we had the breakout 4 trade. Okay, breakout 4 trade. So PW, fill the gap, and right into the breakout 4 trade. Beautiful, beautiful setup on the 5-minute chart. Here is the XLY on a 60-minute chart. On the left, we see we have bar divergence in the awesome oscillator. Price makes a new high, and then we have a sell-off. The PW fill the gap completes at the tunnel, where the breakout 4 takes over. This is the breakout 4. So we have the initial move down. And it's really very interesting because these moving averages are really so great from where the market is going to stop. Now, I know that, I mean, there are other things to look at, Fibonacci, etc. I'm not even getting into that, but this is such a visual system that we really don't have to get into that. And then at this point, the market trades higher. I'm just looking at the time. Okay. Here is a futures case study. It's the ES 1 minute, the ES 1 minute. So that's the S&P futures on the 1 minute chart. What do we see here? All right, well, let's start at the left. The wave has separated from the tunnel. All of these moves are breakout 3 moves. Then we have a top. This was purple, by the way. It turns to gray when we make a new high. And then we have a steep correction and then a retracement. And then we have a move down and sideways, and we finally get the gray semaphore. It's called the gray down at the tunnel. We just wicked below the tunnel. But this is the target, the ultimate target. Sometimes we don't hit the target, especially in a fast moving market. Sometimes we do stop here, for example, and then start to move up. But when we do get that, like especially in the futures markets, when we get this move to the tunnel, I've seen this pattern over and over and over again on the 15-minute chart, because that's the higher time frame chart that I look at when I'm day trading. We get this pattern, and that's the time to look for going long on the futures market. So this is the pattern. We get the breakout 4 trade, and then all of these trades are breakout 3 trades. Every time we have a pullback into the wave, it's buyable, and then we get every time we make a new high, we get a purple semaphore. So this is on the 1 minute chart. This is GC on the 1 minute chart. We have divergence on the left, and we have a nice PW fill the gap trade below the tunnel. The wave is still above the tunnel, and there are lots of other things to look at, and then we start to move higher. Okay, so this just tells us that maybe it's time to turn around in gold. Maybe. Now we know, I mean, gold since this time, it did continue to move up, and then we had a massive sell-off, but this was the pattern on the 1 minute chart when gold was in an uptrend on the bigger time frame. Okay, beautiful. And one thing that Elliott says also is that when we look left, usually when we have this correction, we are coming back to the 4th wave of the prior degree. So this is some kind of consolidation right here, and this is where we came back to exactly. This is the NQ on the 60-minute, same pattern. We had divergence in the awesome oscillator, and then we had the price to wave, and then the fill the gap trade, and this was the bottom. Breakout 4 trade on the hourly trade, on the hourly time frame. These are the platforms. Oh, I'm rushing through this presentation. These are, so I'll have time to take some questions. These are the platforms that we have, the Wavy Tunnel Pro platforms. We have the indicators and our scanners on MT4, NinjaTrader, MotiveWave, TradeStation, and we have our indicator suite on Wealth Charts and TradingView. And we have a new Wavy Tunnel Pro dashboard scanner, which scans almost 5,000 instruments on a web page. Very powerful, with all of the setups that we just went through. So let's just review. There are 6 core Wavy Tunnel Pro setups: trading in action, identify the entry, trigger, and the re-entries. That's key. So the first is number 1, finding point C. I call this finding point C for the breakout 4 trades. The gray arrow can kick off the trend, finding point C. So when I don't see the uptrend here, but these would be all buyable into the wave, and then we have the deep correction, and then we have blue and red dots into the wave showing entry points. These are called the breakout 3 trend trades. And where do you leave your stop? After you buy into the trend, into the wave, you can, after we've moved up, you can leave it below the wave. Like, not a problem, you can leave it below the wave. And then number 3, purple arrow, end of swing, and then we start all over again with the price to wave and the fill the gap. So this is how you trade the market cycles using the Wavy Tunnel Pro. And it's really great because if you're trading, I don't know what you're all trading, but if you're trading stocks and you're looking at the bigger time frames, I would definitely look at the daily and the weekly and put this on there and look at the daily and the weekly and look at the whatever your stocks you're holding. Have a look once a week and make sure that everything is still okay. And make sure that we're continuing to move up. Wait, my cursor is just okay. Make sure that we're continuing move up. And if we're doing something like this, you need to be aware of that and what that means for your position. And then if the wave is crossing down below the tunnel, that's telling me that something's not right. This is no longer the breakout 4 trade to move higher. And it could be that we do move higher, but we only move up, let's say 38.2% or 50%, and then we come down again. Okay, so these are the things that you have to look for. So these are the Wavy Tunnel Pro trades. Now with our system, we also have the semaphores, and we also have the bungees, which tell a lot. And we also have automatic trend line breaks. So automatic trend lines show up on our charts. We don't have, this is wealth charts. We don't have the automatic trend lines on wealth charts. We have them on MT4, and we have them on the platforms, not on wealth charts and not on TradingView, but we have them on all the others. So I just follow very specific criteria in my Wavy Tunnel strategy to evaluate if I want to trade a specific setup or not. I remove subjectivity with the specific criteria. Okay. The greater the objectivity, the fewer the emotions. The Wavy Tunnel Pro strategy has what I've always been looking for, namely clear, defined, understandable, and consistent rules that are not complicated to learn. Even people who have never had anything to do with the stock market can learn these strategies quickly. Yeah, I mean, every one of the Wavy Tunnel Pro strategies has a trade plan. So the PW fill the gap have trade plans, the breakout 3, the breakout 1, the breakout 4, they all have, and the sideways market, they all have trade plans. And it's really important when you're trading to have a trade plan. That means that if you see a trade based on whatever system you're using, if you see a trade, make a trade plan. A trade plan means that you have an entry point. So what is your trigger? And then it has your exit strategy. And an exit strategy includes your stop loss. Where do I get out if I'm wrong? And your profit targets. With the Wavy Tunnel Pro, I teach a 3-position strategy called the 3 profiteers, and it's based on the Fibonacci. It's setting up 3 different profit levels from where the ultimate target is, so that you are taking profits along the way, because you know as well as I do that it's so easy to give back profits. I mean, how many of you take positions and think that it's buy something and it's going to the moon, and it fails and it comes down, and not only does it go below your entry point, but it continues to go down. So that's why we want to take profits along the way. Very, very important. And I'm not sure if anybody is, I'm going to open up the chat to see if anybody is asking any questions. Okay, I don't see anything. But feel free to ask questions if you have any. This is the trading system that has worked for me over the past 30 years and counting. But this is not about me, it's about you. And the Wavy Tunnel Pro is a solid master's in trading education for all asset classes, instruments, and time frames. This is specifically for you, new traders and experienced traders alike. As I mentioned, we had our accelerated training last week, and all of the sessions were wonderful. The students loved it, and they're all recorded and in the members area. And all of the coursework is yours. Like if you join the on-demand training, it's all there for you. And what does it include? The first section is the Elliott Wave series and Fibonacci. This is the market map you need to kickstart your analysis, get a good sense of where the market is going, and more importantly, do a top-down approach to get market context. And then the second is the Wavy Tunnel Pro strategy. My personal portfolio of genuine trend and end of trend setups, which I shared with you today, the set of indicators that refine your analysis, and the strategy to trade them in every market cycle. So what I like to say is that the Wavy Tunnel allows you to count the waves without being an Elliott Wave master. And then section 3 is harmonics. Harmonics is the icing on the cake to filter the most valuable trading gems in the markets. When Elliott, Fibonacci, and harmonics converge, we gain more confidence as traders to trigger the trade and find profit targets. So when we're looking for that point T and we see a harmonic pattern that fits right in with our analysis, that's just the icing on the cake. Or when we're finding that end of C for our breakout 4 trade and we see that harmonic pattern that's saying the same thing, that's icing on the cake. And then for we have the starter, the pro, and the platinum. For the pro and the platinum, we have price action trading. So this in course includes institutional candlestick classification, a segment on market structure, trade entry patterns, and Wavy Tunnel Pro trade setups with price action alignment. Where you sign up is wavytunnelpro.com. Okay. Who was this for? For new traders and experienced traders. For new traders, minimize the expensive trial and error most novice traders experience when they get introduced to the markets. And this strategic program will put you light years ahead of most of the pseudo traders, the gamblers out there, and like all the, trading the meme stocks and the volatility, and will dramatically increase your chance of success and staying there over the long term. What I like to say is that when you can read the chart and really read it and see the markets unfold as you've learned about the market cycles, it just provides such clarity for traders. And that's the feedback that I'm getting. It's not just me saying that. Every single person in the training program last week said that they're seeing the trades speak to them, jump out at them, because everything is in a new light for them. It's not random anymore. It's not chaos anymore. It's organized chaos, organized randomness. And that's a good thing. And for experienced traders, this program is perfect for trading pros who want to continue improving their skills. The Wavy Tunnel Pro adds a robust strategic foundation to your trading business and a new lens to see trades. I'm sure you know only one little adjustment to your trading can mean the difference, so this could be yours. So no matter your preferred asset class, the Wavy Tunnel Pro system will be the secret behind your success, and as it has been for me over a 30+ year career. And for day and swing traders, it's easy to get in the overtrade trap, not to mention trading tempting setups that often fail. what you will learn in the Wavy Tunnel Pro program will help you trade selectively. Yeah, we don't want to take all of the trades that we see. We don't. We want to be able to not trade sometimes and not trade some days if the markets are unclear, or look for a different instrument to trade. And sometimes it's not easy, because when you're first starting to trade, traders get very excited about being in the markets. Tell me about it. That was me when I first started trading at JP Morgan on Wall Street. I would trade during the day for the bank, and then I had my little, this was back in the 80s, I would have my little Reuters machine where I could see the prices no matter where I was trading Forex, and I would then go home and follow the markets. I wasn't even trading, but it was just so, well, interesting that even I got caught up in the whole frenzy of the market moves and the volatility. And for position traders and long-term investors, if you're looking for a system to manage your retirement portfolio over the medium term, there's no better system than the Wavy Tunnel Pro. I can assure you that after you learn the system, you will never approach any investment opportunity the same way. Now, I've already given you the moving averages, but you can take it a bit further. Again, these are the Wavy Tunnel Pro platforms: MetaTrader 4, NinjaTrader, MotiveWave, TradeStation. These all have trend line breaks on them, and the scanners. I didn't even show you the scanners. We have a wonderful scanner scanning for all of the trades that I've shown you. And then we have the Wavy Tunnel Pro dashboard scanner, which is really the state-of-the-art scanner that we've created just on a website, scanning over almost 5,000 instruments. And then the indicator suite, which you saw, is on Wealth Charts and TradingView. So again, if you're wondering whether this approach is really making waves in the trading world, I'm proud to share that it's been recognized by not just one, but two major publications. USA Today featured the Wavy Tunnel Pro dashboard as a consolidated hub for market scanning, strategy training, and trade plans and more. And the International Business Times highlighted my journey and the unique missing link I've developed to help traders move from confusion to confidence. So being featured in both publications reinforces what I've been showing you today. This program isn't just another program. It's a solution that transforms how traders approach the markets. So here's my message to you today: clarity, confidence, consistency. That's what the Wavy Tunnel Pro delivers. If you're ready to stop guessing and start trading with structure, join me at wavytunnelpro.com. Your 3-step playbook to consistency starts now. And I want to thank you so much for being here live. Your next step is simple. Scan the QR code or head over to wavytunnelpro.com to take your seat in the accelerated training on-demand program, which was last week, and all of the videos are hot off the press. So let's just wrap up. Elliott Waves gives us the map, and the Wavy Tunnel Pro gives us the compass. Together, they turn market cycles into clear, actionable opportunities, helping you trade every trend and correction with clarity and confidence. If you have any questions, you can always reach me directly at jody@fxtradersedge.com. I hope you enjoyed this presentation, and I look forward to seeing you in the training. Thank you so much for having me.
That was great. We do have one question. Stephen asked, could you mention again the different moving averages you're using on the charts?
Sure. The 12 EMA, the 34 EMA on the high, low, and the close, and the 144 and the 169 EMAs.
Thank you so much, Jody. We appreciate it.
Thank you. Bye, everybody.
apologize. I was on mute. Thank you, Jody, for an eye-opening look at how to read the market like a map. Traders, we placed a special link in the chat with more details about Jody's programs. Be sure to check it out. And if you want to contact Jody, contact her at jody@fxtradersedge.com. Next, we have the legendary Price Headley, Hall of Fame trader and founder of BigTrends.com. He's revealing his exact options strategy on the QQQs that's been hitting 100% gains plus in just a day using price action and %R patterns. I totally believe it because I've been watching the Qs and there's been a lot of volatility. So let's dive in with Price. Thanks for being here, Price.
Thank you, Anthony. So great to be with you as always. Hope all is well with you.
Everything's good. I apologize for the slight delay there. I was on mute.
Problem. I just want to make sure I've got the ability to share my screen here. Let's make sure I'm not missing it here. You've got me as a panelist, so let's see if you can make me a presenter. Yes. There you go. Thank you. There we go. Thank you. Okay, so let me know you can see my screen okay?
Yes, I can see it.
Awesome. Let's go. All right. Thank you, Anthony. Good morning, everybody. Price Headley here. Thrilled to be with you as we talk. Like Anthony said, the Qs have been moving a lot. Why? Well, NVIDIA just crossed a $5 trillion market valuation yesterday. I mean, it's been amazing, the AI trade, right? Everybody's talking about an AI bubble, right? What is AI? It's artificial intelligence. If you've been under a rock, bottom line is that the Qs give you one of the best ways to get that exposure. And we trade the upside and the downside, but let's face it, we've been trading a lot of upside recently. But we're flexible, right? If conditions change, if the bubble bursts, we're going to trade on the downside too. But what I love about the Qs is multiple things, but one thing is that you get the diversification of not just trading the one stock. You know, if you're in Meta today and Meta gaps down, and you think, well, sure, the Qs are going to be affected by that. Meta, parent company of Facebook, down on earnings, you know, look like good earnings, right? But they're talking about spending a lot of money, and maybe Wall Street's starting to wake up to capital expenditures are costs, and the question is, are these costs going to get realized? We can hypothesize all day about what ifs and what could happen, what might happen, what should happen, but I'm going to break through all that and say, just follow the chart. That's what we're going to talk about today. Lean on the chart, focus on that. Don't get stuck on the noise of what you're hearing on the news, of what other people are telling you. The chart never lies. The chart shows you what is happening in terms of the money flow, which, let's face it, you and I don't drive the markets, the institutions drive the markets. It's our job to get in tune with that, right? So that's what I want to do, tune you up and tune you in to how we can help you to look for options that can double in a day or sometimes two. But lately, we've been seeing a lot of quick strikes, and so we're going to focus on how you can now focus on what's coming into the best seasonal time of the year. The last couple of months of the end of the year and the first month of the new year is typically the best 3 months of the market. Everybody knows that you hear about sell in May and go away. If you did that, that would have been a big mistake. The markets have ripped over the last 6 months post tariffs, right? But we think there's even more potential positives to come with the positive seasonality just kicking in, where the markets make typically even more money in the November 1st through end of April period. So we're going to give you a playbook here on how to take advantage of this into the end of the year and, of course, well beyond into 2026. And looking forward here, we're going to talk about it, but let's remind you that as we get things started, the information that I share with you in today's presentation is based on our proprietary research, and it's intended for illustrative purposes only. What we talk about here should not be considered specific advisory recommendations. As you know, stock and options trading have large potential rewards, but let's face it, they also have large potential risk, right? You could lose what you put into any options trade. So we got to figure out how to manage that. We're going to show you how we manage it and how you can manage each and every QQQ trade going forward. And this quick strike without ever being a day trade. Now, the past performance, of course, that we talk about of any trade system method is not necessarily indicative of its future results. We all know future results are going to vary, sometimes better or worse than what was expected, but the key is you've got to be consistent in your execution. So that's really where I think we simplify a lot of things for our big trends traders to just make it clear cut when to get in, when to get out. So your terms of use on our bigtrends.com homepage for more information here. Now, like I said, a lot of reasons to love the Qs and the QQQ options. One of the other reasons I love QQQ options is they actually have every single day options expirations. Now, we're not going to trade them ever on the last day of the options life. We're going to be in and out before that final day hits. You never have to sweat holding it too close to an expiration here. you hear a lot of people talk about zero DTE, 0 days expiration. We're going to go further out than that, but not too much further out, but just a few days out, and then talk about how the sweet spot of where we want to hold these and why we always want to be out the afternoon before an expiration day. We're going to give you a bunch of success stories when it works, also when it doesn't, how you manage that. We call this strategy QQQ Options Playbook because, well, I can't give everything away here for free. When you get signed up with a super special trial I've got for you as a Traders Corner attendee today, you get the ability to learn the system in depth once you become a paid subscriber. And I'm a big believer in having a little skin in the game to get you started. So, bottom line is that we want to open you up to why this is a great vehicle to trade. If you don't know me, I've been trading options for now 36 years and counting. I caught the trading bug while I was a student at Duke University, and upon graduating from Duke, went on to really see the power of options and ultimately founded BigTrends.com. Coming up on 26 years ago, November of '99 was our launch date when I got the world aware of BigTrends.com. And it's always been about finding those bigger moves, not trying to get little tiny pick up nickels and dimes in front of the bulldozer. We want to be riding the bulldozer. We don't want to get run over by it. We want to be riding it to the next big move. It's all systematic here. So nothing I do is seat of the pants. Nothing is my own opinion. It's got to be a setup and a pattern that works. If it's not a pattern that has worked for us over time, we don't trade it, right? So you got to know when to trade, also when not to trade. Winning trade examples from this past week. I mean, this is pretty amazing. Obviously, you see what the market has been doing. We've been ripping to the upside. This is the QQQs on NASDAQ 100 vehicle that, like I said, tracks NVIDIA, Apple, Microsoft, Meta, Tesla. Pick your favorite tech stock, and it's probably in the Qs, right? Amazon, Google, right? Also in the news here. But bottom line is that see the Qs gapping up day after day after day this past week. Monster move, right? We had the powerful first gap on the CPI news last Friday, right? This is showing you then the follow through gap that we had going back here on Monday, right? So we're just looking at stuff that's just been now happening over the past week's worth of trading. And you can see we recommended to buy into the October 30th options that are going to expire at the end of today. We're already long gone in this thing, right? We got in on Monday afternoon. We like to get into these trades, by the way, in the final about half hour of the options day, which for the Qs have daily options expirations. They also have options that trade all the way until 4:15 p.m. Eastern New York Wall Street time. And so we can get into these right near the end of a day. Why do we wait for the end of the day? A couple different reasons. We want to make sure the daily chart is setting up for the right configuration. We're going to talk a little bit more about why we got into this, but also we want to know that when we get subscribers in near the end of a session, the earliest we can get out is the next morning. That means we will never have a day trade with this strategy. Now, I don't know if you saw the news recently that they're talking about turning the $25,000 pattern day trader rule down into a $2,000 minimum account, which will be huge if that goes through for options traders to do a lot of day trading strategies with very little capital, so that you don't have to sweat getting an account locked up. We never have to worry about that here because we're never going to hold it on the same day for any options trade we make on the Qs. Now, so what do we call out? We said we want to buy the 3 days till expiration. On a Monday afternoon, we're buying the Thursday afternoon expiration. So we always go 3 days till expiration on this strategy. We will never hold it for more than 2 trading days. So the latest we could have held it would have been yesterday afternoon, the 29th in the afternoon, right before the close yesterday. Now, we didn't hold it that long. You can see we were trading on the Qs around 627.5. And so you can see 628. We're buying the slightly out of the money 630 strike calls. You say, oh, that's all time risk. That is true. If we sat there passively and did nothing and it went nowhere, we could be risking, or went against us, we could be risking all of our investment, right? We've got to get over 630 by the expiration at the end of the day today. Well, as you can see here, we're well in front of that, right? So the goal of this is the Qs are now back, by the way, down about 5 points a day to 631. Good thing we cashed it out on Tuesday's action. You can see it ran up from 630, got up to 634.5, almost 635. Of course, we had the 630 strike calls. And notice, a 630 call at 635 is worth $5. We bought it for $375. How are we able to sell it for $7.5? because it's still holding a healthy amount of time value. When it's almost 5 points in the money, it's still holding about a third of its premium is time on that Tuesday action before the Thursday, today's expiration, right? So that's the power of selling when we get to a double within a day or two. Now, we're not always going to get there, right? So we're going to also have a plan on how we get rid of it if it's not moving up to our double target. So a couple different plans. One, we do have a price stop on all of our QQQ trades at a 50% loss. Right, we're targeting 100% gains, 50% losses, but also we have what's called a time stop, which means that if we gave it the 2 days till yesterday afternoon and didn't get to either of those stopper targets, then we would time stop it out. Win, lose, or draw yesterday afternoon would be our latest window to hold the trade. We would never hold it into the expiration day. Okay, so we've got multiple plans here. Now, what are we looking at the bottom indicator here? You may have heard of the percent R indicator, Larry Williams percent range indicator. Now, I often, tongue-in-cheek, call percent R percent T when it gets into the top chunk of its readings. You can see that generally speaking, percent R has been staying mostly above the 80th percentile, right? And the only time we really pulled back under there was this when the Trump-China tariff threat came out a couple of Fridays back, now 3 Fridays back from tomorrow. But basically, that's when the market plunged that one day where the Trump threatened a 100% tariff increase on China. And of course, now we've been working that off as it looks like we're going to come up with something significantly less, right? But the idea here is that we want to take advantage of that strength. We don't want to get left behind. So right away, if you have a belief that, quote, you should never buy a quote unquote overbought market, you would have missed most of this uptrend over the last 6 months, right? Because it's been generally overbought. That's actually a good thing in our view on a day-to-day basis, that strength begets more strength, right? We want to still also see that we've got positive gaps. You can see big gaps happening here recently, right? The big gap that happened from Thursday into Friday, that's the CPI data right there on the last Friday gap up. Then of course the gap up Monday was talk of improvement on the China tariff negotiations. And you can see we also closed up near the highs as well. So we want to not just see a gap up, we want to see it closing up as well, right? So we're focusing more on the percent R pattern combined with that positive day-to-day price action is telling us that we should get in there. Notice we didn't try to be a hero and buy the gap down or the shot down day on the China fears, that big red candle. We didn't try to buy that. Why? Because notice over the next week even, you're going through a lot of chop here, a lot of digestion, maybe indigestion, right? But digesting some of that sell-off and kind of rebuilding some base, rebuilding some support, right? Re-engaging the bulls. And it took a week or so for things, even a couple weeks almost, for things to really start to get ready to heat up. So we rang the register for a double. Now, if we invested $1,000 into every QQQ options trade, that's a typical starter amount that we'll see a lot of people come in with. Notice we paid $375 to control each contract controls 100 shares of the Qs, right? Which means the Qs are trading about 628, 62,500 plus. It would cost us to buy 100 shares of the Qs. We're controlling that almost 63 grand worth of stock for just $375. So if you invested $1,000 worth, it gets you 2 contracts, and for $750, your 2 contracts are sold for $750 a piece, or $1,500 exit total. So you make $750 before your commissions, which shouldn't cost you more than $2 in and $2 out, $4 round trip, right? So it's, in my 36 years of options trading experience, there's never been a better time than right now to keep the vast majority of what you make. Commissions, broker price wars have brought commissions way down. So it's a great time to be an options trader. You keep the vast majority of what you earn. Now, we're gonna show you a bunch more examples here, but the idea, here's another one that we got into last Friday after the CPI gap up. So the consumer price index a little better than expected, not as much inflation, kind of cemented that the Fed was likely to cut by the quarter point, which they announced yesterday afternoon that they did indeed cut by another quarter point on interest rates. And then they kind of hinted that they may do some in December. The market is expecting them to do another 25 basis point, quarter point cut in mid-December at their next meeting. Okay, so but the point is that kind of cemented it for this cut last Friday. So we were buying last Friday afternoon after that gap up You say, hey, gee, things are overbought. We're in about the 95th percentile in percent range. What does percent range mean, by the way? It means where's the price action been trading high to low, typically over about the last month or more in this look back period. We give you the specific settings when you become a subscriber, but over a month actually. And you're saying, okay, guess what? We're closing near the highs. Guess what? We're not at the high, so that's why we're not at 100%. If we were closing right on the high on a new high bar, that would be 100%. That would be the maximum reading. We like a positive scale, by the way. I know Larry Williams, he's a great trading innovator and educator and trader. He uses a negative scale. I just never quite understood that. So you can see, like on this example here, the close of percent R as of the close on Monday was right near the highs. We closed at 99.75% on the percent R, just a couple ticks off the high of that look back period, right? And you said, gee, how can you buy calls into the highest possible reading it can make? Because the range becomes a trend when you're making, you can see it even visual in the chart, right? You're making higher lows, higher highs. That's the definition of what? An uptrend, right? So percent R, percent range turns into percent T, percent trend through these super strong phases. We take advantage of that. That's one of the, I guess, big innovations that Big Trends has really championed over a number of years. If you've ever heard me talk in recent years about philosophies that get people in trouble or get people missing out on opportunity, and one of the big ones here is trading the trend. Overbought should not discourage you. Okay, so we made a double on that one too. Bought it last Friday, sold it on Monday's gap up. You can see we bought it for $348 a piece. Again, that would only get us 2 contracts for about $700, $696 in. We got $696 a contract back out, and that's made $348 contract times 2, or $696 in profit minus the $4 round trip commission, thereabouts, or less, right? Because some brokers are not even charging a closing commission now. So it's a great time to be taking advantage of these. These are only options purchases, okay? So Meyer says, are we looking for declines in the market tomorrow into an expiration? I mean, tomorrow's an end of month expiration, right? It's the last Friday of the month. Every single Friday, a lot of stocks have weekly options that expire. But what we look at, Meyer, is we're looking at daily expirations for the Qs, and we don't sweat an end of month situation. There's a lot of positive seasonality going on. If you think about it, typically it's also not just the end of the month, it's also the end of a lot of mutual funds calendar years, fiscal years, or fiscal years, I should say, where basically they will oftentimes want to show how they were invested as of the end of October. Don't ask me why, but it's where they're at, not the end of December. And so they want to show that they're invested. Guess what? If anything, that's leading to more buying power coming into that, because they want to, many institutions are holding too much cash. As you know, the yield on cash is going down as the Fed cuts rates. So bottom line is that where's that money going to go? Likely into stocks and vehicles like the NASDAQ, right? So point being, there's a lot of ways to take advantage of it, but we don't want to get overreacted to any one day, right? We're looking at the bigger trends here and taking advantage of that. How about from the past week, right? So we're talking about fresh examples, right? You can see this one goes back to, we were even trading it in front of the CPI report. Why would we do that? Why would we say, well, guess what? With the government shutdown all this month, the government has been quote unquote shut down, right? And the market, you would have thought that's terrible news for the market. The market keeps on ripping higher. The CPI is one of the few actual government data reports that we've had. And so when it came in better than expected, it just shows you that all of our system was saying, yes, this is an uptrend. We closed very positively, right? We opened a little bit lower on Thursday, and then we closed back up here, right? So this was a really good reversal. We're finishing near 611. We're buying the point out of the money 612 calls. We, again, think of it, 3 days till expiration. So you would count out on the afternoon last Thursday, you would count out Friday's action on the 24th, Monday's action on the 27th. The third day would be Tuesday the 28th. So we're buying the October 28th expirations, every single day being an expiration opportunity, but we're not going to hold it for more than 2 days. As you can see, we didn't have to hold it that long. We got the pop up on Friday. We rang the register. You see, all these have been trading around just under $4. We've been getting just a couple contracts a piece these last few trades. That's fine. We've been knocking down $700, $750 type of profits multiple times over the past week, right? We're not always going to get this many opportunities in a week, but it's been a golden window to take advantage of this type of strength and not get left behind, right? I see so many people who are sitting on the sidelines holding too much cash and going, well, now do I chase the market here? Do I buy and hold here? I'm not advocating that. I'm advocating just hopping in and hopping out reasonably quickly over 1 or 2 trading days. So you're not going to be buying and holding. You're going to be looking to kind of quick strike it from one day to the next day or two. Okay, so $750 to $4 profit there. Got tons of examples, thankfully, because we've been firing away. This is going back to the 17th, which is Friday before last. So that was the official monthly expiration, the 3rd Friday of the month. We didn't care about that. We're going out 3 more trading days to October 22nd, the following Wednesday. You can see hitting in there on a Friday. We're trading near 604. We're buying about 3 points out of the money, 607 calls. How do we determine our strike prices? We look back at recent QQQ volatility through something called the average true range. The average true range is basically measuring not just the high-low ranges averaged out over the last month or so, but also looking at any gaps, right? So if you get gaps, that will also factor. That's important with the recent gaps up, that will factor in the gaps as well. So that will adjust and say, actually, we're getting more total price movement when you add in the gaps in addition to the high-low ranges. So point being that we want to adjust that then for the recent volatility. So saying, okay, we should buy this option. I expect that's an option that can double from 391. It didn't. Okay. So what do you do when it doesn't double? Okay. We paid 391. We about 604. We're thinking it's probably going to go up to beyond maybe into the 615-ish, 614, 615 range. It doesn't do that. It only gets to about 612 or 612 and a half over the next 2 days, right? We're in day 1, a full day in, and then day 2. By the end of day 2, we have to get out. So that afternoon, we're finishing back around 611, 610.77 officially. You can see we've got a 607 call. We bought it near 604, right? So we've been right by about 1% on the Qs, but we didn't get the kind of kick that we were expecting. And so end of day 2, you'd never hold into the expiration. Guess what would have happened if you had held into the expiration? You'd be facing a wipeout by the next, on the end of day 3 with the pullback that it had on that expiration day. And so your 37% could have turned into minus 100% if you were passive and sitting there doing nothing. That's what you don't want to do. You've got to be proactive. The time stop rule saved us over 130 percentage points because by the end of the day, the next day, you'd be sitting on nothing, right? This is important. This is why we never leave subscribers hanging. We always call out when to get in, when to get out. We send out a real-time email alert, but you can also get it as, and we recommend getting it as a smartphone alert to your mobile phone device too, so you can get that too. So that way you never get left hanging. You always know where to stand. So in this case, you can see that only resulted in a $294 profit off of a couple contracts in and back out 2 days later. But that's the power of not holding it into that last day of the options life. We'll always have a day left when we get out of these. Now, you can see our QQQ options playbook strategy will typically hold 1 or 2 trading days, but never have a day trade, right? Because we're getting in late in the day. If we had a new trade today, it would come out typically today around 3:30 to 3:45 p.m. I'd say more like 3:45 p.m. Eastern is kind of what we look for. You say, man, that's cutting it close to the end of the day. But remember, they trade until 4:15. They don't trade till 4. They trade till 4:15 Eastern. So you got at least 30 minutes to get into these trades typically. Now, we're using several different %R setups here, not just the one setup I've been showing you on the strong bullish trend, the %T, %trend kind of conversion there with the super strength, but also we will look at a couple of other patterns, one that's a bounce off of a pullback on the bullish side, and also one that's a super strong bear trend like we had back in March and April. So so you can see, what are we doing? We're just buying calls and we're betting on the upside. We're just buying puts and we're betting on the downside, always using 3 days till expiration, right? So if we were getting in today, I'm not saying we will this afternoon, but if we were getting in today, we'd count out tomorrow, Friday, Monday, and then Tuesday would be the Tuesday expiration. It'd be coming up there on, what is that, November the 4th. If we're getting in today, we may or may not. So let's look at some more examples, but remind you that we're only focusing on the daily charts. So notice we're saying we could get in between 3:40 and 4 o'clock. I mean, we don't usually want to get sent out at 4. That would only give you 15 minutes. But if we think something's too close to call, but then it does signal in the final minutes of the day, obviously we don't want to miss a signal. So if we've got a signal, we'll fire it out to your real-time email, and you can get it as a text alert. We recommend that. And so that saves you time. It also saves us a lot of time, right? We're not looking at the market on this strategy all day. Once we're in the trade, of course, we're putting out the alerts to say, here's your stop, here's your target, using the 3 days till expiration entry point and time frame. So this will give us plenty of trading opportunities, plenty of profit opportunities, and also manageable risk, right? You always want to have your risk well managed on each and every trade you do. Now, this gives you a ton of bang for your buck. As I said, you'd be investing, if you bought 100 shares of the Qs right now, it costs you about 63 grand. You're controlling that 63 grand on average for about 330 some odd dollars per contract, right? 332 on average going back to the beginning of 2023 over almost 3 years now of look back. So, you know, that's on average going to get you about 3 contracts on $1,000 invested. Sometimes, like we showed you more recently, just 2 contracts. That's okay. It's about never overcommitting your capital in any one trade. I would much rather new subscribers start small and then build coming in. But even as you build your confidence, understand the system, how winners work, how losers work, how time stops work, win, lose, or draw, how we hop out, that the goal is to never get too high or too low. Never not take trades because you don't like the setup. Never load up on one after some recent winners say these guys are hot. No, you've got to be steady on your execution. If you are consistent on your capital allocation, I assure you it's going to make you a more consistent trader and ultimately a more confident trader, because you're not going to get too high or low compared to those that are chasing in or bailing out on the next one, kind of picking and choosing. We don't want any of that inconsistency. We'll always get out after 2 trading days at that 3:40 p.m. exit time if we haven't gotten our price target or our price stop before then. So we never want to hold for that final day of volatility and that final day of time risk, right? That's what is a double whammy you don't want on the last day of an options life. So a lot of people preaching zero day DTE, 0 days to expiration as a path to wealth. I'm not so confident in that. I'd rather focus several days out. It's still an aggressive strategy, right? But we're not taking the hyper aggression in the final day. So let's look at the history, reminding you, of course, looking backwards, that past performance never guarantees future results. We all know future results will vary. It could be better than this at times and worse than this at times. And we expect that variance, but what we don't want to vary on is our consistent execution. You know that we'll always call out our trades for subscribers on the way in, and more importantly, we'll always tell you when to get out. Now, this assumes that you started with a $25,000 model portfolio and you never committed more than $5,000 per trade. So even as it grew, you kept it at the fixed $5,000 maximum per trade. You can divide by, if you did 2,500 a trade, you can about divide by half. If you did $1,000 a trade, divide by 5, gives you a similar ballpark, but it won't be exact, right? Because sometimes with a smaller account, you'll get less of your total allocation. So you got to keep that in mind. You can see the gross return, $136,000 gross profit. That's before commissions, before subscription investment, 545% gross return on a $25,000 model portfolio, growing to something in the neighborhood of about 161,000 before commission and before subscription investment. So it's scalable, right? You can start with fewer contracts. You can ultimately trade more. The Qs are so liquid, it's easy to get. We see hundreds of thousands of contracts a lot of times in these short-term QQQ last few days of an options life setups here, right? Because you're getting such tremendous leverage. It attracts a lot of players. It's never you against the market maker, which is very important in my book as well. So point of all this is that, okay, there's your smaller allocation, right? It's not quite as good. It's only 479% gross return over the last less than 3 years, since the beginning of 2023 in both those examples. Reminding, past performance, again, never guarantees future results. But this assumes you start with a $5,000 portfolio, grow to almost $29,000, $28,991 gross value for $23,991 gross profit, gross before commissions, before subscription investment, never going above the $1,000 per trade allocation. Why do we not compound that? Because if you compound your gains after winners, you're almost setting yourself up that you'll always be putting in the most per trade right into a drawdown, right after a run up. And so we want to stabilize that. We want to be just consistent and slow and steady wins the race in your capital allocations. You can see that's your gross pop from $5,000 starter portfolio in less than 3 years up to $28,991 gross before commissions, before subscription investment. Again, past performance does not guarantee future results. Future results will vary. What doesn't vary is our commitment to follow each and every trade signal. So like I said, 3 different setup patterns here. So we're looking at potentially 8 different categories that price action and percent R readings could fall into together. Only 3 of those 8 are tradable to us, which is why we'll end up trading about 3/8 of the time, not quite half of the trading days on average. We'd expect something like, you know, in the neighborhood of about 8 trades a month, give or take, in this system. We look at history as a guide. It's not a guarantee, but it's a guide to us. We call it the profit factor. It's not what we call it. That's a common term for systems traders. Profit factor is just 2 key metrics. It's not just your win percentage, which is half of the equation. The other half is how big you win compared to how hopefully smaller you lose. If you win bigger, lose smaller, that can make up for a lot of concerns about win rate, right? You can win twice as big as you lose and even have a 50-50 win rate, still have a pretty healthy overall result over time. But the goal is to be consistent on your execution, right? So these windows of opportunity is what we're looking for. We mentioned that big down day on the China news. We got a kind of a retest of sorts a couple days later on that following Tuesday, October 14th, and we liked the finish there. And we said, okay, we like this entry point here right near the end of the day. We're about 598. We're buying a couple points out of the money to 600 strike calls, okay? So when you look at that, you say, okay, well, we got in there at $4.30 a contract, $430 per contract. If you're putting $1,000 in, that gets you 2 contracts in for $860. The next day we gap up, trade even higher up to about 607 or so at the highs. We sell it out with the time value still left in these October 17th expirations. We're out on October 15th at 860 for the double, right? So you put in 860, you turn it into $1,720 and make 860 in profit before your $4 of commission in this case. So again, assuming you never committed more than $1,000. At that point, it could keep going or it could not. As we showed you, it actually settled back down for another couple of days, but you get the idea. Back into September, markets had a little pullback. We like that we don't like these kind of weakening patterns with these big red candles, so we wouldn't try to be a hero and buy those dips usually. You can see with our super strong %R readings up in the top 20% above the 80th percentile here, you can see we have a nice positive finish back up near 593.5. We buy 595 calls going out 3 days expiration. In this case, you see we held it to 2 days, 1 and 2 days, and the high on day 2 is up to near 602. That means those options are worth near 7. We're out at 680, $680 in profit on the 2 contracts. So you could buy, can't quite get 3 on $1,000 there. Close, but not quite. So just 2 contracts for 680 turns into a $680 profit. Look at how steady that September uptrend was. September is supposed to be a weak month, right? And you can see it just keeps ripping to the upside. We hop in to those 596 calls, 302 per contract. That means we could get 3 contracts on a $1,000 commitment, 3 contracts, $906 in. And you see 2 days later, it pops to 602. We're out $6 intrinsic on those options. We're out at 605 with a day of time left out at the double, take down the 900 plus in profit for that 3 contracts in and out in 2 trading days, right? That included the weekend, right? So we're in on a Thursday, we're out on the Monday before the Tuesday expiration. So we'll always guide you through these. Now here's one where it's coming off of a pullback pattern. This is our second pattern. This was an August pullback. You say, are you guys crazy buying this kind of a dip and weakness? Well, our rule is once we get down around the 40th percentile or less, as long as it's not too low, if it's breaking down too much like in March and April, that would not be something we'd want to buy a dip on. That'd be too weak of a market. But this is kind of a trading range dip, gets under the 40th percentile, has some stabilization, and you see closes a little bit lower. We are about 563, but we said this is a spot where it should bounce. It doesn't always, but it does enough times that we feel good about it. We buy a few points out of the money to 567 calls for $284 a piece. We're just trying to double these, folks. We never try to go for more than a double. We're always going to guide you, okay, if it hits our double, great. If it hits our 50% price stop, we're out. Or 2 days later, time stops our way out as well. So we bought 3 days out back on that Thursday, August 21st. The next day, it rips all the way up to about 574. We're out before that high at 568 for the 3 contracts in, 3 contracts back out, $852 profit the next trading day, doubler. How do losers look? This is one that should have worked and it didn't, okay? It happens, right? Woulda, coulda, shoulda. You know, we don't want that as our strategy, right? But the idea here is that, look, this is a nice retracement. It's a positive reversal. Should rally off of this little support level here, right? So we buy in there on that August 18th entry. We buy the up around 577. We buy the at the money 577 calls, $291 a piece. Get us 3 contracts in. the next day it opens lower and just trades lower all day on that dropping market there on that Tuesday. Okay, we're going to hit our 50% stop on something like that. Okay, we do. We're down. You can see from 291 to 145. Yeah, we're losing about $156 a contract there, $146 a contract, excuse me. 146 times 3 contracts in. So you see, we're losing nearly $450 on that trade. It happens, right? So you've got to know it's going to happen and know whether it's a price stop or a time stop. Time stops can be a winner or a loser 2 days later if we haven't gotten a price stop or a target. But in this case, yeah, you got the price stop, you hit the 50% loss. And the idea is that, okay, fine, I can lose up to $500 on $1,000 invested on a 50% stop. I can make up to $1,000 of profit on a doubler that goes from 1,000 to 2, right? So the idea is that, you know, that's where we have the better upside compared to the risk. Some more examples. This is right before the July 4th holiday, right? This was back on July the 2nd. We had, of course, the markets were closed on July 4th, so we counted out 3 trading days, the Friday, the 3rd, and into the Tuesday and Wednesday, and Monday and Tuesday, 7th and 8th. We're buying the July 8th options back on July 2nd. Just 3 trading days later, we see we got the gap up from the 2nd to the 3rd, right? That's the power of kind of waiting to catch this positive momentum day that we can finish higher near the highs there and buy near that close near 551. We're buying the 550 calls, paying 407. So of course that would get us 2 contracts on $1,000 in for $814 total. 407 times 2. Next day it gaps from 551, opens about 553 and change, trades to 557, and we're out for 814 because we still have a couple days of time left, and take the $814 of profit. Take the bird in the hand of the double in the whole position and move back to the sidelines. Here's a great kind of what I call the flush pattern. I love these kind of patterns where you see that the prior day's low here. You'll often see traders that are newer set their stop just under the prior day's low if they're buying a call or buying the Qs, right? And so the idea is that you put a stop underneath that. Those people are getting flushed out on the X there that next trading day. And then they're left on the sidelines at a loss as it then flips up near the end of the day to near the highs of the day. Now we've got the positive momentum. That's why we wait. That's why we don't overreact intraday. We wait for the late day action. A lot of times the first hour of the trading day is called the amateur hour, where a lot of people make those opening mistakes right off the open. And institutions are often waiting to see what the tone is into the end of the day as they look to keep adding capital to something that's working. In this case, big reversal back up right in front of the gap. We get in before the gap. Next morning it gaps up. We're ringing the register for the doubler and making the $860 in profit on the 2 contracts at 430 a piece back in June. You can see tariff fears hit this market back here on a Friday. I remember it well. Talk about a European 50% tariff, gap down initially, but look at the positive reversal back up, right? We like that positive momentum on a Friday. We're trading here just under 510. We're buying the 511 calls. These options were a little more expensive because the volatilities were up because of the April sell-off that was still in our data, looking back over the last month or more. So you can see here that in this case, we just bought 1 contract for $553 on $1,000, right? And so you see the next Monday, we get talk of a good China negotiations on tariffs. The market gaps up, trades up here to like 521. And we're ringing the register on the 511 calls for 1106. We only bought 1 contract, so only made 553. We'll take it and move on, right? So you don't have to get a full allocation to still be executing your system. The beauty is you don't have to scan for hundreds of stocks. You don't have to pick 1 stock out of a haystack, right? We don't want to do that. We want to trade the whole QQQ and say we'll get plenty of opportunities. And you look back at this is actually back pre-election. Now it's coming up on a year's anniversary of these back-to-back trades here. This was the first setup was an oversold setup right in front of the election. There's our little pullback into support there near 486. We bought the 491 calls, 401 a piece, 2 contracts in for $802. Next day, sorry, go back to that. Next day, it rings the register for a double in front of the election. Then you get the election gap, right? So the election gap happens on that big E, that Tuesday night into Wednesday morning. You know, when the Trump victory is happening, you can see that we don't buy until the next afternoon. You say, man, you missed it. Well, we're okay with that. Positive momentum into the close, trading near 506. We're buying the 505 calls. Now volatilities have come back in. paying 409 a piece. Next day it rallies to 514. Those 505 calls are worth over 9 intrinsically. We're out at the double at 820. We just take the double whenever we get it, bird in the hand, lock it down and load. Like we said, averaging a couple trades a week, although more here recently, and then 8 new option trades a month. Some weeks it might be 3 trades in a week, and then other weeks it might be 1 in a week, right? We're only going to trade when we see the opportunities. What about the downside, right? This is back into the February peak and into March. You can see we weren't early in calling the downside, right? This system for downside trades looks for a weak market, super weak market in the bottom 20% of its readings, and then they bounce. Okay, so then on a bearish market, you see we're making the definition of a bear market or a downtrend is lower lows and lower highs, right? So this little bounce is still not that significant in our view, and in fact, up here near 490, buying the slightly out of the money, 488 puts, 509. So on $1,000, only get 1 contract. Next, we get in there, and the next day it gaps down. We get out at 1018. It traded to like 14. We don't care, right? We're happy at the double, quick $509 profit per contract. Now you can see here's another bull reversal from right before the market topped back here earlier in February, where again, this is the power of not getting stuck in a buy and hold mode, right? You want to be definitely focused on taking advantage of this. Big reversal back up, the flush happens there. We finish higher. We get in 299 a contract. That's 3 contracts in for 897. Makes us 897 when it doubles the next day, right? So there's just countless examples of this, even from earlier this month. Sometimes we get gaps past our target. Here we go, the entry coming in at the end of September. You can see here, this is key. This is why we use a 50% stop loss, right? Because we're hopping in here just over 600, buying the near the money 600 strike calls. We paid $300 a piece, right? So we're in for 3 contracts at $300 a piece, $900 total investment. Look what happens. Initially, we open lower. We opened at 597. You think, oh, this is going to be one of the stop outs. We were probably down 25 or 30% not long after that morning's open, right? We'd gotten in the prior afternoon. That's why we use a 50% stop. We don't recommend a tighter stop than that because you can get whipsawed. You can get faked out. Given that we're shooting for doubles, we feel like a 50% stop is still plenty sufficient to control risk comparatively, right? So we don't get stopped out. It reverses back up on day 1. The day 2 gap up is where we get out up to 607. And we're out at 731 beyond our $6 target. That was 143% gained off the $300 a piece. That would have made you $1,293 beyond your $900 expected profit on your 3 contracts in for $900. You make more, right? That's an outlier, right? It's not going to happen that often, but when it does, it's great when it does. Now, I only got a few minutes left. I've showed you a lot of charts. We've been ringing the register a lot lately, but remember, it's going to be risk too, right? We want you to be slow and steady wins the race on your capital allocation, especially when we get started as a new subscriber. So we'll call out all the alerts for you. Your job is the consistent execution, right? So we call it Kiki Cross's playbook. I've got lots of subscribers in for multiple years now. It's been a very popular service. We set aside just a handful of spots for today's event. I'm going to allow you to try it out for 3 months. I believe 3 months is an appropriate trial point. Oh, by the way, I also said it's like the best seasonal 3 months of the year coming up. So the next 90 days, I'm also going to give you the same things I give to longer term subscribers in terms of all the access points. My only requirement of you is that you only keep the knowledge to yourself. You do not share it with anyone else outside of your family. It's not to be posted anywhere else on the web or otherwise. That it's kept for subscribers. Paid subscribers get the benefit of this edge. Playing out over time. We give you the settings and rules so you know what the system is. I give you weekly video training. I also give you access to me and my analyst team if you ever got a question on a trade. If you don't understand it, what we're thinking, we'll reaffirm that and we can answer your questions through a dedicated analyst email that you get to my research team. This would be $297 a month over 3 months. That would be an $891 investment you make to get 90 days worth of access. I'm slashing that for you today. I'm taking it down from $891 by more than 80% off, taking it down to just $177. Why did I do this? Well, Trader's Corner's been good to me, so I like to pay it forward and backward, however it would be. But the bottom line is that I also thought, well, you know what, 90 days access, that's less than $2 a day, you know, if you think of it that way. As we said, how many trades are you going to expect over the next 90 days? We said we expect about 8 trades a month, so in the neighborhood of about a couple dozen trades. That's still well under $10 a trade, and more importantly, trades that can make you potentially $1,000 on $1,000 invested up to, right? Sometimes we only get $600 invested, $700, $800 invested. But the idea is that you can still get a great ROI on just one QQQ option trade that doubles. But know that not every trade is going to double. There will be winners, there will be losers. We will time stop some other trades out at kind of slight gains or slight losses. But the idea is that it's about rinsing and repeating consistently. Being slow and steady wins the race. Few questions we get just to wrap it up here, and then you can get that. By the way, that link, I know Anthony will post. It's bigtrends.com/corner. Thanks for posting that for me, Anthony. Bigtrends.com/corner. There's your quick overview on the common questions we get. It's just simple call and put buying. It's real-time stuff. 3:40 p.m. is the entry, 3:40 p.m. 2 days later is the exit, 8 trades a month. So I'm out of time. I'm going to hand it back to Anthony, but lock it in, folks, with that 80% off, save you $700 on a 3-month subscription, just $177 if you act before midnight tonight. Thank you, as always, for having me, Anthony. It's always a pleasure.
Thank you so much, Price. Powerful insights on zeroing in with laser focus. That chat box has your offer link, so don't miss it. Now it's time for something magnetic, literally. Here's Leigh Goldstein of 10-minute trades with his brand new magnet strategy. This is a revolutionary way to trade news events by letting the market come to you. Get ready, because Leigh is about to change how you think about timing and automation. Thanks for being here today, Leigh. And I'll make you a presenter.
Yeah, thanks. I just need control of the charts and we'll get started.
Yep.
No problem. How's it going?
Good. How about you?
Pretty good, pretty good.
All right. Presenter.
Got
it. Thank you.
All right, give me half a second.
Take your time. And organizer so you could see the questions.
Everybody could hear me, so I'll get started. Thanks, Anthony.
You're
Appreciate
welcome.
it. Okay, so I want to thank everybody for joining the webinar. I always, I say the same thing all the time because, like Price said, Traders Corner has been really good to us, and we really appreciate the opportunity to be here all the time. It's great. Today is Halloween, so it's a scary time to be trading it. If you think about it too, the markets are volatile. There's a lot going on, and I always enjoy listening to the other people talking that come on before me or after me, whatever. And Price said something that is a great lesson. The service he's selling, maybe they only have 1 trade a week sometimes. Maybe they only have 3 trades a week sometimes. Well, at 10-minute trades, we're trading news, and we're basing the trades on trading the best performing news. So there are times when you might only have 3 or 4 trades in a week, but you might have 10 or 15 news reports. And just to really, it's a very, very important concept. And there are, we like to call them old wives' tales, but they're really not old wives' tales. Traders tend to make the same terrible mistakes over and over and over again when they're trading, and they just continue to repeat the errors. And one of the major errors that traders make, they try to trade too much. Over trading is one of the worst things you can do. So just for fun, before I really even get started here, this is our weekly schedule for this week. And you can see our trade room is open for almost every one of these events. We trade the gold open, the oil open, the market open, US market open, United Health earnings, UPS earnings, Regeneron earnings. We're looking at all these events, but we don't trade all of them, and we don't recommend that you trade every single one of them. One of the most important lessons that you can learn as a trader is not to overtrade, to trade the opportunities that are the best. And that means you've got to put in a little bit of time to learn about the system that you're trading. Yes, people can send you their alerts and they can tell you what to do and how to do it. But if you also put in that little bit of extra time and effort to learn the why you're doing it, you'll be a better trader, you'll do less over trading, and you'll know when the opportunity is staring you in the face. And that's a very important part of why the magnet strategy is so important and why I wanted to talk about it today. The title, News Trading is Changed, is not clickbait. It really is true. So I'm going to talk about our magnet strategy, but I'm going to just do a quick intro about 10-minute trades, let you know who we are and what we do and how we trade. My name is Leigh Goldstein. I'm the trading director for 10-minute trades. It's possible to lose money trading futures, so please trade money you can afford to lose. Everything I discussed today is for educational purposes. Now, just to be clear, we trade a methodology called appointment-based trading, and our software uses the NinjaTrader platform. We trade futures. When we're talking about trading stock earnings, we're trading futures on stock earnings. And let me show you what I mean. We had an awesome stock earning trade yesterday. We're right in the middle of stock earnings. It's the highlight. This week, you know, we had Meta yesterday and Google yesterday, but a lot of people don't pay attention to Caterpillar. Well, we've been trading Caterpillar for years, and something fantastic happened during this trade. So this is our actual trade room video. In the trade room, when we're trading earnings and when we're trading magnets, when we're trading anything, we use the same charts. Our charts are very simple. We have highs and lows on the charts. We have VWAP on the charts, and chart creation is very important for magnets and for the way that we trade earnings. I was looking at Thinkorswim stock chart pricing, and I was also looking at TradingView, the free version, their Caterpillar stock price movement. Notice on the left here, you got these little X's on the chart. Those are our orders. We know when Caterpillar releases their earnings, and all of the trades that we trade are very similar in the sense that you're waiting for the market to break out of an area, and when it breaks out, that's when you get pulled into a trade. And frankly, all trading is like that. Whether you're trading news or you're trading somebody's trend system, you're waiting to break out of an area, obviously, and then get pulled into the market. With Caterpillar, we create a range based on time. It's a short range, 30 seconds. When the range gets broken, we get pulled into the market. But something fantastic happened yesterday when we traded this report. First off, it was a phenomenal, fantastic explosion, and we made a ton of money. Everybody in the trade room made a lot of money. But one of the things you're always hearing about news trading, because we trade news, everybody says, oh, you can't trade the news, slippage will kill you, slippage will kill you. Sometimes there are trades where, yes, slippage kills you, but there are just as many trades where you get positive slippage. In this trade, we made more money than our targets were set for because the market moved so far and so fast in our favor, it gave us more ticks of profit than we expected. That's called positive slippage, and that happens a lot. One of our members in Kenya traded this report. Let me show you her chart. Hopefully I can move it here. And she made $1,200 on this report. Her profit really should have been about $500, but because it exploded so far, it filled her way up at the top of the move, which is a bonus. She got extra ticks. And like I said, instead of making $600, Roz from Kenya made $1,200 on that trade in a moment also. And that's called positive slippage. We also had positive slippage. If you notice our trade, it takes place right at 6:30. Our software puts the orders on the chart. Price explodes when the earnings come out because Caterpillar had fantastic earnings. The point I'm trying to make is sometimes you have positive slippage, sometimes you have negative slippage. It's a key issue when people talk about the way that we trade. Slippage will not always kill you. It will very often give you more money than you're expecting. So I just wanted to show you a true instance where many of our members had positive slippage yesterday. So at 10-minute trades, we have a system. And in our system, we have 4 elements: the weekly schedule. I just showed you our weekly schedule. We have a daily market mover trade action report. Many of the events we trade get treatment called the daily market mover. Our schedule has a lot of information on it. It shows when our trade room is going to be open, room opens. It shows the time of the event that we're trading. Normally, we go into our room about 30 minutes before the event. Obviously, it's going to name the event. We show the instrument we're thinking of trading, and sometimes we have a few little notes on the weekly schedule. That's free. Anybody can get our weekly schedule by just going to our website and opting in for our free video, how to find 10-minute trades, www.10minutetrades.com. So we have a weekly schedule, the daily market mover trade reports. The trade reports look something like this, exactly like this. This morning, we had the ECB refi rate, for instance. We also had natural gas storage. The natural gas storage was a winning setup. So this is a report that's specific to natural gas, the storage report. Every Thursday at 10:30, natural gas releases the government releases storage reports. And even with the government shutdown, they have been releasing the energy reports. We show a 6-week journal, what happened the last 6 weeks on this report. We show some history of the report on the daily market mover, and we show a setup that we're going to consider using in the trade room as long as we feel the market fits the setup. Sometimes you have extreme volatility before a trade. We might modify our setup, and that's very important to know, and it's very important to understand that the trade room is a key element in our system and in our membership. 4 elements make up the membership: the weekly schedule, the daily market mover trade report, trade room access, and software access. So that's what makes up the trading system at 10-minute trades. Our software installs into NinjaTrader. It's 3 strategies. So once again, we've got weekly market movers, daily market mover, trade action reports, trade room access, and our software. We have 3 strategies that install into NinjaTrader: trap trade reversal strategy, the magnet strategy, which we're going to discuss today, and our news trader strategy, which has breakouts, reverse breakouts, earnings trades, range trades. I showed you a copy of our weekly market schedule, the weekly market mover. I've shown you our daily market movers. Our daily market mover trade reports get sent to our members the day before the event. So for instance, tomorrow, if we're trading the PCE price index, if it's coming out, the day before that news is available, we have a DMM, we have a trade set up for that event. Some events, we don't have DMMs because they don't fit that kind of a profile, and we call them trade room events. And basically, when a member comes into the trade room, we teach you how to set up a trade for that event if it doesn't have a DMM. So every event that we deal with in the trade room, we teach our members how to enter the trade into our software. And it's very, very easy. When we start covering the magnet in a minute, I'll show you how to enter magnets, and all our software, all our setups enter into the software in a very similar way. So our trading system is time-based, and it's a pre-planned approach to the market. You can schedule your trades on specific days at specific times, up to a month in advance. We have 3 categories of events that create these triggers, 3 categories where we get the events that we're going to trade. The first category is high impact economic reports, FOMC statements, GDP reports, ECB refi rates. Those are economic reports. They generate news moves. We call it a news move. When the news is released, it gets compared to the forecast. The actual news compared to the forecast is what causes the move in the market. The difference between those two, we call the difference between the forecast and the actual result the news offset. If there's a big offset, that tends to move the market more than if the news is as expected. Our second trigger event, big company earning reports, and we are right in the middle of big company earning reports. Caterpillar was awesome. We also have another trade setup. We have been trading United Health for, I would say, since the beginning that we ever started trading Earnings. United Health has been a winning trade. I don't think we've had a single losing trade trading United Health. We don't care if the company is controversial because something terrible happened and their CEO got shot. That doesn't really come into play. What comes into play is only one simple thing. How does their stock price affect the future we're trading at the time the news is released? Every quarter that we've traded United Health, our system and our setup has worked for a profit. Yesterday, our software put the orders on the chart, the price burst up, we were able to trail, and eventually what happened, price kept going, and it went all the way to the high of the day, which brings up the beauty of magnets. The high of the day is a magnet. The VWAP is a magnet. The low of the day is a magnet. So what is a magnet? Magnets are areas on the charts that many traders look at. And because they're popular areas that so many people look at, they put their orders around those areas. And all those orders sitting there tend to attract price or repel price. And we created a system, a very simple system, to trade the test of the magnet. And that's what I'm going to explain as we keep going here. So we've got these three categories that create these events that we trade for profits. Category 3, market open, market close trades. We started trading market opens. We've done them through the pandemic, and then we took a break from them. We started trading market opens about a month and a half ago again, because some of them are working great. Now, most people think of the US 9:30 a.m. Eastern time as the only real market open. But at 8:20 in the morning, you have the gold open. At 9 o'clock, you have the oil open. And then 9:30, you've got the US market open. 6 p.m. in the evening, you got the reopening of the US futures market. There are many market opens. You could trade the grain market opens, the European market opens. Obviously, you want to look at those time frames, trade those opportunities that are best. Right now, the regular market open, they're trading great. Let me show you, let's see which video I have. I should have a video, today's market open, and it shows a couple of things. So we trade the YM very often as a magnet at the market open. So remember what I said, the low of the day is a magnet. Why is the low of day a magnet? Because it attracts price. Low of day attracts price, high of day attracts price. So we created a setup that puts an order above the test of the low. And that's where we get entered, short. And our exit is geared around the low of the day. So we have a strategy called the magnet strategy. It takes about 1 minute to set up a trade. Very easy. Also, you can use your own custom levels. Anything you want to do, you can use your own levels, or you could use the popular levels that we know are magnets. Why are there other magnets that might work really well? Because think about it, if a lot of people use Fibonacci's, then Fibonacci retracement levels will very possibly be a great magnet. So you can set up, when we created the magnet strategy, we wanted to make sure that someone could put their own levels into the strategy. Also, people do tremendous amounts of analysis, and people are smart. They come up with areas on the chart that they know are going to be a magnet. So we wanted to give them the capability of creating a custom magnet, because we know magnets work. And once we show you how they work, you'll be convinced and you'll want to trade magnets also. So this morning, one of the ways we trade the YM, because the YM happens to be a little bit tough to trade at the open, but it's not so tough if you look for magnets. We got to the trade room about 9:15 for the YM. I looked and I saw the YM was down. And how did I know it was down? I've given another webinar that you can go to our YouTube channel and you could just watch how to set your charts up for news trading and for magnet trading. It's the same exact setup. We put high of day, low of day on the chart, VWAP, which is a great magnet, on the chart, and an indicator called the net change display. It's a free indicator, part of NinjaTrader, and it shows in a glance if the market you're looking at is up or down from the time frame you are looking to check it. There's a way, very easy, when you set up your charts, to calculate your indicators at a certain time. We calculate our indicators from when the market reopened at 6 p.m. That's when we calculate our indicators. So our high of the day starts at 6 p.m. in the evening. We don't start at midnight, say. You could set your charts up if you want to do it at midnight. For us, the key is we use the most popular magnets that most traders are going to use. So when we set up our charts for NinjaTrader, we set our trading time template to default, because let's be honest, most beginning traders are going to leave everything at default. There's a ton of beginning traders that are trading the markets these days. So I want to look at magnets with trading hours default, because it works really well, because tons of people are looking at the same timed levels. So a magnet is an exit. It's an exit at that level that we believe is going to pull the price. The low of day gets tested over and over again on any instrument you want to trade. If you like trading gold, think about it. Doesn't the low and the high of day get tested multiple times during the day? Doesn't the VWAP get tested multiple times during the day? Doesn't the PP pivot? You get it? You follow what I'm saying? These are areas that get tested over and over during the day on every instrument. If you like trading the ES, practice magnets on the ES. If you like trading the YM, plenty of magnets on the YM. So we come in the morning, we notice low of the day, our net change indicator is giving us an initial shortish slant because the YM is down 200 ticks. I'm not going to count 100% on my net change display without doing a little bit more checking. You might be advised to look at a 15-minute chart before you determine trend. Just looking at the net change display alone is not enough, so it's always smart to make a proper determination about trend. Just because the market is currently down 200 ticks doesn't necessarily mean that market is bearish. It could be a pullback in a bullish market. However, this morning, the markets were not behaving that great after the Fed. Also, there was not a big, gigantic trade agreement signed between the US and China yesterday. It hasn't been signed yet. I think the markets are skitterish right now, but the YM looked negative on the open. So our magnet software, it puts an entrance above the low, and then we are testing for the low. Our exit is the test of the low. This actually all happened right before the open. I'm willing to take this trade before the open. This is a perfect magnet. Here's our entry. We got pulled into the market right before the open. The price chopped a little bit, and bingo, in like 30 seconds, our target was hit, and I was done with my magnet trade on the YM. Then, interestingly, the YM wound up going up at the open. Totally different trade. Now, what's fascinating, look on the left, we've got the MNQ. Now, we were trading a breakout on the MNQ because that's our best setup right now on the MNQ open. But if our breakouts were not working great, and I came into the room and I saw the low of the day sitting under our price right before the open, you could have set up a magnet for a test of the low of day and watch what happened. We happened to make beautiful money on our MNQ breakout. It worked perfectly. There's our orders. If the price goes up on the open, we're going to go long. If the price goes down, we're going to be pulled into the short side. We were pulled into the short side. Here's our trade. Watch the red line, the low of day. That's a magnet. Watch what happens. Our trade makes money, hits all our targets. We put our second target at the low because we know that's a magnet, and we expanded our target. It got taken out about 30 seconds after our trade was entered. We used, even though we didn't trade the exact magnet setup, we used our breakout setup to place our second target where the magnet trade tells us high probability of getting to that area. And that's exactly what it did. The MNQ went a lot further this morning, and our magnet strategy does have the ability to exit one position at the low and then take a second position. If you keep going through and through and through the magnet, bingo, you can make more profit with a second position. Now, what's really interesting is on the YM, look at what happened on the YM open. There is a magnet possibility above the current price, the VWAP. Now, this is a double magnet. It's stronger than a regular magnet because there's more and more orders being placed around those areas. So you had a VWAP level and you had the 6 p.m. open level. And it's not in the video, but trust me, folks, this morning, the YM went up and it went through the magnet area. Had someone wanted to set up an opening trade YM magnet to the upside, that would have worked as well. The point is, magnets are all over the charts. If you can read simple trend, that will help you to pick the best and the best opportunities for winning magnet trades. Now, of course, every trade isn't a winner. The first trade I took this morning, it just didn't follow through. And I traded gold, a magnet to test the low, and it didn't get to the low, it reversed. But that's gonna happen. I don't have to tell you that not every trade is a winner. If every trade is a winner, no one would be here. There are hundreds of these triggers that we talked about a little while ago, the market moving events, earnings, the 3 types of events, hundreds of these events that we find to trade, besides magnets, besides earnings. All of the events that we find to trade, we get from the free calendars, Forex Factory, investing.com. All of these calendars show you events. We have vetted tons and tons of these events. And in our trade room, we teach our members to trade these various events. And we know, believe me, we know the best events to trade. We're not going to trade Italian GDP at 5 in the morning. It doesn't move the market that much. But we are interested in Swiss CPI sometimes, or the Swiss GDP at times, or the Euro French flash manufacturing report. We know which reports are going to move the markets, and we find the events on the various calendars, investing.com, Forex Factory, Financial Juice, and we find our earnings trades on earningswhispers.com. The way that we trade, especially magnets, is extremely appropriate for trading in prop accounts. We just passed a prop eval 2 days ago, trading lots of magnets, lots of market opens, breakouts, all sorts of different, different types of setups. That was our little certificate. We just passed an eval. So now we got to get some money, and we're going to take very good care and trade our funded account. Very smart. We're on the verge of our market open account getting funded as well. We're only about $400 away from that. No, actually, after this morning, we had a very, very successful morning. I think we're like $50 away from our market open strategies from getting funded. So when that gets funded, we'll just do what we continue to do. We'll trade market opens and closes only in that account. And that's the way to get money out of the account. This is our first, we never used to trade prop accounts. We were pretty late to the party. They have some good value. The one thing about prop accounts that I don't like, and you want to be aware of, they do tend to create very bad trading habits, because let's be honest, trading in a prop account is not losing your own money when you lose a trade. Nothing teaches you better trading habits than trading your own cash. So there's a lot to be said still for trading in a cash account. Our software strategies are custom add-ons to NinjaTrader, and the strategies have multiple setups. You can automate the setups, or you can semi-automate them, and our software takes the place of learning a programming language called an ATM. But let's get to magnets right now. So remember what I said, because it's critical. A magnet is an area on the chart that lots of traders put their orders, and price gets pulled to those areas. R1 is a pivot. That area is a small magnet, nowhere near as good as the high of the day. If you shop for magnets, what do I mean, shop for magnets? Just scroll through a chart. This is the gold chart. And if you just go back in time, you could see which pivots, which areas tested the levels. The most popular magnet, my favorite magnets, are the high of day, low of day. And there's the test. The most recent high of day, low of day was 10:10 this morning. That means to me, because we're a couple of hours away, that this high of day is a potential magnet trade again. When the markets get back from lunch, right now the markets are at lunch, but let's say you believe that that high of day is a magnet you want to trade. So it's easy for us to trade a magnet. And just as a reminder, I can show you 50 different magnet trades that work. So I'm not going to show you 50, but let me show you another gold magnet trade that works so you know what I'm talking about. Here we are. We had a low of the day we were looking at. Our magnet software, I'm going to show you how it works in a second. It puts orders on the chart. The thick line is our order entry. Our exit is the magnet. There goes the price. The market's falling. It's been falling. It's going to fill us right there. We get filled as the price goes through our thick order entry line. And watch, it's going to test the low and pay us. Chops a little bit. I don't get worried. Boom. Magnet trade of beauty in our prop account. Nice, sweet profit. Magnets happen over and over and over and over. I can't begin to tell you how many times. Do they happen on other instruments? Here's a magnet on oil. Oil is a great instrument to trade magnets on. So here we have around noon, or a little bit before noon, an hour before, we noticed oil was negative. Low of day was in sight. We thought there would be a good possibility of a test of the low. We put our magnet strategy on. Our thick line is the order. Our red line, the dotted line, is the entry, exit. There's our entry at the thick line. Price goes, chops a tiny bit, hits the magnet almost immediately. It was just a couple of seconds. Then I believe at the end of the video, we had another magnet on micro oil to the upside. So here's our magnet. We're looking now for a test of the high over an hour later, okay? And we got a magnet, order entry, high level is our magnet, the high of day. We get entered into the market, little chop, very normal. Boom, through the magnet. Remember I said you could have a second position to take advantage if you shoot through in a significant amount? Well, you can. Here's how easy it is to put a magnet trade on the chart. So let's say I'm noticing gold. I'm watching gold this morning, and I see we have a high of day. It's probably going to get tested eventually. So I'm going to right-click the chart, click the word strategy. It's going to open a dialog. I'm going to double-click magnet trade, because remember, our software loaded into NinjaTrader. It's now part of NinjaTrader. Magnet trade high of day, low of day is default. I don't have to do anything. I change the proximity to 3. It just is a question of where it's going to put our order entry on the chart. My default is 1 contract, and it's going to take me out of the trade. My target is 3 ticks before I get to the magnet. And right now my stop, I would use a stop, say 25 ticks. So all I do is enter the number 25 where it says stop loss ticks. I scroll down, I make sure I choose the account I want to trade in. We label every trade. This is called the GC, the gold magnet trade. I just apply it, okay it. Now on the NinjaTrader control panel, as long as I have the strategy tab checked, not the account tab, but strategy, I can turn on my trade by enabling it, by checking the box. When we enable a magnet trade, it puts our order 3 proximity. It's just a percentage of how far or how close. The proximity doesn't really matter because you can grab the order entry and put it where you want. All right, so you can use your analysis to say, well, if 4025 gets broken, I want to enter there. I want to be pulled into the market above 4025. So I can move my order above 4025. The high of the day is my target, less 3 ticks. So if I want to trade this magnet trade, I have a couple of different possibilities. I could just leave it the way it is. And when the price gets to my thick line order entry, the magnet button will blink purple and it'll make a sound telling me, press the button if you want to enter the trade. Also, if all of a sudden the market starts taking off to the upside, and I truly believe we're in a big upward trend, maybe someone said something that's news related that's going to force gold up $10, I can press the enter now button and it'll immediately put me in the trade with all our safety, with our stops and targets properly configured. Also, I can automate the magnet trade by just simply pressing the pink button, the entry button. It'll turn the button pink, put it into auto mode, and then I could do something else. Maybe I'm trading the ES on my other chart, and I could not even pay attention to my gold chart. It'll take the trade automatically. If I turn off the auto, I could still be trading the ES and doing other things on other charts or reading a book. And if the magnet blinks and makes a sound, I know I can get over to my chart and press the button to trade. So that's the high of day, low of day magnet. The high of day, low of day is easily automated. Now, keep an eye on your email. We are making a huge announcement next week. That's all I'm going to say. Big announcement that we're going to be talking about. Today is going to be the last day, and I have an apology to make, which I'll make in a second. But we have something big coming out. It's going to change the magnet even more. The custom magnet, let's say, for instance, that I really believe the VWAP is going to be the magnet. It's 39.85. That's the level. So I just choose a magnet trade. Instead of doing high of day, low of day, I just make it a custom level. I put in a target. Let's say we'll do 30 tick target. It's all adjustable. Sorry, I'm going to put in the custom level. So I look at the VWAP, it's 39.85. I put in the exact level of the exit, the magnet, 39.85. That's my VWAP level on the chart. Easy to see, easy to understand. 30 tick target. I have my stop. Let's go right to apply and OK. Enable. Now what's going to happen is down at the VWAP, that's my order. But remember, the magnet is my exit. I want to exit at my magnet. So I'm going to grab my order and just move it above. This is going to be a short. So I don't want it to be below the VWAP. I want it to be above the VWAP because our price is above. And then I would turn off the long so it doesn't go the wrong way. And when price gets down to this area, I have a custom VWAP magnet trade. That's how long it takes to put magnets on the chart over and over. Those levels get tested constantly. We trade magnets at the open. We trade magnets at the close. We have breakouts at the close. Okay, so everybody understands what a magnet is. We teach you how to set up your charts. All you need on your charts is the current day open, high, low, pivots. We use the order flow VWAP. Order flow VWAP, if you're a lifetime Ninja Trader subscriber, you get that for free. If you're not, we have a VWAP free one for you that you can use with magnets. We put volume on, the net change display, and the squeeze. Okay, everybody knows what the squeeze is. So I discussed what triggers a magnet trade. What triggers a magnet trade is the price pulling the current movement into those levels. And once again, it happens over and over and over on all charts. If you want to trade gold, magnets get attracted. If you want to trade oil, magnets get attracted. Every single chart known to man will work with magnets. And here's the beauty of magnets. Magnets have worked since the beginning of time. This is not like a robot that needs constant reconfiguration every 2 weeks because the markets have changed. Yes, the market might be more volatile. It might get to your magnet more quickly, right? But a magnet is a magnet is a magnet, and from the beginning of time, the high of day and low of day gets looked at by traders. The pivots get looked at. That's probably never going to change. And if it did change, you still always have custom magnets. It is a fantastic way to trade. So I would like to offer everybody an opportunity to come into our trade room, test everything that we do: earnings, magnets, breakouts, news trading, every single thing we do. My apology is this: last week I said it was the last week we were going to keep our trial active. We've had a 1 week delay in our big announcement that we're making next week. So I'm going to do the trial for 1 more week. And I really am being serious. Once this week is up, because we have a huge upgrade coming out. Once that upgrade is out, we're going to concentrate on our new software all through the end of the year, and our trial is not going to be available. This is the last opportunity until this trial expires. We are going to take it down, and it's not going to be available. Everything that we do is available in this trial. Everything. Nothing is held back. You're a full-blown 10-minute trades pro member, trade room, daily market mover reports, weekly schedule, everything, software access. I'll go through it all. The trade room, you can come into the trade room just like our full-blown members. You are a full-blown member for 30 days if you take this trial. We have the trap trade strategy, the magnet trade strategies, the breakouts, the news trading. We're in the middle of earnings. You can trade in a prop account. We've got members that tons of members have been passing their evals all week. The last 10 days have been really, really good trading. And we've had a lot of people passing accounts these past couple of weeks. Final trial opportunity. My only apology is I said last week was the final. We're going 1 more week. I don't like to look like I'm not telling the truth. Everybody who knows me. I don't not tell the truth. So go to www.gopro25.com, $20.25 to take our trial for 30 days. And it will renew for $97. You can be a pro member per month. If you don't want us to renew, just send us an email before the billing period is up, help@10minutetrades.com. It's no big deal. I'll show you the email. So www.gopro25.com. Every day in the trade room, we're teaching you how to do magnets, and the bonus is you'll learn how to trade earnings with news, futures. You'll learn how to trade the breakouts, reversal trades. It's a great trading method, and it's so reasonable. Taking the trial is worth it just to learn all about the news and how it might affect any other setups that you're trading. All the things you'll get: the news trader software, the magnet trade, appointment-based trading method. We teach it every day. Choose the events you want to trade. Learn how to create a trading schedule so you don't have to sit in front of your charts all day. Trade selected stock earnings with futures. I will guide you step by step in all of our trade rooms. We usually have 3 to 5 trade rooms a day. Mondays are usually a little quieter. If you have any questions, send me an email, help@10minutetrades.com. And again, it's www.gopro25.com. I don't see many questions this morning. Everybody is kind of quiet today. It's raining and miserable where I'm located. So folks, I would love to see you in the trade room. We've got great earnings trades still ready to go. Anthony, thank you so much for having me here. I really appreciate Traders Corner and the opportunity to present our service. So thank you, and I'll see you next time.
Thank you, Leigh. As always, that was electrical. Magnetically drawn to your methods. Traders, check the chat link, or check the chat for the link to upgrade and learn more. Thank you so much, Leigh. Always
Thanks a lot
good
to
have
you.
Thank you. All right. If you're ready to level up your trading automation, Jeremy Tang and Zach White of Shark Indicators are here to show you how BloodHound and BlackBird can create powerful filters, automated trailing stops, and next level order management, all without writing a single line of code. So let's welcome this great dynamic duo.
Hello, how are you? Can you hear me okay?
Hey, how are you,
Right.
Jeremy?
Thank you, Anthony.
Hey, what's up, Zach?
We are good to go.
Great to be back. All right, excuse me, I'm just gonna try to share my screen. I've kind of got the,
Apologies, maybe I got to give you access.
yeah, I was looking for the button that wasn't there. And thought maybe in my older age, I'm starting to be delirious or.
There's a bigger picture of you.
Ah, okay. All right, let me make sure I got the right monitor. Here we go.
And then, yeah.
Okay, do you guys see my screen? You should see a disclaimer up there.
And Anthony, I'm going to need access to screen sharing as well.
I'll do that, no problem.
All right. Well, I mean, well, that's being sorted out. How many of you guys think the market's going to keep continuing to go up the way?
Hey, Jeremy, your audio got cut for a sec.
Oh, I did. Okay.
There we go.
Sorry, give me 1 second
Okay,
here.
you're good now.
Can you hear me now? Okay. Hopefully, we got all the technical stuff sorted out here. Okay, let's crack right into it. Again, my name is Jeremy Tang. I'm one of the co-founders of Shark Indicators, and I've got Zach White here, as Anthony mentioned. How you doing, Zach?
All right, good. Ready to show everybody what we got.
That's right, and we've been doing this for quite some time. I mean, it's been 13, 14 years now that we've been when we first released our first product, and so we've been offering basic software tools to help people create trade systems. As you can probably guess, you know, a lot of people have different ideas in terms of what to trade and what will be successful, what's not successful. And really, this is kind of, you know, where we come in, right? If you have your own ideas and you have your own system that you'd like to trade and actually execute, and maybe you want to, you know, take some ideas from this vendor or, you know, something you read over here and combine it together. This is really kind of you know, that sweet spot middle, I guess you could say, in terms of the kind of products that we offer. But I'm going to actually rewind the clock quite a lot. I'm going to go back to 2006, which really started this whole journey in the first place, and talk about my first live trading experience, because I think it's kind of relevant to the whole impetus and what started the journey of Shark Indicators and our company, and what we do. So as Zach pointed out, you know, 2006 was before the iPhone, so this is quite a while ago, and those were the days. Yeah, that we had
iPhone, man.
Yeah, it was before video conferencing even, I think.
Yeah.
So,
Oh, hey, just so you know, by the way, your screen share got canceled when I was granted screen share.
Okay, let's do that.
Share your screen again there.
All right, thanks.
Yeah.
Okay, we're still not over the technical difficulties here. Okay, you should just see a little slide there. It says.
There we go. You're good.
Okay, we're good to go. All right.
Oh no, you just lost it. It got canceled for some reason.
Okay, let's try that one more time.
Try it one more time.
All right. Okay, how about now?
And it's coming in. Okay. Yep.
I see it. Okay.
Yep.
All right. Let's see if we can get through this. All right. Picture. I'm in a hotel basic conference room. There's a live teacher up front, and they're presenting this trade system. Right. They're basically saying, all right, one of the first experiences or one of the first lessons I learned is that the things that separate pros from amateurs is typically pros have some sort of trading rules trade system, right? Which is basically trading rules. And so in that spirit, they were basically presenting this really simple system. It was called the 80-20 system, and all it was just like a SMA cross, right? When the 20 SMA crosses above the 80 SMA go long, and vice versa when it goes short. He explained, this is what they call a trend following system. And I went home that day and I jumped on the computer, next day, jumped on the computer, put some money into a brokerage account, didn't do any testing, didn't do any practicing, did just jump right in, put those two indicators on a chart and went to town, right? Because he showed a bunch of promising results. I was like, I could do that, that's easy, right? Long story short, it was not easy. Just simply following the system was harder. I mean, you think it's easy just following those two indicators, right? But when you're sitting there manually, you're trying to do that, and every trade is, losing money, right? So I was down, I think, $800 by the first 15 minutes, and I'm talking 2006, right? Money. So that was pretty significant, and I just couldn't pull the trigger for the next signal. And of course, this kind of system requires you to stay disciplined and basically stay taking those systems, those trades until it does take some sort of trend. And the idea being that it would erase those losses that you had previously and make money on some sort of trend. So I botched the execution, right? I really didn't know what I was doing, and this really kind of got me thinking. This is my crazy brain going, oh well, okay, if I can't do this, what if I could just build? I'm a coder, right? So what if I can just build a trade system to do this, automated, right? Just code it up. And long story short, that eventually led to the software here, the ability to actually describe and create trade systems with your own trade rules and whatnot, without having to write a single line of code. So we've actually been selling this, like I mentioned before, for over a decade, and it's been refined, and it's really gone through quite a lot of evolution at this point. But the crux of it is we offer two pieces of software. BloodHound, which is one of our flagship softwares, which is that logic board that you just saw earlier. It basically allows you to create a custom signal, right? So you put the nodes on, you can design your logic. You don't need to be a developer or a coder. You just need trading knowledge, right? And really, you got to ask yourself, are you better off learning how to code, or even with AI assist? Believe me, I myself am a developer. I've been so for my entire professional career and life. I use AI every day. You need to. It's not one of those things you can just prompt it and give you the answer at the end. No. It's like it takes skill to use the AI to code properly, to know when it's wrong, know what's going in the wrong direction. It's not as trivial as people make it out to be. We've done a webinar on this, in fact, and showed kind of like how to use ChatGPT to build a Ninja script live. And believe me, it was. I think in the end, a lot of people probably concluded it was easier just to learn. If you know how to code, it doesn't help you. It helps you speed up certain things, but doesn't get you the answer.
It was close, right? It was like 95% there, but all it takes is that last 5%, and of course your software doesn't run. So
yeah, and well, the other side of it, I think this is the side that most people neglect, is the execution side of it. Sure, you got your signals, right? Even in fact, coding your signals isn't even that difficult for an experienced person, say like myself, right? It just takes a lot of time that you can save with a software tool. But the execution side, that is way more challenging. And believe me, and that's what BlackBird is. It's an execution engine. Takes the signals and will actually execute your orders. There's just a lot of things that can happen in the real world when you're trading that over time we've been able to iron out and make exceptions for in BlackBird. And so BlackBird does more than just simply execute it, right? Like we actually watched discretionary traders, we're skilled discretionary traders, and I still believe this to this day, that more than 50% of your success is actually attributed to how you nurse your trades throughout the life of the trades, right? When you put it on, you're not done. That's when it starts. That's when the challenge starts. When you put your trade on, nursing the trade throughout the life of the trade. I've been saying this for years, is a skill, and it's a vital skill to have, because I've seen personally myself, I've seen good discretionary traders take quote unquote bad signals. I mean, signals that were, went long when he would have done better going short, and still somehow eked out a tick of profit or break even, right? And if you can imagine, if you can expertly manage a trade and actually turn losers into break evens at least, just imagine how much more successful you'd be, right? And that's what BlackBird allows you to do. You can actually pre-program a lot of this stuff in, and you're going to see that in a moment. So you put the two together, you can actually make a custom fully automated trading robot. And I say, like, the way I look at it, it's really like a spectrum, right? On one side, you got manual traders. On the other side, you got fully automated traders, right? There really, in practice, is very few kind of on the extreme edges. Most people, at least certainly our customers, they're somewhere along this spectrum, right? They'll enter manually, and then they use the computer, the BlackBird, to evolve the trade automatically, right? And that's just a great way to enter and just kick your feet up and let it ride. And it'll do things like auto break even. It can do things like trail indicators, and like you'll see in a moment, like kind of how powerful it is. Or maybe it's a mixture, right? And like sometimes people like to have the trade put on for them automatically, but then they want to manually manage the trade or nurse the trade. But really, the easiest way for me to describe it is it's more like an autopilot. Okay, so there are times where the pilot wants to fly the plane manually for whatever reason. They can take over anytime. And there are times where they want the autopilot to fly the plane. And these planes, from my understanding, can pretty much take off and land completely automated. So if they really wanted to, they could do the whole thing, right? Same with our software. Yet pilots will intervene and manually jump in, and the same thing goes with our software as well. In BlackBird, you could literally be in the middle of a trade and say, take over for me, and it takes over on your trade plan essentially. Or at any time you're like, this is not working out the way I expected, you could just jump right in, and as soon as you move a stop or profit target, it just shuts off the auto just for you, and you can take over manually, very manually, just like the autopilot on a commercial jet. So I think the best thing to do here right now is pass the buck over to Zach, who's going to show you our software in action.
Now the fun begins. Let's see here. All right, so let me. I think you need.
I to make you a presenter. Right?
Can't. No, there we go. I'll just change presenters.
Okay.
There we go. I got it. Yep.
Yeah.
All right. And
yes.
No, is it showing the right one?
Looks like a vertical screen.
Yep. No, it's the wrong one. Let's see here.
I have to say, the both of us have been so used to Zoom. In the old days, it was GoToMeeting. Like Ninja Trader themselves would use GoToMeeting, and so we got pretty familiar with that. But since Zoom sort of took off during the pandemic, we switched over to that, and it's sometimes difficult to adjust from one to the other.
So I should be good. Am I good now?
Yeah, you're good.
All right, great. Okay, so guys, I'm just gonna, for the short time we have here, kind of give you an atypical example of how you can use BloodHound and BlackBird. Right. So normally when we're doing these presentations, usually, what's the holy grail that traders are all ultimately looking for, right? It's those discrete, trade signals, buy on this bar, buy on this bar, buy on that bar, sell on that bar, right? All right, the perfect holy grail here. But this time, I want to focus on probably, you know, an aspect that's overlooked a lot, which is the discretionary trader here. So I'm going to disconnect, you know, an aspect here of the system here. And what we have now is a trend bias, right? So this is BloodHound, by the way. You can see BloodHound is down here on the bottom, right? And here's the node based interface, or as we call it, the logic board here, right? Where you basically build all of the various conditions that you're looking at from your indicators and then connect them all together there, right? So let me take a moment to explain exactly what BloodHound's analyzing and what you're looking at here, right? So the first step here is I have a SMA 100, you know, pretty common there, some kind of SMA, you know, to help you see the trend of the markets there. And the second element is that the bars need to be completely above or completely below, right? So that way you're not, you know, obviously nobody really typically wants to trade, you know, when the market's just kind of consolidating and chopping around there, right? And so the bars also need to be completely above for at least a minimum of 10 bars, right? So those two conditions there are these three nodes right here. That's all it took to do that analysis there, right? So with this node here, we can see this is looking at the SMA 100. It's looking at the slope of it, right? So the SMA, the blue line, needs to be sloping up or sloping down there, right? And then the next element down here is, you know, this is looking at, you know, is the candlestick above or below the SMA 100? And then this other node says, all right, I need, you know, those bars to be above or below for at least 10 bars minimum. So that way, you know, because obviously, you know, you want the market to prove itself and not just go below for one bar, right? But for several bars, you know, maybe more than 10 bars. You know, again, this is all flexible. So you get to decide how many bars do you need the market to be above or below, you know, before you consider it, you know, actually in an uptrend or a downtrend, right? And now the other aspect here, now, well, actually, let me just take a step back here. So obviously doing this analysis is really quick and easy, you know, for, you know, the brain to do there. You know, the next part is where this is where, you know, you can, the brain kind of slows down there, which I have three indicators, right? The CCI, RSI, and stochastics. So there's three common oscillators here, just as an example. And again, with BloodHound, right, you can use whatever indicators, you know, that are installed on your computer, right, that just have a plot like the CCI and the RSI there. So you're not locked into any indicators. You can use a ton of custom indicators that are out there as well here. But these are common ones that everybody understands. So what I've done here, this first node here, is looking at the CCI. And the CCI needs to be above or below the positive 50 or the negative 50 there, right? So I have the dashed thicker lines here is the positive 50 and negative 50. So as long as the CCI is above negative 50, and originally I set this up for the CCI to be above 0 or below 0, right? Most common, you know, kind of threshold level there. But as you can see right here is a good example. Quite often when you get pullbacks, at least on Renko bars, when you get pullbacks, right, that CCI will dip below the 0 line and then kind of cut you out of that long bias here. All right. So I changed it from the 0 line to say, okay, it just needs to be above negative 50, right? And the opposite is true for, you know, this short bias here. It just needs to be below positive 50 there, right? And again, I'm explaining all this to let you know, just to keep emphasizing how flexible BloodHound is. So you're never locked into any you know, one condition there, right? You decide as the trader what works best for you and your trading idea there. And that's all done with just this single node here. So the next node is looking at the RSI, and the RSI is pretty simple here. So this is the indicator here in the middle, right? The white line. So the RSI just needs to be above 50 for a long trend or a long bias there, and below 50 for a short trend. Right? And the same with the CCI. CCI just needs to be above 50 or below 50. And again, you can change those values and customize them, for whatever works for your trading idea there. Right? And so this is the node for the stochastics. And I just connected them all in to an additive node here. And it, I get plenty of time here. So something else you can do here that I get asked about here in the workshop is, how do I identify when there's 3 out of 4 indicators? So I actually don't have a 4th indicator here, but you can do that. That's exactly what the additive node here kind of does, is it allows you to say, all right, all I need is 3 out of 4 indicators to be giving me a long bias or a short bias, and that's good enough there, right? But for this, I just kind of left it at 3 there. So, and so so one of the common things you hear about traders is too many indicators just overload your brain and it overloads your chart. So hopefully you can kind of extrapolate from this that you can let BloodHound do all the analysis, right? So since I have this logic here built into BloodHound, I can now actually remove these 3 indicators. I don't need them to be on my chart anymore. I can clean up my chart and let BloodHound do all that analysis there. So, right, because the other aspect here of BloodHound is you can see, right, the green shaded areas and the red shaded areas, and we call those racing stripes there, because when BloodHound was first launched, a trading buddy of ours, Jeremy and I didn't know what to call these things. Green shaded area, red, didn't quite roll off the tongue, and he called them racing stripes because he's an old NASCAR racing fan. So Jeremy loved that term, and it just stuck with us. So we call this, racing stripes here. So when you see green, right, obviously that's indicating a buy, all right, a long trend, or a buy, a signal, or a long bias, and a short bias there. Right. And one of the other things here is part of the reason why I used an additive node is it gives me a little extra information here. So as each of these 3 indicators, as they kind of drop out of their long bias, we can see the output here kind of steps down. So I can see right here on this bar that one of the indicators dropped out. And then the next bar, I can see 2 indicators dropped out. And then when we get finally over here where there is no green or red, that means all 3 indicators dropped out, right? So this is kind of giving me a little extra information here, right? Because sometimes what will happen is one indicator, one of these indicators here might drop out, and then it comes back in. So I can look down here and see how many indicators dropped out, and am I still safe to stay, in a long trade, or should I just bail on it? So, all right. So that's the short of what you're looking at there. So next, what I'm going to do is, let me get this kind of started here, is I'm going to show you taking just, this long filter, right, this long bias and this short bias filter, and how you can use it to discretionarily, execute trades using BloodHound or BlackBird here. All right. So so we can see now, right, this Renko chart just entered into a short bias again. And let me speed this up here in just a moment here. it's going to pull back, right? So we're going to get a pullback here. And when it does, right, I can manually say, all right, let me take this next trade here, and boom. And then BlackBird automatically executed that trade. And now, and let me slow this down. And now BlackBird is manually trailing this stop loss here. So you can see I have this stop loss set up so that it follows the open price plus a couple of ticks. So I paused it right now, so I'm going to take this opportunity to kind of show you behind the hood, under the hood here, of what our stop loss is doing. All right. So again, BloodHound and BlackBird are specifically built to be as flexible as possible, so you're never locked in to trailing, you know, one specific way, or maybe, you know, 5, versus like other strategies out there, right? If you've ever purchased somebody else's strategy out there, there might be a handful of trailing capabilities, but you're locked into that, right? You can't go in and change the indicators, you know, that the stop loss is trailing. But with BlackBird, you can do all of that here. So to kind of show you what's going on with this trailing stop loss here, you can see everything is readable in plain English. So the name here, right, you put in whatever name you want. So I just put in, this is the break even plus 1. And you can see it triggers on, right? So this break even triggers on when there's at least 1 ATR in profit, right? And then the action, right, is we're moving that stop loss to the entry price, right? The entry price is your break even plus a tick, right? Pretty simple. Just read it plain English. And then the next part is the trailing part here. So I put in for the name that this is trailing the bar open, right, minus a tick. So when does the trailing kick in? Well, it triggers on when there's at least 1.1 ATRs in profit. And then the stop loss follows the open price there. And of course, if you're in a long trade, right, again, that stop loss is going to follow the open prices of this Renko chart, you know, all the way up there, you know. And I did put a 1 tick offset, so that way we can see like these little short wicks, right, don't take out the stop loss. But of course, these longer wicks, you know, will take out that stop loss there. But you can adjust, you know, how many ticks of offset that you want here, right? If I want 2 ticks of offset, there you go. Just change it to 2, change it to 3, so on and so forth. So again, you're in full control, you know, how you want to set up this trailing here. So, excuse me, folks. Let me just take a little break. Winter air here kind of gets dry. All right, so let's continue on with this. And, you know, if anybody's ever traded these Renko charts, you know how fast the markets can move. And so you definitely want to have some amount of automation, because these markets are moving so quick these days, you know, that you'll miss a good trade, right? And if you're manually trying to move your stops, you know, the markets can move so much faster, you know, than us humans can actually go in and adjust our stop losses there. So there we go. And boom, look, those last 4 or 5 bars just printed, you know, in a split second there. So, all right, so I have another kind of example here coming up. So let me just fast forward this to the next part. And so everything I'm kind of showing you here, you know, the path I'm trying to lead you down is that you're not canned into any specific way of trading. So let me turn on the auto trading again there, and boom, there we go. BlackBird got into another trade. All right, so again, using the auto trading button here, let me turn this down, right, as a semi-discretionary or semi-automated trader, you can pick and choose when exactly you want to get into the market there. Just enable the auto trading button, and then BlackBird will do the rest and handle it for you. So, and yeah, that trade, boom, got out pretty darn quick there. And let's see here, one more example. So I have something new to show you this time with this next example here. And yeah, so this next element here is a combination of BloodHound and BlackBird working together to generate an exit signal, right? Most people don't think about exit signals there. And shoot, I just missed it. Yep, sorry folks, I missed it. Let me kind of slow this down here. So, yeah, the market's moved so fast. Actually, I kind of have my playback
100
going.
times normal, 100 times the speed.
Yeah, yeah. So what I was trying to do here is get into a trade, and we can see here, right, these last two bars, right, there's no racing stripe anymore, right, telling me that, well, something happened here. One of the indicators cut out here. And which one? Actually, the CCI. Yeah, we can see the CCI cut out, and also the stochastics cut out, right? So that ended this short bias here. And so what BlackBird would have done is it would have exited the trade on that second bar where there's no short bias. So let me kind of stop this, right? So with BloodHound, most people just focus on the entry points, right? That's, number one, right? Focus on the entries. Everybody just wants to have good entries and you're all successful. Well, some traders also realize, hey, maybe we should implement an exit condition there. So if I can switch this over here, and there we go, switch it to the exit. So we can see I actually have an exit signal on there. And that is also tied into BlackBird, this exit signal. So if BlackBird sees this exit signal, it closes out your trade there. And if I switch this back, right, there we go, I marked it with the diamond. So there you go, you can see 2 bars later, if there's no short bias anymore, I told BlackBird exit the trade, right? And to show you that, right, this is really easy to set up. So here, this is where we plug in the BloodHound system, right? And so here's the entry signals. So again, these aren't discrete entry signals, right? This is just the trend bias. But then also we have these exit signals as well, right? Yeah, just simply called exit. Again, you can name these whatever you want there. Obviously, next, everybody understands exit, best name there for it. So, and so that exit signal there is what would have closed out the trade if I hadn't sped things up too fast and actually made it and got into that trade there, right? So there, if I switch this over, yeah, that exit signal would have closed out the trade there. And again, so you can use BloodHound, to provide you whatever kind of information that you're wanting from that chart, right? It's up to you to decide what BloodHound is telling you. It's not locked into any specific task there. Okay, so yeah, so there's one kind of small example there of combining a trend filter with discretionary trading there using BlackBird and BloodHound. So this next example is going to be purely 100% discretionary only. So BlackBird doesn't have BloodHound loaded into it here. Yeah, so this kind of show you, right? So there's no signals. But what I do have set up this time is I have 2 profit targets. So I have a 4 ATR and a 6 ATR, and then I have my stop loss using a swing point indicator to place those stop losses there. Right. So with the dynamic planner, so we have this other element BlackBird here called the Dynamic Planner. And if I plan short there, we can see the orders. There we go. So right now, right, the stop losses are identifying, right, this recent high point here. But actually, I'm going to move my stop losses up to here. And so as you can see, what I'm doing here is I am planning out the trade. So actually, let me play this back here. So I'm planning out this trade before executing a live order. So none of this is live. And you can tell because the flags are translucent, right? So that tells you that these are not live orders, not yet. So you actually have to execute or hit the execute button, and then it executes it as a live order, right? So that way you don't have to scramble. And Jeremy actually has a funny story here of where, you know, we were watching traders, or this one trader trade, and he would actually execute his stop loss way out, you know, in space, and his profit targets way out in space, and then scramble to move those live orders where he wanted that stop loss. And, you know, obviously that's a fairly dangerous, you know, situation, you know, if you put your stop loss way out in space, especially when you know how fast markets move these days. You know, maybe back 20 years ago, it wasn't all that dangerous, or even just 15 years ago, because the markets moved a lot slower there. But now if I hit the execute button there, right now my order is live, and bingo, we got filled. And you can see, right, my stop loss here, right, was placed exactly where I wanted it. And I'm going to speed this up here a little bit. And my profit targets were placed exactly where I wanted them, right? And again, you know, the whole point is, so the dynamic planner allows you to plan everything out with no live orders in the market there. So saving you from, you know, potential disaster, right? Trying to scramble to pull your stop losses in and pull your profit targets in there.
That's where those games, or those people that are not Twitch gamers, as they call them, right? You gotta. That's something that I've never been good at is fast reaction time with the mouse. As I get older and older, that's the reaction time seems to get slower and slower.
Definitely. Yep. Yep. My mouse movements aren't as refined as they once used to be there. Yeah. So yeah, so let me kind of open this up here. So this next part here, well, let me stop this. Bingo. So you can see when that first profit target got hit, the stop loss jumped down, and now that stop loss is trailing after the first profit target got hit. And actually, I'm going to pull this down here a little bit more, right? And again, you're not locked into BlackBird managing your orders. You always can override. So yeah, so if I wanted to, I could pull my stop loss back up there, and I can override what BlackBird is doing. And then once you're ready, here we have on the side here, we have an order monitor panel here. And when you're ready, right, we can see the auto trailing is turned off there for the last stop loss that's remaining there. And when we're ready, you know, you can turn the auto trailing back on, and then there you go. You can see BlackBird just moved, right, that stop loss back down, following those trailing rules that I have built in here. Yeah, so let me kind of show you how that's all done. To once again, you know, what I'm emphasizing here is the flexibility that's built in to BlackBird. So you dictate how exactly you want your stop losses to trail there. Right. So, right. So here's the name, right? I just called it trail the bar lower high, you know, with a 2-tick offset after the profit target A is hit, right? So the trigger is when an order status has changed, and Which order? Well, we're looking at the profit target. And so once that profit target's filled, then the action is to do the trailing part here. And so instead of the stop loss just following the most recent bar high, right, as the market goes down, I actually told it, you know what, look back 2 bars there and follow well, we're in a short trade here. So look back at the last 2 high points and follow the highest high of the last 2 bars, right? So you can dictate, you know, how many bars you want to look at. So you could say, all right, follow the highest high of the last 4 bars, right? So you're in full control here of how you want to manage the trailing of that stop loss there. And of course, the same with the tick offset there. You know, if I want to, I could put a 4 tick offset from the bar high, you know, so on and so forth there. And there we go. So we finally got our, actually no, our stop loss did get hit. Yeah, we had a little bit of a pullback there and that stop loss got hit. Yeah. Now, normally I am doing a workshop here for BloodHound on Thursdays here. And then tomorrow I'm doing a live workshop, and I do these every week. So every Thursday and every Friday, I do open workshops. They're open to the entire public, so you can come in and ask questions about BlackBird and BloodHound here. So let me kind of show you that. So definitely you're going to have more questions here, I'm sure, than what we have time to answer. So if you go to sharkindicators.com, right, this is our homepage, and then go to support, and then you can go, second one down is the trailing workshops, right? So these are the live open workshops here that I do every week. So you can see BloodHound is today on Thursdays. Obviously I didn't do one because we're doing this, but tomorrow, if you have questions about BlackBird, then just join me tomorrow in tomorrow's workshop there. And right there's the registration links. So each workshop has its own separate registration links there. So if you're only interested in BlackBird, right, you only need to register for BlackBird there. Yeah, and so tomorrow in the workshop, you bring your questions for what can BlackBird do for you, and I'm there to just answer your guys' questions live. So, all right. So with that, time's kind of running out here, so let me pass it back over to Jeremy to wrap it up.
Hey guys, thank you so much for listening in. I just wanted to impress upon you again, this, like what our software lets you do is customize almost in every possible way that you can think of your trade system and execute it any way you'd like, right? So fully automated, semi-automated, however you want to mix and match it. The thing that we use to impress upon people is, if you want to take it one step further and you want to vet your trade system, you actually have to backtest it, right? And if you really think about it, in order to backtest it, you need to tell the computer when you're going in, when you're going out. That's an auto trader, right? And so that's what our tools ultimately let you do. So I'm just going to bring up our website again. It's at sharkindicators.com. And if you want to learn more about it, as Zach mentioned, there's a workshop happening tomorrow. These are just like open classrooms, basically. You just jump in, ask any question about the product. There's also a free trial, and you can just sign up here, download it, install it. You do need NinjaTrader, yeah, that's basically how you get started with us. So hopefully, if this is the first time you've seen us, you've got a pretty good idea of what we do and what we offer. So I think with only a few minutes left, that's pretty much the end of what we have here today. I did have a question or two for the audience though, and I did want to find out, actually. I'm just dying to know kind of where like the type of audience that we have. If you guys don't mind, how many of you guys actually trade with NinjaTrader, and how many of you guys do not? For those of you that do not trade with NinjaTrader, what platform do you use?
Or you could put the name of the platform in there. Actually, yeah, we'd be curious to see what platforms you guys are actively trading on.
Yeah. So let's see what we got here.
All right. So we do have a yes. So we do have a couple of NinjaTrader. Yeah, NT8. Yep. Yeah, a couple of NinjaTrader users in here already.
I'm actually curious of those of you guys that are with NT8. I've tried NT8, like NinjaTrader. Have you tried their web product, Tradeovate? Have you guys used any of that before?
Yeah.
All right. Yes. Okay. How about TradingView? How many of you guys are using TradingView charts for your charting? Whether whether you use them regularly for your main trades, or you just use it maybe just to check the market.
Yeah, definitely have some TradingView. Yeah, I'm sure at least people have checked it out. Maybe, yeah, have definitely used it for some element of their trading. Yeah.
Okay. One very last question. How many of you guys trade with prop firms?
Yeah, prop firms are, yeah, you kind of seems to be the big rage right now. Yeah.
Yeah, we got a few, absolutely. Okay.
Apex. Yep, Apex is the big one. We're one of the big ones, yeah, for sure.
Okay, yeah, just do a little bit of market research that we're doing here and sneak it at the end of our presentation. But I think our time's up here, so.
Right. Because again, our goal is to make, professional tools, software for traders there. Especially again, you guys know how fast the markets move these days. And so, the time is going to come where discretionary trading is just so fast, especially if you're a day trader, right? Swing trading, definitely you got more time, but if you're a day trader, the time is going to come where you won't be able to trade without software, because the markets are just moving faster and faster these days. So,
Well, actually, before I get cut off, I do have one last question. How many guys do day trading versus swing trading versus long-term investments, or all? Do you do all of them? All right, we got some that do all. All right, okay. Well, it seems like the majority do all.
Yeah.
Yeah, okay. Once you're in the markets, you're in the markets, right?
Right. Why limit yourself? Yep.
Right.
Do everything you can do to make some money in the markets.
Okay, I got Anthony. I don't know if you're gonna kick me off here, but I got one more question, and I'll just sneak this one. How about cryptocurrency? How many of you guys trade cryptocurrency? No crypto.
Total. Yeah. Yeah.
Okay.
No Forex.
No crypto. Okay.
Yeah. I didn't mention this, but BlackBird is set up for Forex as well. But yeah, it doesn't seem like there's a lot of Forex traders. So usually that doesn't get mentioned. But BlackBird is set up for Forex as well.
Yeah. Yeah. Exactly. I think it doesn't really matter what instrument you trade. It's an NinjaTrader, and therefore our software, right? So as long as you can trade stocks, and I don't know, actually, Zach, correct me if I'm wrong. Can you actually trade crypto right from NinjaTrader? I do know they were pushing that for a while, but I don't really know how far they got with it.
The futures you can, yes.
Of course.
Yeah, the new futures instruments, but I don't think you can trade Bitcoin directly. I could be wrong of that. It definitely is coming now that right, NinjaTrader was bought out by that crypto exchange.
Yeah,
it's definitely coming. We know it's coming, but I don't think it's quite directly implemented in yet.
Yeah.
So
they've been a little hush hush with their plans, so we don't really know. But
yeah.
Okay, folks. You
Yeah.
got anything else, Zach, you want to bring up, or?
Let's see here. Now, just a reminder, guys, I did put the link to the workshops page in the chat there. So again, if you do have, more BloodHound questions and BlackBird questions, definitely register for the, those are Zoom workshops. So you're just registering with Zoom, so you get the link so you can join, when the workshops are there. So yeah, so join me and get your follow-up questions answered, in as much detail as I can, provide for you. So yeah.
All right, thank you, Sharks.
Yeah.
Anything else?
Anthony, for giving us extra time.
Okay.
No problem, guys. That was good. You got the audience involved there. Oh, another great presentation by the Sharks, so thank you so much. Automation never looks so intuitive. Everyone, you'll find their special offer in the chat now. And thank you so much for sharing how you guys are navigating this changing market, and we really appreciate your technology. All right, thank you so much. Back to the basics, done brilliantly by Tim Racette of Emini Mind will teach you a minimalist 1-minute chart strategy for day trading the E-mini futures. That's right up my alley. No fluff, just sound setups, risk management, and simplicity. All right, we're ready to hear it, Tim. And I got to make you a presenter. But you're on mute as well.
Hey, thanks. Yeah, let me get my screen set up here and we'll jump right in. Can I get a sound check quick?
Tim, can you say something again? You cut out for a second.
1, 2, testing.
You're
1,
good
2,
now.
3.
Yeah, you're good now.
Okay.
We have like an extra 5 minutes. I think we started a little late.
Okay. Yeah, I can. We can rip through things here and finish up on time. So, thanks for tuning in, everyone. Did you want me to jump right in, or do you have anything else to let viewers know?
It's all yours. I'm interested in seeing the strategy myself.
All right. Well, thanks for tuning in, everyone. We are going to dive into trading the E-mini futures. What we're going to talk about today, I'll pull examples from the futures markets, but if you do trade other markets, the ETFs or I suppose even Forex and crypto, you can use the same strategies and apply it to whatever market and even whatever time frame you're trading. We're going to talk, as the name implies here, the title implies, day trading the E-mini futures using 1-minute charts. But again, we'll be able to transpose things, and you can take bits and pieces from what you're going to learn today and apply it to your trading. So I will do my best to keep an eye on the chat window. So if you do have questions, you can drop them in the question box, and I'll try and answer those as we go. So you're not just, I don't just leave you hanging there and we go to the next slide. So let's dive right in and start talking about the futures markets. So we're going to learn a couple of things today. We're going to kind of quickly move through the basics and then get into a little bit more intermediate and advanced concepts. So we're going to go through kind of 3 trading techniques. We're going to talk about some of the basic candle types that are likely to get the most momentum without necessarily needing a whole bunch of indicators and tools and things on your chart. We're going to talk about what I call the high of low bar and low of high bar specific entry, HLB, LHB for short. And then we're going to talk about what I find the most important part of kind of the trade management is how you trail your stop. Whether you're using a fixed target, a trail stop, a percentage trail, there's a whole bunch of different ways you can go about managing the trade. And there's a couple really, really good ones that I've used for probably 15 years now that I find work the best. So I always like to just toss in there that the reason we're doing this, I would argue for most folks in the room, is to kind of build a flexible and financially free life. If you're on the West Coast, you can trade in the morning and then go into a typical 9-to-5 job and maybe build a little extra supplemental income on the side. If you're retired, maybe you just are very interested in the markets and the puzzle that the markets are, and so you enjoy trading, and you again would like a little bit of supplemental income on the side. And so building trading into our lifestyle is super important so that we can do it for the long run, build a sustainable process that we can then continue over and over again, for years to come. So whether you like to golf or bike or hike, or you got grandkids, whatever it is that you like to do, it's always important to kind of come back to why we're doing this and structure your trading and your trading process, the way you go about learning and kind of testing and live trading, and doing it in a way that's sustainable over the long run. So you could be a part-time trader or consider yourself a full-time trader, but I'm in the camp of being very focused in the morning, the New York session open. That's when I spend most of my time trading for a couple of hours, and then get away from the screen and do the things that you want to do. We're not trying to replace a 9-to-5 job with another 9-to-5 job, or as most would argue, for any of the entrepreneurs out there, or if any of you that have run your own businesses, when you're a CEO, an entrepreneur, learning something, starting something for the first time, it's not 9-to-5. It's 7 to midnight, and then you do it all over again the next day. So the goal that we don't want to lose sight of is we're trying to create flexibility in our lifestyle so that we can, in some ways it's adding more money that allows us to give the flexibility, but also freeing up our time. So a little bit about me. I recognize a handful of the names in the attendees here today, but if you're new to hearing about myself, my name's Tim Racette, and I blog over at eminimind.com. I guess what started as a blog in 2010, 2011 has kind of evolved into, I guess you'd call it a website that it is today. I grew up in the Chicagoland area, so I had a lot of access to traders and trading platforms. Tom Sosnoff, Thinkorswim was kind of coming of age in the early 2000s, and a lot of those guys and gals, had just a lot of great ideas and trading minds, and there were trading meetups and all kinds of, accessibility to the markets. You got the Board of Trade, you got the Mercantile Exchange, all kinds of opportunities for, a young person to get involved into trading. So that was a pretty big benefit to me. I had access to a friend's dad's brother who was down the trading floor, and so a buddy of mine and I got to go down to the trading floor and spend a little time down there, and then those guys kind of shooed us off the floor and encouraged us to, shift our focus to the computer. Obviously, computerized trading has been around for a long time, but certainly in the early 2000s, things were really starting to dry up in the pits, and it was a lot more online computerized trading. So I've been trading since about 2006, a little before that, but for all intents and purposes, we'll say 2006. And I've had the pleasure of speaking at a number of traders expos and money shows and things like that. As I mentioned before, I primarily day trade the futures markets, specifically the E-mini S&P, but I also do some swing trading. I actually got started in swing trading kind of like 2004, 2005. And I wasn't super active at that point, but that's kind of how I learned to trade, was from swing trading daily bars. And then in 2006, I started to take it a little bit more seriously and add in day trading and kind of work my way towards becoming a full-time trader. So I like to spend a lot of time outside and getting away from the trading screen. If any of you have had kind of light bulb moments or things that have just clicked, a lot of times those solutions come when you're not in front of the screen. You could be going through charts and reviewing your trades and going through your trade log, and it's after market hours that a lot of those kind of light bulb moments would happen for me. And so when I'm out on a bike ride or a hike, or you just go walk around the block, your brain's still working, and there's a lot of processing that goes on to kind of connect the dots. And so yes, time in front of the screen is important, and repeated daily reps, day after day after day, to get that repetition, looking at the market, settling in on one market and one time frame to really narrow your focus so that you can be extremely diligent and focused. But don't be afraid to get away from the screen. Sit down and read a book that's completely unrelated, seemingly unrelated to trading, and you'll find things in there that directly relate to trading. Or you have you finish your trading in the morning and you go for a walk around the block, and all of a sudden, some things start to click. I always like to start my day with just reading, a page or two out of a book. Again, it doesn't have to be a trading specific book, but just to kind of get the creative brain juices flowing and kind of create a routine around getting in the right headspace for trading. And I find that, reading is a really good way to just kind of get your brain synapses flowing versus, just, scrolling or even just reading, news stuff. There's a lot of benefits to kind of getting lost in a book and let your brain kind of creativity start to flow. So that's a little bit about myself. Like I said, I'm from the Chicagoland area. Now I live out in Scottsdale, Arizona. I went to ASU for college, and then moved out here shortly after that when I started trading full time. So let's dive into some of the kind of my chart setup. Then we'll get into the basics, and then quickly run from the basics into some of the more intermediate and advanced topics here. So I use Thinkorswim charts. You can use whatever platform you want. As we were just talking about, or they were talking about in the last presentation, Ninja Trader, great platform. TradingView, their charts are really streamlined. I use Thinkorswim for my charts, and then Tradevate for my order execution. Tradevate's been bought by Ninja. Ninja's been bought by Kraken. A lot of these platforms have kind of been merged or come together. Thinkorswim was bought by TD, and then they were bought by Schwab. So, but the only reason I use Thinkorswim is that's what I started on. I got to know Tom and Dan Kaufman and a bunch of those guys down in Chicago, and I started trading on Thinkorswim, and I've always traded on I've always used Thinkorswim for charts. For futures, the active trader on TOS is okay, but they're really not. That's not their focus. Tom has another platform, Tasty Trade, that's more options focused. They do have futures, but whatever platform you're trading on already and comfortable with is most likely the best one for you. If you're completely new, Tradevate is a great, simple trade ladder. You can set up bracket orders very easily and just one-click order entry, pretty basic, and it also looks really clean. Before that, I've used Infinity Futures for many, many years, also another Chicago-based platform, also another platform bought by Ninja, and then they kind of dissolved it. So that's kind of my general trade setup. I've got two monitors, nothing fancy, my charts on one, and then my trade ladder, and I'm kind of old school. I use Excel for my trade log, so I've got those two on my other monitor. So this is my basic chart setup. I'll go between 1 and 2 charts, and then I can toggle time frames pretty easily as well. So nothing too fancy. Now, when we're talking about understanding market structure, a lot of it comes from looking at the basic chart. We're going to talk about candlestick charts. You could use a bar chart, really old school, but you don't need a whole lot of indicators. If you think about, we're in NFL football season. What do you do every year at the start of off season? You go back to the basics, and you focus on blocking and tackling and the basics of catching a football, passing the football. And if you can master those basics, then you get to a point where you don't even have to think about the execution. And if you've read any of Tony Dungy's books, he talks a lot about his coaching style and just building in the basics to the subconscious so that, you know, you don't have to think, you can just act. What does Rooster say? Don't think, just do. And so you want to be able to have your setups ingrained in your head, know exactly what you're going to do, so that you can click on your trade ladder and you're not hesitating and, you know, watching trades pass you by. So from a candlestick type perspective, we're going to focus on two today: the hammers and the inverted hammers. And a hammer is just a small body with a long tail. I like to quantify it as the body should be about 1/3 the size of the whole candlestick. Doesn't really matter if the candle is filled or open, or in this case, red or green on Thinkorswim. You could also have the open and the close the same price, and you know, it's more of a doji, but it still kind of quantifies as a hammer. So we're going to be looking for hammers and uptrends, and if we turn the chart upside down, an inverted hammer is just the opposite. The body is going to be about 1/3 or less of the entire candle, and it should have a tail or a wick sticking up. The hammer, the tail is going to be sticking down. The inverted hammer is going to be sticking up. And again, it doesn't really matter if it's a red, kind of a bearish body or a bullish body, but we're going to be looking for those inverted hammers in the context of a downtrend. And these are really powerful because they signal price rejection. If you think about it, you know, this is a 1-minute chart, but I purposely left off the x-axis. This could be a daily bar. This could be a 15-minute bar, an hourly chart. At some point in that candle, so in that 1-minute inverted hammer, it was a big green bar. But by the time the candle closed, price retraced and settled back down towards the bottom of the candle. So price went up in an inverted hammer and then was rejected. It could be, you know, it doesn't really matter the reason, but, you know, for most folks, they're going to relate that to some kind of resistance above us. Could be a prior day's high or a gap fill or the early high from the morning. It could be any number of things, pivot points, market profile. But price went up, was rejected, and turned around. And so when we talk about looking for entries, we're going to be looking at the break of that candle, break of the hammer's high or the inverted hammer's low. So the high of the low bar relates to a long above a hammer high. So getting long, 1 tick for futures, 1 tick above that hammer's high, you're entering above the high of the low bar in the pullback. So the market's pulled back a couple bars, forms that hammer, and you're getting long above the high of the hammer candle. And the flip side then is going to be the low of the high bar, where you're getting short below the inverted hammer by 1 tick. And that inverted hammer, we're looking for it to be the high in the bounce. So if we're in a downtrend, once we get a little bit of a lift or a retracement, a bounce to the upside, that's when I'm looking for that inverted hammer to get in on the bounce or a pullback to the downside. So hammers, long and uptrends, inverted hammers, going short and downtrends. And when I would swing trade, I still swing trade. The strategy that I began using and continue using till this day are looking for strong stocks to pull back with some type of hammer pattern and getting long above the high of that low bar. And, you know, for swing trading purposes, your best environments to swing trade are going to be lower volatility situations where you're in strong uptrends, you know, like we've had in the last couple of years. When you get into very wild sideways markets, swing trading it's harder to stay in those trades for as long. Sometimes you get, you know, downtrends that can have very strong moves, and so, you know, taking shorts or selling in a downtrend can get some very fast price movements. but you know, the concept applies whether you're swing trading, day trading, hourly bars, 1 minute bars, and really whatever market you're looking at. So from an ES specifically, the stop that I like to use is 3 points on the ES, and when I'm looking for well, we'll get to that in just a second. So 3 point stop, 6 point target is the framework that we're going to talk about here for the ES. And it's helpful to, especially for a newer trader, to have a fixed target so that you can, it's almost like you have something to work for, and you're getting some points on the board. And when you can get some reoccurring quick wins, it can be motivating and help to just kind of continue that cycle of showing up day after day. If you don't have a target and you were to only trail your stop, you can get some really big winners. But the thing to consider is, how often are you able to trade? If you're only trading a couple days a week and it might be sporadic, then taking smaller profit targets is going to give you more consistency. If you're there 5 days a week, every single day, you never miss, and you're very diligent with taking every valid setup that comes your way, then you can get by letting some of those medium-sized winners come back and maybe stop you out in hopes of catching the larger winner that is to come. And so if you're more present, then you can get away with larger targets. But for most folks, and for simplicity's sake, 3 point stop, 6 point target is a really good framework for trading this style, if you will. So looking for getting long above the high of the candle of the hammer, and then 3 point stop. Sometimes the stop is below the tail. It doesn't have to be. Just keeping it simple with a 3 point stop, 6 point target is a really good way to have things set up. You can set your bracket orders up like that, and that way, if you place your order, target goes out, stop goes out, you could literally sit on your hands and let the trade do its thing, and you know that you're at least going to have a 2-to-1 R multiple, and there's a couple other things that will do to increase the odds of turning it into a winning trade. And so for the ES, I know a lot of people like trading NQ. In this type of environment, it's not a big deal. But when the market gets moving, boy, you do see a lot of slippage in the NQ, and just clicking the trade ladder alone, price moves so dang fast on that chart and the YM that it can be very difficult to place trades and manage trades. So I know some people are intimidated with the ES because the larger tick size, but that larger tick size really helps slow things down and allows, it's a lot easier to place trades and manage trades on the ES. And now in the last 3-4 years with the micros, it does allow you to be able to practice and learn on on the micros with basically zero risk, or very small risk. So 3 point stop, 6 point target, long above the hammer, short below the inverted hammer. And now the most important part is the trailing stop. And so what I like to do is trail swing highs and lows. So if we're long, keeping my stop below the most recent swing low is really helpful. And if I'm short, keeping it above the most recent swing high. So there's kind of two ways you can look at it. I've got a little diagram here. You can count the swing low as just the candle that sticks down. And then when you break above the high of that candle, that forms kind of the official swing low. Or you can wait for a new high to be put in. So not just a break of the candle's high, but a break of the kind of market structure high in the last few minutes. Either one of those is fine, but the idea is that the stop's going to be moving up underneath the swing lows as the trade moves in your favor. And again, this is Works great on daily charts as well. So one way to help tighten your stop if the trade gets moving really quickly, if you get in a trade and it goes against you, your initial stop is going to have you covered. But what happens if the trade, you jump in the trade and it shoots to the moon right away? Well, then your 6-point target's got you covered. If you get in a trade and it starts to go your way fairly strongly, then what you can do is switch to trailing each bar. Instead of waiting for the pullback and trailing the swing low, you can trail each bar. And that just means when you get a candle that closes, you move your stop. Let's say you're short in this example, you move your stop above that bar that just closed. And then when the next candle closes, you move your stop above that candle that just closed. I like to wait for 3 candles to close. If I'm short, 3 red candles. If I'm long, 3 green candles, just to give it a little bit of wiggle room. For anyone that's traded, the ES, especially the ES, you've noticed, you probably experienced, if you move your stop to break even too soon, you're going to get taken out. And then after chopping around for a minute or two, it shoots to the moon. And the nice thing about trading with this style, with hammers and inverted hammers, you're kind of getting in with the momentum. So you have a very good chance that it's going to go immediately and you're not going to take much heat on the trade. But it's still important to kind of tighten your stop with the momentum and not just let your stop be too far away and then just give up or not be able to reduce your risk on the trade. So after 3 breakout bars or breakdown bars, that's when I like to tighten the stop. And using a 6-point target, a lot of times what happens is you're starting to trail your stop and then your 6-point target gets hit. So having kind of the bracket, if you will, of the 6-point target, 3-point stop, and letting the trade work its way to that 6 points, trailing it on the way. Not every trade is obviously going to make it to +6, but most trades aren't going to be a full -3 either. So then that kind of brings your average winner up, if you will, closer to 0, and helps keep that R multiple actually a little bit larger than 2 over a lot of trades. So another kind of context point or place to be looking for trades is going to be at the a 21 exponential moving average, and you can use a 50% retracement or a halfway back. Those are kind of the only 2, I guess, traditional indicators, if you will. I do find that the 21 EMA is super helpful to kind of visually look at the chart quickly and confirm or deny the trend. So if that 21 is kind of moving down at a 45-degree angle, you have a pretty clear visual on the downtrend. And we can look at the chart in itself, just identifying lower lows and lower highs to classify a downtrend on whatever time frame that you're trading off of. But adding the 21 can be a helpful gut check, if you will, just to make sure that, oh, I'm interested in placing this trade. And if we were to look at the very left side of the chart, the first 10 bars over here, the 21 is kind of going straight sideways, and you have these 2 hammers and inverted hammers back to back with the tails opposing each other. One's pointed down, one's pointing up. If you're thinking, oh yeah, I'm going to get long above this hammer, or I'm going to get short below this inverted hammer, when you're moving sideways like that, it can be a more dangerous zone to be trading in. So you're much better off waiting for the market to sell off a little bit and then pull back to the 21 EMA. So that's, the example here, pulls back to the 21, also happens to be the kind of halfway point. The 50% is not a fib number, but you can use a fib tool to kind of get a general idea of where that halfway point pullback is. That way you're not just selling lows, selling the breakout and chasing a move. you're kind of letting it pull back and being able to get in at a much more likely kind of reversal point. And especially that 21, you know, Linda Bradford Rashke's always talked about, you know, her years of trading, buying pullbacks to the 21 in the daily chart. And, you know, she's a really great trader and been around for a long time as well. And that's, you know, the 21 is very basic and it can be really helpful intraday as well. So you don't have to use these kind of indicators, if you will, but they are very helpful to really confirm the trend, because you can find a lot of hammers and inverted hammers throughout the, you know, first 2 hours of the day. And I will take counter trend trades, meaning I'll go short at highs and long at lows, especially if we're range bound, and especially in the context of making double tops and double bottoms. But you're going to have the most success, at least at first, trading with the trend. And so that's where, you know, the 21 and halfway back come in handy. So another example of a halfway back would be, you know, you're moving up, you have some higher highs and higher lows, you pull back to the 50%, you get a hammer, and you know, you touch that 50% and start to bounce, you get that hammer candle, and then you can get long above the high of that low bar. From a counter trend perspective, looking for things like double tops are really helpful. It could be a high from earlier in the day or a low from earlier in the day for a double bottom. The other thing that you'll find really helpful on the ES is, so these two horizontal lines, that's the first 30-minute high and low. I will always mark those 2 points, so 10 o'clock Eastern time. Once we get to that point, I'll just put a line at the 30-minute high, another line at the 30-minute low, and that establishes an opening range to the point where if you look, you know, go print out 20 trend days and highlight the first 30 minutes. Well, on a trend day, we're going to leave the first 30 minutes and typically not look back. You know, by the end of the day, if we trended all day, the first 30-minute range is going to look really tiny in relation to the whole day's range. Now, on the flip side, if we're range bound and we're moving sideways all day, if you highlight the first 30-minute range, usually we spend a big chunk of the day within that 30-minute range. And so that way, by identifying those high and low, if we immediately, you know, it's 10 o'clock Eastern time and another 10, 15 minutes go by and we have continued higher, let's say, and maybe we pull back and we touch the 30-minute high and then we go higher again, another higher high, higher low, you know, there's a much better chance that we're going to continue to trend, and I can take trades with the trend. And conversely, if 30 minutes go by and then another 5-10 minutes go by and we fall back down, like in this case, you know, you form a double top at the 30-minute high and then you fall back into the 30-minute range, you want to be extremely careful in the middle of the range. I typically will not take any trades right in the middle of the 30-minute range, because when we're range bound, we don't stop in the middle. We go from highs of the day down to lows of the day, back to highs of the day, or we'll just say that range. If you're trading the morning, it really doesn't matter what the trend for the entire day becomes. We're just focused on the trend for the first 90 minutes or 2 hours. And so those two lines are super, super helpful in determining, are we likely to continue trending for the day or just kind of fizzle out and be range bound. The last 2.5 weeks have been pretty slow and exceptionally choppy and range bound. Sometimes when we go into new highs, it actually makes it more challenging to trade, because a lot of the times we'll gap, and that's where most of the move occurs, and then we just form these, you know, smaller spinning top days, or, you know, kind of choppy intraday ranges. Even though the market makes a move up, most of it occurred in the gap before the bell, and then we just kind of fizzle out. So hopefully now that we're through the Fed meeting that just finished up yesterday. The next 5 weeks or so should hopefully free up a little bit more movement. And then if the government can get back open, then we'll get those news announcements coming back out that we would typically have, pre-market, usually 30 minutes after the bell, and those can then act as catalysts to kind of get the market moving again and help kind of provide a lot more intraday trades. So 30-minute high and low, 21 EMA, halfway back, those are all really helpful indicators. And then just really be diligent to not take trades right in the middle of the 30-minute range. And if you can just focus on trading with the trend and not taking trades when you're stuck inside the 30-minute range, that will really help eliminate unnecessary losing trades. And the winning trades will come. The trending days, when you're trading and the market is getting follow through, it's trending, those two words can kind of go hand in hand. We could have a range bound day that gets some strong trends, an uptrend for 20 minutes, a downtrend for 20 minutes, another uptrend. And so you're getting follow through, but overall on the day, it's not necessarily one giant uptrend, but that's okay. We just need some movement to get us, allow us to get into the trade and then get our 6 points and then move on. And so if you can limit unnecessary losses, then the winning trades have much more kind of compounding effect. If you get chopped up, like this week and last week, if you overtrade when there really hasn't been a lot of great opportunities, especially with Tuesday, Wednesday, the Fed meeting, then you end up just kind of digging yourself a hole. And then next week, if you have a great week, all you did is fill the hole back in. So it's almost more important to be able to identify when to not be trading and when you should be sitting on your hands. And the more you can clarify your setup, the entry that you're looking for, get that criteria down to like a Post-it note or a 3x5 note card, or print out a screenshot of, 2 or 3 of the setups that you're looking for and really focus in on those. That can really help to, take a few losses and get rid of those and add maybe a winner or two to that column. And all of a sudden you can go from being, negative or break even to having a positive week. So to kind of summarize all of the things that we've been talking about here, the entry for the ES, 3-point stop, and we're looking at hammers and uptrends and a pullback to that 21 EMA, also could be pulling back to a halfway back. And if you're going to trade counter trend, then double bottoms, a hammer at a double bottom is a really strong pattern. On the flip side, for the inverted hammer, you're going short. You're looking kind of for a bounce to the 21, a bounce to the halfway back, and then bounce to a double top. And then 3-point stop, 6-point target. And then when you get into the trade, instead of just sitting on your hands and letting either the stop get hit or the target get hit, you can tighten your stop below a swing low for a long or above a swing high for a short. And then if it starts to move, 3 green bars in a row, that's when you can go from trailing swings and you can switch to trailing each candle. The other option is to not have any kind of target and just trail. And you can either trail swings entirely, and like I said, you can catch some really big winners that way. Trailing each bar can also lead to some really big winners, but it's very effective to have kind of a sandwiched bracket where you have a profit target and the stop. You can even set it up to go to break even at a +3. And so the more hands-off you can be in the trade and know exactly what you're going to do. If the trade goes against you, that's easy. Your stop takes care of it. But if it starts going your way, you want to have a plan so that you don't just panic and hit flatten or close the trade for 2-tick profit. Or maybe you get into a trade and you take a little bit of heat on it and you start to kind of micromanage things and think about it more, and you're like, yeah, I don't really like this trade. As soon as it gets back to break even, I'm going to close it out. And then you exit, and then what does it do? It'll shoot to the moon. So having a plan for exactly how you're going to manage the trade so that those trades that you do get into, you don't exit for just a couple of ticks when they can easily be 6 points. A 6-point move on the ES is very small, especially for, or even in this market environment. So it's very attainable. It's like getting a base hit, if you will. You just got to get on base, and just like the Moneyball adages, it's very effective to kind of build some repetition into your trading so that you can repeat the process day after day, and that's going to be more valuable than just randomly hitting some home run and then not being able to recreate that strategy or tactic at all, and then wondering, oh, how'd I do that? No idea. I guess I just got lucky. So the repetition is going to be really, really helpful. So that's what I got for you today. I'll put my email on the screen here, Tim@eMiniMind. If you have questions, you can also always send me an email. Happy to chat. And I hope you have a great rest of the day.
Thank you so much, Tim. Thanks again for being here. We really appreciate it. That was a clean and powerful presentation, and I really appreciate your methodology and sticking to it. It's something we all need to do. Check the chat for access to Tim's strategies and more. If not, Tim, if you could please put any links inside. And remember, you could email Tim at tim@eminimind.com. Thank you, Tim. All right. Next up is Dan Gibby from Master Trader with over 25 years in the markets. Dan will break down classical patterns like head and shoulders, pennants, and more, and how to blend them with modern bar by bar and void analysis for high confidence setups. So let's welcome Dan. Dan, are you there?
Yes, I am. Thanks. I'm trying to share my screen. Did you give me controls?
Yeah, it's on me.
Well, it says share my webcam, but it doesn't say share my screen.
All right.
There you go. There we go. Now. There we go. All right. Yeah. Awesome. Thanks for the intro. We're gonna different than what I've done in the past of just a specific topic, because I'm going to spend time to take a lot of what many of us have learned many years ago. I've been trading, for 45 years, but full time, close to 30 years, and I've read over 100 books. I've started with Nissan candlestick patterns. I've read Edwards and McGee, the encyclopedia, and there's a lot of these patterns that people get caught up on, and they're like, oh, I remember I read in this book this name or this pattern is supposed to mean this, and they don't put it in the context of what really matters, which is price action, multiple time frames, support and resistance, what's really going on in these classical patterns. So that's the magic that I'm going to bring to you today. Is yes, I'll show all the popular classical ones, but I'm going to put meat and understanding around those classical patterns so you don't get caught up in a misleading name. Instead, you'll be able to recognize they're all, well, they're either consolidation or continuation or breakout patterns. Let's just put them into those three things. But the setup, this is our technical approach at Master Trader for trading anything that moves. This is what we do every single day. I can take my 15-inch laptop, travel anywhere in the world, fire it up, And that's the beauty of our business, because I can find opportunity anywhere on my laptop, and this is the cheat sheet right here. Whatever I'm trading, whatever time frame, I'm looking for a compelling setup. Priceoid means it has room to run, and I'll show you with other examples. And so price is king. And then we use bar by bar analysis, both for the setup, the entry, and trade management. And you'll see that. So we have a picture. Now, where is that picture in the trend? Multiple time frame analysis. Is the picture on support? Is it showing relative strength or weakness to the broader market in the sector and some of the other major competitors? You know, volume and moving average to us is secondary. We could actually take them off our charts, but they tend to help speed up the analysis, and I'll give you examples of that. What are the market internals doing? Both for, if you're a swing trader, we have different levels, versus a day trader, we look at different levels, and that just gives us a heads up of things possibly being at a turning point. So the probability of your setup is going to have different success rates depending on what the broader market and the internals are doing. Yeah, my partner Greg says, you know, at the end, you know, we really should put these two up top, because without position and money management, trader psychology, which I just in a fun way say, you know, that's the nut behind the keyboard. Do you have the proper psychology to follow the rules? And the rules should be memorialized in your trading plan. What are you going to trade? How are you going to manage it? And that's what a trading plan is. These are just 9 beautiful, very simple candlesticks that we use this slide to say, this is just 9 examples of a bullish starting point. But as you saw on that prior slide, that's just the starting point. And see, I'm purposely not showing you the trend. I'm not showing you anything except these are all bullish setups. And then we overlay those other concepts. And obviously in a classroom setting, we're overlaying those concepts in a 20 module course that we call them thought building lessons, because that's what trading is really about. You apply your approach, your method, and you have a belief of what that pattern, that setup is going to do. And once we have a very strong belief, then we execute the trade and manage in between. So I just type up here, well, where are my classical patterns? I thought that's what we're talking about today. And the answer is, they're not here. They're not. None of these are classical patterns that you'll see in Edwards and McGee's book. Because as I said, there are breakout or consolidation or continuation patterns. And that's what we're going to get into. So the classical triangle patterns. So these are continuation patterns. But what I'm going to show you today is the understanding of price action in terms of supply and demand. What is going on in this consolidation in connection with the bigger picture? These 3 examples, the symmetrical means the price action is getting into this inflection point. So, what does this mean? Why are the lows getting higher, and why are the highs getting lower? Well, let's just put it in objective understanding of what's going on. It means that demand is higher. Demand is higher, so buyers are stepping up at a higher price point because they want in. But sellers are accepting a lower price and or short sellers entering at a lower point because they don't think it's going to get up that far. So that's what creates the inflection point. And these are typically continuation patterns. So my bias is to trade this in the direction of what? The bigger trend. So what's to the left? If I have an uptrend with a rising 20 and 50, then this should be a continuation pattern to the upside. And then I'm going to make it very clear in all these examples. I'm going to show you exactly where to enter. Now, the classical textbooks are going to just say, oh, you buy it when it breaks that declining trend line. And that, in our opinion, is exactly incorrect. We are going to buy when the price action and bar by bar analysis is saying that it's ready to break out, not a silly trend line. So this one's just a little different. The sellers it's still bouncing up to resistance area, but demand is rising. So that's what we call an ascending triangle. Descending triangle, continuation pattern in a downtrend. Just the trend line we say is meaningless. That a trend line is meaningless. We determine trend and trend change by objectively using pivot analysis. What's a pivot? It's where prices change, and we define it as 3 or more higher lows to the left and right for a pivot low, the opposite on a pivot high. All right, these are just some more flags, pennants, consolidations. We're not trading, we're not trading the trend line or breakout, same as the other. I'm not going to spend as much time on this. So let's just go to the charts, candlesticks, because then it's much more clear. But I have this spring here just to say, look, these consolidations, when they get tight, the arrangement of supply and demand is coiling, which suggests this continuation pattern. But we apply master trader strategies to everything. So let's look at pictures. This is a daily chart. I don't even care what it is, so I don't even give you the symbol. Our charts are this clean, red and green candlesticks. We use 3 moving averages to speed up the analysis. The blue is 20, green 50, red is 200. So it's just showing us short, intermediate, and long-term trends in a smoothing fashion. And then we see where our picture and our setup is, and I can see the trends are all up. So I have a consolidation and an uptrend. So of those pictures that we just looked at, which one does this look like? Well, you can see by my ascending green line here, dotted line, and horizontal red line, it's an ascending triangle. But am I trading an ascending triangle, or am I just trading a breakout in a strong uptrend? Now, I told you I would tell you how we define price void. Price void means for longs, look to left. Is there any significant congestion or resistance or overlapping bars to stop the bullishness of my setup? In this case, an ascending triangle breakout. That's a breakout trade. Looking to the left here, I would have to look at a weekly chart or more data. I see nothing to the left, nothing. So this green bar was a closing breakout. So we buy over the high of that closing breakout, stop under these 2 bars, and we manage in between. Simple. What is these are ascending triangles, but actually in downtrends, not an ascending triangle in an uptrend. Well, I have conflicting. So that these things got killed. This was a climactic buy setup on both of these. They're probably the same sector. And it's rebuilding. It's rebuilding. But remember what I said? Demand is getting stronger because the lows are higher. Closing breakouts, buy over the high. This is a price void because it's a momentum move down. There's not much congestion there. This one's similar. The lows are getting higher, horizontal resistance, closing breakout, price void. And when you see these notations, these are closing trades. We have 3 different advisory letters at Master Trader, and we have Telegram channels to give them new trade ideas throughout the market day, trade updates. You can be anywhere in the world and follow our trade updates. And then in members area, we also have a spreadsheet of all open and closed trades. So everything we do is transparent. Go look it up. So this is a closed trade, and we always give the stock or option trade, the symbol, the date. But what's important is we give the technical setup and we give trade management. So we don't just say, you know, buy this, sell this, and here's a stop. We tell you why we're doing it, which is part of the ongoing learning. So this was a wide range breakout, you know, at the 20 here. This is bullish price action, another kind of ascending triangle. And I have a void. Yes, this is a V top pullback, but I sometimes refer just to candles and support and resistance as football players. So count how many bullish football players there are here going sideways. So that's in essence kind of eating up this prior resistance through time and diminishing in significance. So once this breaks out, my bias is it's going to come through this. Unless stocks are at all-time highs or an IPO, there's always going to be resistance to the left, and it's our job to assess the significance of that. Down, so just look at the moving averages. I mean, that's the first thing that my mind's eye caught. So notice how the 20 and 50 were flat. Now it's not today's subject, but if I were to take the candlesticks off this chart where we're only looking at these 3 moving averages, with 100% certainty, I would tell you, you had a short and intermediate consolidation in a longer term downtrend. And as soon as this 20 started to turn down, I know for a fact, because that's how moving averages are made. They take the closing price on that time frame, drop off the 20 periods ago, and paint a squiggly line. So now it's consolidating again. I have lower highs. I have major support here. That's what computer spits out, these pivots. Like I said, 3 higher lows to the left and the right, pivot low, pivot high, 3 or more lower highs to the left and the right. So this green bar could have gone out and broken out, and here's my price void. But now I have a bearish 180. Particularly if I get a 1 or 2 more inside bars here to give me more evidence that it can't bounce. I see no support on this time frame to the left. We would be shorting the low of this as what it says here in the title, a descending triangle breakdown. Short the low, stop the high. You know, sometimes we say it's the same but different. You know, a professional poker player, there are many similarities to a professional technician because we have the skills to assess whatever hand is dealt us. And what I mean hand is 9:30 a.m. I mean, I obviously start earlier with pre-market data and the futures, etc. But I don't care what's dealt to me on any particular day. I know how to assess it. The trend, support and resistance, multiple time frame, what's the pattern? What is, do I have a price void? Here's my downtrend. These see how these are just visual aids? I don't need them. I'm coming to the identical conclusion. I have lower highs. It's red bar, gap down, short under the low of this green bar, stop over here, manage in between. This one, we love trading options, buying them as directional trades, because they give us the benefits of leverage and limited risk. Of course, they have to be liquid, and that's kind of a big veto all the time, unfortunately, is I immediately go to the option table, and if they're liquid, tight spreads, then I look for an option trade. And if not, I just trade the stock alone. So this actually was Love, Southwest Airlines. And so we did what's called a bear put debit spread. So we're buying one put, selling another lower put strike to lower the cost basis of the trade. Bear gap breakdown from a massive, oh, that's actually a typo. You got to delete the word ascending. It's a descending triangle on the daily. Multiple time frames. I'm not showing you the multiple time frames, but I had a bearish weekly and monthly, weak sector, so that supports the bias of this descending triangle breakdown. Symmetrical. I got flat 20 and 50. So which way is this thing going to break? Well, this had a big move. Here's kind of my flagpole. Here's my symmetrical. And this is a weekly chart. So I'm showing you an example now of a multiple time frame. So my weekly is a symmetrical triangle. But look at my daily chart. My daily chart is what we call a bullish 1, 2, 3 continuation. So we buy over the high of these two bars, stop under the low, and the weekly has a void all the way up here to about $73. So that's my trade. The thinking's over. I have a high probability daily trade that I'm trading, and this is breaking out on the weekly, so it supports it. This wasn't an uptrend, broke down, rallied to resistance. This one's kind of messier, but and that's why, you know, we trade price action and setups. I don't need to put these trend lines on my charts to trade it, but I'm doing it to show you how they're consolidating. What I am trading on this particular chart, notice this ugly red bar closing at the bottom of all this. And then the next day it gapped up a little bit. We shorted under the low of the red bar, stop over the high of the red bar. Look at this big price void over here. Because of this momentum move up, my first target might have been this consolidation right over here, around 115. Second target, I don't know. I'm going to manage with bar by bar analysis. Let the stock tell me when it is ready to be trailed out. So this one we did a 10 lot. You know, you could have bought puts, shorted and added the money call spread. Yeah, this one we actually shorted a call spread because see this 127 right here. So we sell options when we have a pattern to suggest that it's not going to go over resistance or under support for a couple of days, and we say it's not going back up here in a couple of days, so we short the 127 calls. In this case, we bought then the 130s, so that's what's called a $3 wide bear call credit spread. As long as the stock stays below 127, the full premium that you took in is full profit. We actually took our money early here. We made 590 bucks, but if you held it to expiration, you would have made the full $900. All right, flag patterns. Bull flag pattern. You'll see the pictures here. It's a momentum move up that creates the flag pole. And then it's a counter trend. It's just roughly 30-degree counter trend consolidation. And that creates this flag. I was trying to find us a visual over here. And then as a continuation pattern of the momentum move up, we will be, whenever the price action tells us to do it, remember, I'm not buying over a trend line. I'm buying when the price action tells me it's ready to go. Momentum move. Here's my wide range breakout. Here's my 30-degree counter trend retracement. Here's my bullish engulfing bar. I don't care about these trend lines. I'm just putting them there just to show you the flag type consolidation. To us, it's called a buy setup. A buy setup is a controlled retracement in an uptrend and reversal on support. That's our entry, stop under the low, had a bullish weekly on this one, sold some in the strength, and made 30% return on this in 8 days. So remember I said, just let the stock take us out? We just went into trail mode. Flagpole, rising 20, rising 50, counter trend, 30%. Whole, another concept of ours is retracement analysis. You want these flag patterns from the momentum move to generally stay in the upper third of the momentum move. Just eyeball it. You'll never see us pull out of Fibonacci. Just eyeball it. From this move to this move, how much did this retrace? About a third. Bingo. It's perfect. Bullish engulfing bar, you buy with a high of this bar, stop under the low. See, it didn't take out, the trend line, but that's when the bar is telling me to enter. So I mentioned we have 3 advisory letters. This one is the advisory swing and options letter, where we trade stocks, options, long, short. Greg Capper, my partner, does a very detailed techno-fundamental trade analysis on the weekends. We have the Telegram, the open spreadsheet. You get lifetime coaching, and we have a special here, 2 for 2 months for the price of 1, plus 2 free educational reports in there. You can go to mastertrader.com/advisory2-1, as you see there, or email us with any questions. So this one's messier, and I do this on purpose. I don't give all perfect setups, but let's see what's going on here. Momentum move. After a breakdown failure, I'm now above the 20 and the 50. And this one, it's not a flag. So we call this one a rectangle. It's a box. It's a box. It's a bull flag rectangle. So we would buy a breakout when the bars tell us to. Where would that be in this example right here? It would be over this pivot right here. This is the computer, remember, spits out this pivot high. I would buy over the high of that bar, stop under this green bar, manage in between. Rectangles. So I didn't even put the box around here on purpose. Momentum move, breakout above all moving averages. What's it doing? It's resting. It's resting from this power move. I have 1, 2, 3, 4, 5. I could put a box here if you feel it'll help you. But where's my entry and stop? Over the high of this recent bar, stop under the red bar, manage in between. What about this one? Momentum move. What makes this one better is we have what's called a 180 reversal, that this red bar suggested lower prices and it immediately got negated, and then the next bar closed at the high. So my entry on this one is over this bar's high, stop under the prior green bar. This is a bullish 1, 2, 3 continuation from a bull rectangle after a 180 and a void. So there's so many things going for that one. Let's talk about head and shoulder patterns. These are some of my favorite. And let's put them in now the context of objective master trader language. Not just saying, oh, there's a head in here and they tell me to buy the neckline. Okay, so that's a vanilla answer that I learned 30 years ago. Let's put it in our terminology. I have a strong uptrend. I have a big move down. I'm not doing anything yet. I'm just labeling things here for you. There's no trade here for me. There's nothing I recognize. It broke down, and now I have 100% retracement back to resistance with bullish price action. We need a price void from this momentum move. So the head this is an inverse head and shoulder, are bullish. The head and rapid retracement, we call this a downside shakeout. 100% retracement, bullish price action at major resistance. If you don't have a void, just forget about it. There's no tradable pattern. But our entry is over this little red bar, stop under the red bar, manage in between. This one we gave, look, breakout of inverse head and shoulder, red bar ignored. That's this little red bar ignored is a plus because this red bar suggested lower prices and it immediately got negated. All right, I got a lot of these examples, so I'll go through them a little quicker here because we're running out of time. But you know, we had this saying when I started talking about the poker player, it's the same but different. It's a different hand dealt to me, but it's the same concept. Momentum move down, downside shakeout, 100% retracement, bullish price action, price void, buy over the high, or you're buying on a bullish setup breakout. Pick the proper stop for that. Look at this one. 100% retracement, bullish price action. This red bar suggested lower prices. Didn't go anywhere. Bought the breakout. All right, well, this one, it wasn't a closed trade. So you could see how we entered it. So this bar right here, here's how we entered it in the morning. So it gap on the 15-minute chart, it had a bullish gap up, which you can see here is a bullish gap up. We bought the 15-minute high. Now you could trade this either for a day trader, buy 15-minute high, stop under this end of day support on the 15-minute chart. For a swing trade, it has to be under the prior day's low. Same but different. Look, this thing got killed on a gap. SMCI. Head, 100% retracement, bullish price action, neckline. This bar right here was a closing breakout. So we bought over the high of this bar, booked 4 points, and it's because I got a void because of this gap breakdown. This is just beautiful. Oh, that's the same one. 15-minute chart. All right. But you see how my eye just immediately said no brainer. No brainer trade right there. But yeah, that was a duplicate. But here's another one, no brainer. Why is it a no brainer? I have a rising 50, I have a rising 200, I have a flat 20, which tells me it's a consolidation in an intermediate and long-term uptrend. Broke down. So now I have lower highs and lower lows. What am I going to do with that right here? Well, it looks like it might balance just because it's a short-term climb-o, but 100% retracement. This square I'm purposely showing you is bullish price action at major resistance. Look at these two little bars here. I have a small correction bar, traded under the prior bar and snapped right back. This one, breakout of an inverse head and shoulder at the 20 MA, sold some into strength, sold the last part into strength, 5-day swing trade, 6.5% return. This is my void. My target is really this prior high. There's insignificant resistance from this multi-week consolidation pattern. Same but different. Now this one's not as juicy as the others. So here's what we did. And on this bar, it was a closing breakout. We shorted a $3 wide bull put credit spread. So look, notice how the 200 MA was 33.37 because the software just kind of spits it out. So we sold a $33 put. We bought a 3 strike lower put. That's called a $3 wide bull put credit spread. Took in 45 cents a share. So if you sell 10 of these contracts, $450 is immediately into your brokerage account. Does that mean it's profit? No, of course not, because you have an obligation to buy 1,000 shares of this stock on or before expiration at $33 strike price if the put holder wants you to. But once you understand this pattern and price action, little downside shakeout, closing breakout, the odds of this now going under $33 for a couple days is staggeringly high. So when we sell options and spreads around our compelling patterns, we call them income trades, where we're taking in the income. And when option traders buy options, calls or puts, that's what I call a depreciating asset, because of the concept of time decay. The cost of that call or put option, if the stock is not moving in the direction of the call or the put, then it erodes, and it erodes rapidly into expiration in the last 10 days. So we take that option concept and we flip it on its head to our advantage in using our technical expertise. So this one was a directional trade, big multi-month bottoming pattern. Here's my price void. Notice that this tail, we call these correction bars. we define a correction bar as it takes out the low of one or more bars and snaps right back to the high. So that has the effect of clearing out some stops. So this 2-bar pattern with a correction bar is a higher odds trade than just buying over. See, now had I bought over the high of this bar, stop has to be the prior bar's low. But now that I have a correction bar, my stop's under the bottoming tail. It's already traded under prior bar's low and snapped back. Here's my price void. What's my target on this? I don't know. Why do you say I don't know, Dan? Well, because I don't know how big. But I would say my target is somewhere between 80 and 83. Why? Look at the void and look at this major inverse head and shoulder bottoming pattern. This is power. But you have to have the void, of course. Every one of these, I'm showing you that. Same but different. Same but different. Came down, new low, back up, sideways, price void. I'm focus on the pattern, not the names. Now this one also gapped up. So 15-minute is a microscope of the daily chart. Market hours on NYSE is 9:30 to 4. So do the math. There's 26 15-minute bars. Look at this. This one, we bought the 1-hour high. So at 10:30, which is 4 bars, 4 15-minute bars, we bought over the high. And that could be for a day trade or swing trade. Either one, this is a great setup. Same but different. Same but different. 100%. Closing breakout over the topping tail. Same but different, you all. Same but different. All right, head and shoulders breakdown. Head and shoulder breakdown. So this one's a mess, but again, we do that, show you messy things because I want you to focus on price action. This had a bullish gap up, followed by a bearish gap down. So this is actually it's another, it's not a consolidation, but it's what's called a bear island gap, where it leaves all of this as an island because there's space here, space here. So it's a bearish setup. Here's my consolidation on major support. I'm under all 3 moving averages. My entry is under this green bar. Now it gaps, so we have to figure out how to get on board and then stop. I'd probably give my first swing trade 1, 2, 3. I'd probably put my stop over the high of those 3 bars. Aha, look at this coincidence. The weekly chart is a descending triangle with a price void. So the daily and weekly suggested a big target to fall because of the price void. See? So I mean, rarely do I get 2 classical patterns on multiple time frames. This one was a little bit coincidence. All right, one more and then we'll wrap it up here. Head and shoulders in a downtrend. My friend in the green room, Gustavo, came up with this word Medusa, so I decided to keep it. And it's just my term for fun. It's a head and shoulder, but with 2 heads. So here's my retracement. I'm in a downtrend. Look at my declining 50, declining 200. So I have a consolidation in a downtrend. Here's my shoulder. Here's my shoulder. But wait, I got 2 heads. That's fine. That's fine. Give me 3 heads. I don't care. I know how to read price action. Look at this wide range bar that closed right on the neckline support. I have 2 inside bars. That's what we call a bear 1, 2, 3 continuation breakdown. Here's my price void. Short the stock under the 1, 2, 3. Stop over there. Manage in between. All right. So this one, look, we covered 2 days later. Look, we entered this on 5/11, 5/13. 2 days later, we covered a half for a $7 gain, and now we're just managing the back half. All right, so Greg Capper, I mentioned I've been working with him over 25 years. He's one of the pioneers in technical analysis, and he's just finishing this course on candlesticks, and it evolved into so much more than he imagined. But that's kind of our nature, to always want to help and learn and explain. And then it's full of videos, but it's mastering the understanding of candlesticks, basic to advanced, putting them together, the patterns, trade management, multiple time frames, day trading. And there's so much information in this course. It's going to be $9.97 when it comes out in a week or two, and we're going to give a 50% discount, early bird discount, and it's just through tomorrow, through the end of October here. Go to mastertrader.com/best course. Feel free to email me, Dan@mastertrader.com, for anything you've learned today or anything else, or email Greg at MasterTrader directly for questions about his course, or likewise any other things. We answer questions from non-subscribers all the time, because we're there to help. So I hope you enjoyed that, and enjoy the rest of the webinar, and look forward to seeing everyone again in the future. Good trading all.
Thank you, Dan. You've made classic patterns feel fresh again. We all needed that. It's been really crazy trading market, so we needed that. Thank you so much. Everyone, more information is now in the chat, so check out Dan's offers. He has a lot of experience and he knows what he's doing, so thank you. All right, up next, we have at a market tipping point, protecting your capital is everything. Chris Vermeulen of Technical Trader is here with a powerful ETF-based strategy to help you avoid traps and grow your wealth, no matter what stocks, bonds, or commodities are doing. Charts, insights, and serious value. Let's go, Chris.
Hey, thanks for having me, guys. Appreciate it. Always a pleasure, and happy Halloween. Halloween special with Dan's double-headed head and shoulder.
Yeah.
All right. Well, I'll kick things off. Appreciate everybody kicking around. It's an interesting day in the markets. It's a little bit of a pause and pull back when we look at the overall equities market. But I'm going to jump into presentation a little bit, and we'll jump back and forth between the live charts and what's going on and what I want to share today, because I believe we're getting to a very important tipping point in a lot of people's life, where if you survived the 2008 or experienced it, or the tech bubble, it's something you got to be prepared of. You never know when it's going to happen. These things are rare, but when they do, they disrupt your life, and you can give back 10, 20, 30 years of life saving and hard work. So today I want to talk about how to trade trends in stocks and precious metals. Precious metals are giving us a huge warning sign that something big and bad is brewing. And I'm going to show you what we're seeing and what I think is going to happen, and then how I attack the markets with my unique strategy. So quick disclaimer here, this webinar is for educational and informational purposes only. We provide educational services that are meant to teach you the risks and reward of trading, and are not implying or guaranteeing any profits. I am not a licensed broker or financial advisor, so be sure you contact someone before you make any trades on your own. So let's just jump into the reality of things. I can help you today with what I'm going to show you here. If you're worried the market is topping, if you've missed the recent rally, if you're on the wrong side of this rally, and if you don't know how to protect or grow your account when we do go into a bear market, and potentially a window where there's 5 or 10 years of no significant growth. So that's what I'm going to show you. A little bit about myself. I more or less semi-retired at the age of 27. I made a lot of money in the financial markets after 2008, and built a dream home on the water. I've got my wife, Kristen, my daughter, Mirabelle, and her dogs, and my son, Ben here. And we've got a pretty darn good lifestyle. I live on the water. I love to kiteboard, surf. We travel. My daughter competes in horseback riding, and we ski, and all of that stuff. But it didn't come easy. Yes, it came early, but I also have gone through a bankruptcy. I've blown up 3 trading accounts. So I've been through the ringer, and I've learned, I've seen how a loss of money can actually almost kill people. In fact, there was a survey done in the United States that showed about 8,700 people committed suicide directly linked to falling stock prices in 2008. So what we're coming up to is not just bad on your pocketbook, but it actually kills people. The stress wrecks relationships, all of that stuff. And my father actually had gone through a bankruptcy, and the stress from that ended up causing him to have seizures. And it was very, very scary story. I thought my dad was dead at one point, my sister and I, and it's all based on losing money and the stress that can come with it. So what I'm showing you here is very different than what Dan was showing when it comes to options trading. I'm showing you 5 to 12 potentially trades a year using simple ETFs and how to protect and grow your account pretty much in all market conditions. And you don't have to worry what the Fed does. You don't have to worry what Trump does. Who cares about the news or politics or the economy? Because price is the real thing. All we do is follow price. So a little bit about myself. I have written a book, Asset Revesting, which is the strategy I'm going to show you here today. I do a lot of podcasts on financial stations. I'm a pure technical analyst, similar to Dan. Price charts are the key. It doesn't matter what the fundamentals are. I've lost my shirt owning the strongest companies in the world that have the strongest and highest quarterly earnings growth. And I can tell you that when you enter a bear market, those stocks just get slaughtered, even though they're the best companies. And we've also seen worthless companies and fake companies see their stocks skyrocket. So people who follow fundamentals and news, they're really just, really wasting their time, because the reality is you just want to own stuff going up, and we can tell if it's going up, down, or sideways. So the strategy I'm going to show you here is going to harness one of the most powerful forces in the universe, which Albert Einstein said, that is compound interest. And so this is the type of equity curve, this thick line here of our strategy, the strategy that I use and trade with my own capital and what I share in my newsletter for everyone to copy. This is the type of equity curve we have, slow and steady, a bunch of first base, second base hits to the upside. Now, here's the thing. Instead of swinging for the fences and having a very volatile account, good years and bad years, what I'm looking for is just 5 to 12 high probability, low risk trades that we get in, and we can compound a bunch of small growths 5 to 12 times a year. And because we're not swinging for the fences, and because we're just taking these small consistent profits, we're compounding them. We get the growth of a high growth account. Now, from the 2007 market top to where we are roughly now with the NASDAQ, we're pretty much on par with the returns of the NASDAQ, crushing the S&P 500 and annihilating the buy and hold. So if you're looking for a way to protect your retirement, your capital, and you're stressed out, this is the ultimate strategy, and this is designed for large accounts. This is obviously works with smaller ones, but you can dump millions of dollars into this strategy and it doesn't really phase you, and it doesn't move the markets. So that's what I'm going to show you here. Now, Curtis Faith, he's a pretty famous trader. He says this thing, and I believe this. I've been trading for over 26 years now. He says, it takes a lot of time of study before someone realizes just how simple trading is, but it takes many years of failure before most traders comes to grips with how hard it can be to keep things simple and not lose sight of basics. Everyone gets caught up on crazy indicators and tools and all kinds of hot lists and all kinds of stuff, and they make things super complicated. And what I'm going to show you here is the markets are not that complicated at all. You just need to know what to do, and believe it or not, you can have a pretty good lifestyle, manage your money, and not be glued to the screens. So there's two ways to trade. Most people are discretionary traders. They look for trades. They think they have a strategy. They don't have rules set up. They just kind of jump around. They pick random trade size accounts, random targets. They get in emotionally. They get out emotionally. All of that stuff. It is an absolute nightmare. Discretionary trading is very difficult, even for the best of traders who use typically mechanical systems. And so I'm going to show you how the mechanical strategy, or the strategy that I have, is pretty much, it's like you dropping into a foreign country, into the city, and you have a GPS and you need to get somewhere. That's what a proper strategy does. And it doesn't matter what country you're in. It doesn't matter what language you're speaking. It's going to take you to where you need to go. And so the strategy that I'm going to show you is going to get your account to where you need it to go without taking a bunch of wrong turns and hitting some dead ends and all of that stuff. So when we take a look at these two different types of returns, the question here is which one generates the highest return over a 5-year window. So most people naturally look at this. You want to make 19, 20, 11, you're going to have the occasional bad year, 10, pretty darn good. This is what most people would die for. The reality is, believe it or not, the 8% consistently, that really doesn't carry very much volatility, doesn't carry a whole lot of stress, you don't have to trade a lot, generates the exact same amount of money. So instead of like doing a million courses and chasing all the hottest, shiniest, flashiest sectors and stocks and commodities and stuff, you can just knock it out of the park with something that is consistent and you don't have to worry about things. Now, this is only 8%. The strategy I'm showing you, we average right now about 13, 14% a year, which dramatically crushes even some of the best traders. Because it only takes 1 year of no returns or bad returns, and you've just killed all of the hard work you've done for previous years. It's like 3 steps forward, 4 steps backwards when it comes to volatile or discretionary trading. So life-changing trends are driven by institutions and big investors. And if you understand the big money flows, intermarket analysis, you can identify if the tide is going up for in a bullish environment or a bearish environment. And this is where I'm going to show you how simple we can make this market look and how much easier it is to navigate. So most people are naturally going to have some of these big, during a bear market like 2008 or the tech bubble, you can lose 50+% of your account. Now, it's okay to lose money because we can always make it back. The problem here, or the bigger thing is this. You waste 13 years. Now, as we get older, we realize time is way more valuable than money, and most of us do not want to waste 5, 10, 15 years because of just some old strategy of buy and hold, or not knowing when we're in a rising tide or a falling tide environment. So the analysis and the tools that I have literally just show us, are we in a bullish environment? Should we own a particular asset? Or are we in a bearish? Should we just get away from it or bet on falling pricing? And when we overview this or overlay this on the stock market, the tech bubble and the financial crash, you can see you're either in a bullish environment or you're in a bearish environment. Now imagine if you knew when to hold, and imagine when you knew when to sell, or when to bet against the market you want it to fall, or just when to move to cash and then when to move back in a new bull market. I mean, we're talking saving decades, making money more so decades sooner, and a lot of volatility you can avoid. In 2022, the market went up, we had a bullish phase, and then it went into a bearish phase. The market's pulled back well over 20%. Now we're back into a bullish environment. Imagine being able to navigate this. Now this is on the daily chart, and I'm going to show you smaller cycles that we trade because we're not looking for just the bull or bear. While they are good, there's a way to make more money by doing this, catching these smaller waves, these swells in the market, which I'll talk about here shortly. So, let's jump over to gold. Let's just jump over to where the markets are. I'm going to pull my charts up real quick. So there's some interesting things unfolding right now. I think maybe actually we'll go to this chart just for a split second. Now, if we take a look at this chart, we write back in 2023, gold broke into a new bull market, a new super cycle, and gold rallied. And then eventually in 2006, it went dormant for about a year and a half, a couple of years. And during that time it went dormant, everything else skyrocketed. Nobody wanted boring old gold. They wanted to buy real estate. They wanted to buy stocks. Those things took off. And then suddenly, just a few months before the stock market put in a major top and a financial crisis came, gold took off. Now it looks small and dwarfed here because of the recent price action, but overall gold is a barometer telling us something big and bad is brewing and something is going to happen. Now, if we and then gold did pull back 34%, it will sell off with the stock market in most cases. Now, fast forwarding to 2019, we started a new super cycle in gold. It went dormant for a few years, which stocks and real estate have skyrocketed. And then really in the past 2 years, we've seen gold just shoot higher, telling us something really big and bad is about to happen. I don't know what it is. It's going to definitely affect the whole world because gold is the global barometer. Think of planet Earth as like a hive mentality. Everyone around the world is buying gold. Everyone is worried. It's not just US based or North America based. This is something big unfolding. And so if we were to fast forward, let's go over to my charts here. If we were to go and compare 2007, so the chart on the left here is 2007. The candlestick chart here is the S&P 500, which was hitting all-time highs here and here. The yellow line is the price of gold, which was rallying with the stock market. Just like we've seen now, gold and stocks have just been on fire together. Now, what's interesting is we've seen a little bit of weakness in the stock market, and gold pulled back in 2007. We're getting close to this similar type of scenario. And what happened in 2007 was the stock market started to flounder. And as money started coming out of the stock market, gold started to shoot higher. Now, gold's already been outperforming, but as money starts to really move out of equities, it looks for safety. It says, okay, well, if I can't be in stocks, where am I going to go? And naturally, people chase where whatever is moving higher. And so money comes out of equities, piles into gold, silver, and miners, and we see that shoot higher. Now, if we were to also, let me just pull up another chart here. If we were to overlay that with the dollar, take a look at this, the dollar index. Everybody hates the dollar. They think it's going to be worthless. It's going to collapse, and someday it probably will. It is a fiat currency, but nobody wants it. Dollar's down, gold is up. Well, take a look at the chart on the right. This is where we are right now. Gold is rallying, stock market's rallying, and we've got the first kind of significant pullback in gold. I believe this, whoops, let me just grab this tool. I believe this little hiccup in gold here is very similar to where we are right now on this chart, this little hiccup in gold. So I do think we're gonna have a big leg higher as the market kind of starts to fall apart. Now take a look at the dollar index on the current gold chart. We've seen the dollar completely fall. It's undervalued. It's starting to carve out a bottom, and it's starting to, eventually head higher. So nobody wants the dollar. It's had a huge drop. Now, if we were to kind of throw a bunch more noise on here, take a look at this. What happened just before, just as the stock market was putting in a major top and started to sell off and gold hit all-time highs? We saw everyone piling into gold miners. We saw everyone piling into silver. Everyone's piling into platinum and palladium. They became the crowded play. Now take a look at where we are now. We have the same type of thing. Everybody's piling into gold miners, silver, platinum, and palladium. It is becoming the crowded play. I'm not saying the trade is over yet. I still think there's potential for another big run, one more big push in precious metals space in general, that whole complex. But that's something we need to be worried about here. So let's just move over to market structure. So if we take a look at market structure, I've kind of touched on these tides, a rising tide and a falling tide environment. Now, I like to look at this as the ocean. I live on the water. I love to surf and fish. We have boats, all that stuff. If you think of the stock market like the ocean tide, what happens to boats when the tide goes up? They all go up. Well, stock market is the same. When the stock market is in a bull market, pretty much all stocks go up. Just some go up faster than others. There could be hotter sectors, right? This is why they did it. I remember back in 1997 when I really got involved into the stock market, they were doing studies and monkeys were outperforming financial advisors. They were throwing darts at a newspaper and like crushing the advisors. And the reason they were doing that is because we were in a bull market and the monkeys were only buying stocks. They were just hitting any stock. It doesn't matter. Some will outperform, some will underperform, but they're naturally going to go up. While advisor, they got to follow the rules. They got to do the 60-40. They have to diversify. So they own some stocks going up. They own a whole bunch of other crap that's not performing, like bonds might be underperforming or different things, or gold's, trendless. So just knowing when to hold an asset and when not to hold an asset will save you a ton. Now this is the same kind of like the bull and bear market phase, but this is broken down into, we have multiple waves throughout the year. We can identify these trends. Now, when we break it down to a downtrend, this is 2022. You can see waves are much more clear in a downtrend. They're not quite as skewed and dragged out like an uptrend. You can see the green bars here. Uptrends are very short-lived when the tide is going down. It's not about trying to catch the bounces so much. It's about taking advantage of falling pricing, or at least knowing when to get out so you don't have to hold as price falls. Now, when the tide is going down, the majority of the time, the market is in a downtrend and going lower. So either or, you can still try and trade the upside trades, or you can move to a different asset class that can go up during this phase. In fact, if we go and take a look at the dollar index, and we just look at what happened to the dollar index in 2022, just zoom back here a bunch. Take a look at this, 2022, that is not the dollar index. Hold on one sec, here we go. 2022, while the stock market went into a bear market, what happened to the dollar? The dollar index posted a pretty big return. It shot up over 20%. And the nice thing about playing a currency is they trend really nicely, and the dollar currencies don't fluctuate huge. A big pullback in a currency within an uptrend is generally 3 or 4%. Now the stock market, you know, you go back and you look at the stock market during that time, when we look at this chart, these are like 15 and 20% pullbacks. Or if you're short, you're still going to have these big rallies against you. So that's the nice thing about knowing what asset class to go to. Now, if we were to take a look at what happened this year, this is the COVID crash of the COVID crash. This is the tariff sell-off this February, March. We saw the stock market was in an uptrend. This is my asset revesting strategy. It just color codes the bars, tells us to get out, tells us to move to a different asset while the stock market falls. The stock market fell 21% from where we exited. Then it bounced, and then the bounce turned into a rally. Our system said, hey, this is not a bounce anymore. It actually has strength behind it. This is a new wave to the upside. We were able to purchase back into the stock market at a 5% lower than where we exited. And then of course we can ride this up and we hit our 15% target on the QQQ. Now, also, while the market's going down, we moved into another trade that made money as the stock market went down and had some pretty crazy volatility. And so this is what the strategy that I'm showing you does. It allows us to just know when to get out, know what other asset to get into, and then when to get back into the equities markets. Now, if we were to take a look at, let's just take a look at this. Now, this is the same strategy. Now, this is the S&P 500. And so when we're not in the S&P 500, this is going back to 2008 or so, these green circles are when the stock market said to get out. Our strategy says don't hold stocks. And so each of these circles is when we move to a different asset class. We actually moved to TLT back in this time. So instead of holding stocks and watching our accounts go down, we just rotated over into TLT, and we just move into TLT, and of course our profits just slowly keep stacking up. So as the stock market is not favorable, we move to something else and we can generate some pretty big return. I think this, obviously you turn a $100,000 account into about 160 and change in the same time frame, which works out to be something like 7 or 8% return a year just on average over time to get taking advantage of a different asset when the stock market's out of favor. So you pull a bunch out of the stock market, but then you can also pull more out of different assets when the stock market isn't favorable. And that's the real key, is this asset revesting strategy is all about reinvesting our money into a different asset when something falls out of favor. Now, when we take a look at the market in terms of the different stages, there are 4 stages to this market. Stage 1 is a base. It's colored red because it's usually trendless. It's choppy. It could be trendless for years. You don't want to waste time. It's dangerous. Stage 2 is a bull market phase. This is what everybody loves. It's what everybody wishes it could be. It's what everybody always thinks the market is in. And stage 3 is a topping phase. Usually this is where people get confused. This is where we're at now as a stage 3 based on all the analysis that I have. And then a stage 4 is a decline. It's a bear market. It's a financial reset. And if you notice, stage 4 is green. And the reason because it is a strong trend. We as traders and investors, we don't really care which way it goes. We just want a strong wave. We want a strong trend. So we can make money when it has a strong trend to the upside. We can also make money when it has a strong trend to the downside. And so just knowing what stage it's in requires a different trading strategy. Most people have the same strategy they use in a stage 2. They try using it in a stage 3 and they struggle. And of course, they lose their shirts in a stage 4. Everything changes during the stages. There's little changes that need to be done. Some of them are actually pretty big changes, and most people don't change anything. They just try the same old thing and they wonder why it doesn't work. Now, if we look at the stock market cycle, we've got this this blue cycle here. We are in this precious metals phase. Precious metals have come to life. Whoever's involved or whoever has an open mind to get into precious metals, like 2 weeks ago, 3 weeks ago, they're all piling in. If they weren't in, but they were open to the idea, they all bought. And that's why we saw the sharp pullback in gold. When we take a look over at gold here, I was talking about this on my YouTube channel saying, listen, we're in this FOMO driven move. We ended up doing a trade where we got in right over here with gold. We got out right here because it was a 100% Fibonacci target. It had a quick pullback. And then we went into this FOMO phase, and I was sharing, I have tools to show us how much emotion's flowing through the market. And you could cut the knife with an air in the precious metals space. If you weren't in precious metals, you were giving in. You were saying, I got to get in. I can't take it anymore. And of course, now we've got this sharp reset. It's flushing out some traders. And I do think we're going to see it go higher, but it's definitely at its first little bout of selling here to try and shake out the FOMO traders who got in really in the last few sessions near this top. Now, another thing to look at here is the economic and business cycle. Now, we're in this innovation and adaptation phase, which is kind of, the economy still has some room to grow from this phase, but from the stock market cycle, it's still kind of right where gold is. You know, we had the big tech bubble back in 2000. That was a huge wave, which eventually burst. Right now, we've got the AI bubble. It's kind of like a tech bubble, except for just a little bit different. But of course, the AI bubble has got the biggest tech companies, which are dragging the indices higher. So for example, instead of seeing this type of price action where we have a blow off top and then a correction, the stock indices in general keep dragging to all-time highs, even though the majority of stocks are actually doing this. The major indices are causing camouflage. People don't see how weak the market is because the stock index, like the S&P 500 and the NASDAQ, are hitting all-time highs and are in a very strong rally phase. So there's a lot of things going on that people don't realize. When you combine a stock market top with an economic top, that's when we get a big stage 4 decline, something that could last years. So let's just talk about the emotions of market participants. This euphoric phase is kind of, this thrill / euphoric phase is kind of where the precious metals space is right now. I kind of think we're still gonna have one more sharp push up in metals, and then of course it's gonna get hit. And there'll be all kinds of people that think, oh, it's just a cool off phase. People will get in and thinking it's gonna go higher, but eventually it breaks down. And then they seem to have anxiety. This will be the same with the stock market though. People will be like, I can't believe I'm getting margin calls, what's going on? And then it starts to really break down. And eventually people get down so much, they realize I'm down so much, I have to ride it out. That's what they think anyway. And they hold on to it and they go through this painful cycle that lasts way too long and they give back way too much profit. So what I want to show you here is using technical analysis, using a proven strategy, a GPS system. As people have anxiety, denial, panic, and anger, as the stock market starts to break down for people like us, we don't have anxiety, we have optimism. We're like, sweet, we might be going into a bear market because there's big money to be made in a bear market. The markets fall 4 to 7 times faster than they rise. So you can make a ton of money in a much more shortened period of time. As people have denial about how much they're losing, they can't believe what's going on. We're in full on belief. We're like, no, this is a bear market, rock and roll. And then of course people start to panic and we're like, I'm loving it. It's like taking candy from a baby. And then as people have anger and depression down in here because they've lost their shirts, their retirement's downgraded, everything sucks. We're in this euphoric phase going, well, I know it's coming to an end, but let's just milk it for all we can and just be prepared for some sharp reversals. So that is, I want to show you how you can live and thrive on this on both sides. The really crappy times are generally this kind of hope phase, like, in a stage 1, and also this complacency phase over here. They're turning points. The turning points are difficult. And that's kind of where we're at right now still. So I do teach a bunch of this in my book, Technical Trading Mastery. And if we have time, I might show some of my indicators that show us when we're overbought, oversold, panic selling, and FOMO buying. So you know these turning points. But you can learn about technical analysis and how I attack the markets from that book as well. But let's move over to holding assets, which assets to hold. Now, this strategy I use uses a hierarchy. These are the core asset classes that I focus on most of the time. Now, I do also issue discretionary bonus trades in Bitcoin. We did one last year. It was a 40% gain in about a month and a half. We just got out of a gold trade. It was a quick 15% that lasted a month and a half. So I do issue other trades, but the strategy I'm showing you here is focusing on the US index ETFs, SPY and QQQ, focuses on the long-term treasury bond, the US dollar index ETF, the inverse dollar ETF, and then a cash position. BIL is just a kind of like a cash, just pays you daily interest, a monthly dividend payment. So we're either long stocks, bonds, currency, or we're in cash. And so we don't dive into the nitty-gritty of individual stocks or sectors. And we generally always want to be holding whatever is higher on this hierarchy list. We want something with more volatility. Volatility means more potential to make money. Also means you can lose more, but the strategy we show and how we manage things, we're able to contain our risk and our downside losses when something doesn't work out in our favor. So that's kind of how we do this. And we just work down this asset list until there's a new cycle in the market. So if we were to take a look at this pullback here in the SPY, we were long the SPY with green bars. Our strategy said to get out. We moved into TLT because at that time it was a trading signal. In fact, it rallied 19% in 9 days. It blew past our I think it was a 15% target, filled us at 19%. And then of course we moved to a cash position and it just pays out dividends and monthly dividend more or less for your interest. Now, if you take a look at this sell-off and this rebound, this is the COVID crash, which is kind of crazy because it looks exactly like the tariff crash this year in February. It looks like the sell-off, we had the bounce and it sold way off. We had the strong rebound, a bounce, and then it started to stabilize and it turned into a trend and took off. So we were able to just walk through this market, always holding something going up. And then we were able to buy back into the stock market 13% lower than where we exited and then ride the next trend up. And so, I mean, COVID, I can't believe how long ago it was already, but I remember when we moved out of equities, moved into bonds, and we became richer than we'd ever been with this huge rally. And then we moved to cash. The chaos between food and toilet paper and people dying and everything closed, like it was insane. People were losing their shirts in terms of their investment accounts. The market fell like 35%. We were in cash, richer than we'd ever been, and we didn't have to worry about anything but our health and our family. And then of course, eventually the dust settled from a stock market standpoint, and we were able to get long and play it again. So imagine just putting on the blinders like a workhorse. You don't see all this other noise going on. We just look at the charts. Forget the news, forget everything else, just follow the money. And it'll save you so much time, anxiety, and stress. It will blow your mind. That's what people always say who subscribe to my service. They're blown away with how, they call me the David Attenborough of the stock market, because it doesn't matter how big of a down day something is or how big of an update is. I'm like explaining like a flower opening in the morning, curling under the sun and the dew. It's like the stock markets are peaceful if you just turn off the noise, and they're pretty straightforward. So when we apply a strategy like this, obviously we got the typical buy and hope or the buy and hold strategy, the 60-40. There's two accounts here, and then there's an asset revesting strategy, which is what I'm showing you. Both of these people have $1 million. They both withdraw $50,000 a year to help subsidize their retirement. This is the 10-year window for the buy and hold strategy. This is the same 10-year window for the asset revesting strategy. Notice the poor returns for the buy and hold. After 10 years, you still have $1 million left. You did withdraw 500,000, so you're okay. But keep in mind, $1 million now is really only worth like 500,000. Everything's like doubled in value after COVID. Versus we just rotate. We have 5 or 10, 12 trades a year. We're always holding something going up. We're sitting in cash, which is still generating us returns each month. We end up having a much higher return, 3 times as much money. Probably, well, if you're doing the buy and hold, you don't have to do anything other than panic and stress. But if you're an active trader trying to get these returns, you're working your butt off and you're taking a lot of risk in most cases. And that's what This is what this strategy does that I'm showing you here. This is that type of equity curve. And most people are chasing returns. How can I have big average annual returns? But if you think about it, look at it from an investor standpoint, from a retiree standpoint. This is who I help the most. Anybody generally 50 plus, you've got millions of dollars, you're retired, soon to be retired, you're worried about your retirement funds and your legacy and all of that stuff because of some big financial reset coming. Who cares about the returns? Even though we crush the other strategies in terms of performance with this strategy, the thing you should be looking at here is maximum drawdown. What's the worst case scenario? We had the biggest drawdown in 2007, 2008. It was less than 6%. Most people, we're seeing people with dividend stocks and the buy and hold portfolio doing this in a couple of days. This is our worst drawdown compared to what a lot of strategies and individual traders have. So it allows you to really relax because we're not swinging for the fences because we don't need to. We're moving into slower moving assets with all of our portfolio, managing those and navigating it from that standpoint. So this is the strategy, this asset revesting strategy. If you want to learn about it and get a better feel of it, you can get my book, Asset Revesting. It's in Amazon. Again, it's #2. It's not always, it's up and down. Sometimes it's top seller, sometimes it's the most gifted, depending on where you go. But this is a really good book if you're wanting to protect your retirement and not have to stress. Just go live life and travel and spend time with family and grandkids. This is kind of the whole core focus here. So we've got hundreds of testimonials, but more or less, Kai says, I lose FOMO more and more as I place trust in the technical traders team. I enjoyed profits versus loss since joining. Thank you. Kenny says, this is the best decision I've made for my financial future and investments. Chris and his team have provided less stress and more success in the financial markets. I've learned so much in regards to how the markets work, emotions, positions, and continue to do so. I have recommended technical traders to many people of all stages, paid for his membership in this first trade. It goes on and on. We've got hundreds of these. You can go online and Google. But this is really, I can't say it enough. Everybody who joins eventually says, I wish I found you like 10 years ago. Like they'll just to get rid of all the stress and just to be able to like walk through the markets like it's nothing. So we're kind of getting close to the end of the time here. Let's just jump over back to the charts here, and I want to kind of just pull up some of our trading tools here when we look at the S&P 500. This is the SPY ETF, and in the book Technical Trading Mastery, in chapter 10, 11, and 12, I teach you how to identify a trend. Should it be a green uptrend, or a downtrend red? I teach you how to identify panic selling. So when the market has panic selling, when it's actually oversold and we should expect a pretty imminent rebound. Now keep in mind, this is a 30-minute chart, regular trading hours only. So these are kind of momentum trades for those of you who are very active. But it also tells us in the chapter 11, I think it is, on how to know when there's FOMO. When the market is a little bit overbought, you should expect it to stall out and eventually have a little bit of a pullback and try and shake people out. Of course, we have, when you're in an uptrend, we're not really looking at FOMO. When the bars are green or we're trending up, we're only looking for panic selling. These are opportunities to be able to buy on the dip and then let it rip. And then if we do go straight into a FOMO point after, for a short-term trader, you just close out the trade and be like, okay, sweet, I just nailed it. A couple percentage points in, out, and then you wait for a new setup. And so that's the type of play that we're looking for. If we go and look at our long-term chart, let's look at our long-term rising, falling weekly chart. So this is our technical investor strategy, which comes in the bundle that I have here for Traders Corner. This tells us when we are in a bullish environment, when we don't want to hold stocks, we're in a bearish environment. And of course, it allows us to protect ourselves during these bearish phases or these big market shakeouts, because you don't want to hold through these, because sometimes they just keep going and they keep going until it's like 40, 50%. And then it takes years to make it back. So we do need to eject, protect ourselves when that happens, but we are back into a bullish environment right now. Now, this is the big bull and bear market cycles I showed near the beginning. This tells us when to hold, when not to hold stocks. If we were to compare it with the asset revesting strategy down below, it's telling us when to get out, when to get in, when to get out, and back and forth. So we can play several waves every year and make a lot more than just buying and holding and wasting time. And when the market goes red on the ACS strategy, the adaptive compounding strategy that I'm showing you here, when it goes red, we move into a different asset. We're not just, sometimes we're sitting in cash, but we could be long bonds, we could be long a currency, and they could be going up in value while the stock market is out of favor. So again, it's not just about the returns on the index, it's when it goes red, we're actually making money in a different asset class. But it just shows how you can have multiple smaller waves or swells within this overall market. And so I'm not sure if I explained it or not, but we talked about the rising tide and falling tide. And just think, if you're on an ocean watching a surfer, he's floating out past where the waves break. What is he just sitting on his board there floating, waiting for? He's waiting for a set of waves to roll in. Surfers have it figured out. You're not trying to trade every little wave, and you're not going to catch them. They're unpredictable, they're choppy. They wait for a nice set to roll in. And that's what we focus on in the stock market every year. There's usually 5 to 12 sets that roll in. We pick the one that meets our risk criteria, and then we hop on and we play that trade. And the nice thing about catching strong waves, we also know when they're starting to weaken. So we can do a couple of things. We can start locking in some partial profits. We can then start moving our protective stops up. And then we're mentally prepared, going, okay, well, this isn't going to last forever. We're getting closer. And that way, when it does start to show signs of weakness and it starts to roll over, we're not panicking. We're like, oh, okay, it's come to an end, and wait for our system to say, okay, now exit this trade, and we get out, which removes a ton of risk. We see with this strategy here that we have, we see trades come in usually 3 or 4 days in advance. So we have this, like, we're already warmed up. We're like, okay, we might be getting long here in the next few days, or the trend might come to an end or something like that. And having that insight a few days ahead of time really removes a lot of that stress and strain from the markets. So anyways, more or less, that's kind of about it. I believe the time really is now to protect ourselves. I mean, there's more people that are in retirement, closer to retirement. Pretty much everyone has the most money they've ever had. The last thing you want to do is wipe out a huge chunk of it because of the markets have a correction. And it doesn't matter what causes it. Could be Trump, could be some financial crisis, could be who knows. It could be the Fed and the rate changes. It doesn't matter. The key is you have to have a strategy, and the price is going to move, and you just have to have a game plan for that. So the Trader's Corner special, there's all kinds of bonuses that we have wrapped up in here. It's $3,000 for the year US, but you are loaded with things. So the ACS strategy, which is the asset revesting strategy, it stands for ACS, for adaptive compounding strategy, because we're obviously adapting to the markets, and then every trade we're compounding the growth on the previous trade's growth. And that's what gives us these low volatility but high returns on average each year. So if you are in the States, pretty much most countries other than Canada, we provide the auto trading. So you can tap into your brokerage account and trade for you. So you can have a portion of your portfolio running with this strategy, and you can go knock yourself out with your active trading stuff already. You get our bull and bear market signals, which I showed you at the very beginning, when to hold and when we're in a bullish environment and when not to be. You get our band trading strategy, which I didn't touch on here. I'll show you here in another slide in a second. You get a live daily pre-market videos. So every morning I run through the markets before the opening bell, and I post it so you know what's going on and what to expect. We have live mentoring sessions where we get on for 2 hours twice a month as a group, and you can ask questions. We go through the charts and answer all your questions and concerns and ideas. And then I have a 7-hour video technical analysis course. So kind of what that looks like. The technical analysis course, we cover all kinds of stuff, from moving averages, support and resistance, relative strength and stochastics, which most people trade relative strength completely backwards. They think it's overbought, oversold, which is actually the complete opposite. Where people think it's overbought, it's actually the power zone. Things are going to go a whole lot higher, and vice versa. But anyway, there's a whole bunch of stuff here for people to learn from. We've got these mentoring sessions here, and the band trader. Now this is in a stage 2 bull market. This is what's really is an amazing bonus, because what this hot list does is it tells us when there's a new trigger for a specific sector. We cover about 40 sectors. When there's a new trigger, You can get long the sector. And how this works here is this tells us there's a trigger 15 days ago. And 15 days ago, there was one of these new triggers, and it's up 33% from that entry price. So the hot list tells us not only is it in a short-term uptrend, but it's in a long-term uptrend, and is risk on. Are people piling into that sector? And then when they are, we can get into these trades. And what this looks like, here's a daily chart of XOP. These little green squares are band hot list triggers, and you can see 17, 8, 21, 11. And over here we've got 11, 20, 23. If you're an options trader, man, to know when to buy into these and to catch, if you're an options trader, you know how much money can be made on a 8 or 17% move over a 1 or 2 week window. You can really leverage these explosive breakouts and take advantage of that. So anyways, that's about it in a nutshell. I'll hand it back to you, and hopefully there's you just go to my website, thetechnicaltraders.com. We have this special offer on right now, right at the website, so you can go there. If you got questions, email us. But hopefully you got some insight there, and hopefully you're interested in protecting your capital, or at least a chunk of it, with a strategy that you don't have to worry about. So anyways, that's it for now, and have a great day, guys.
Thanks, Chris. That was a wake-up call for risk-aware investing. Hit the link in chat for more. All right. And next, we're closing out this summit with cutting-edge innovation from Rory Powers of Right Line Trading. He's revealing how AI bots and ChatGPT-based automation can transform your trading emotion-free, rules-based, and built for today's speed. This is the future of trading, and it's happening now. And Rory can be found on YouTube every day doing it. So, next up is Rory.
Hey, thanks a lot, Anthony. Really appreciate that introduction. And it's always really a pleasure to be on Traders Corner. Thank you for having me.
Thank you.
All right, everybody. It's been a great presentation, a really great mix of different information with both stocks, options, and futures. But stick around. I think I've got something that just might be of interest to you, only because it makes money. It's been making really nice money. In fact, I'd like to show you just today the leaderboard of our top performing bots. Just crushed it. This is not over the course of a week or a month. This is what these bots did today. And we happen to be in a time that with this volatility, it was kind of the perfect storm today that these bots really thrive. So stick around. I'm going to be presenting on the AI Auto Trader. We've come a long way these last couple of years. We've integrated ChatGPT into it. These are smarter, faster, and fully automated. Some brand new information coming your way. Before we get too far into the minutia, let's take care of the alphabet soup of the federal government. This broadcast is for demonstration and educational purposes only. It's important to know I'm not a licensed financial advisor. We're not offering any type of trading advice here today. If you're not familiar with the risks associated with trading, please consult with a licensed financial advisor. I'm going to make this really a very quick presentation. I know it's been a long day, but I think it's very important to know that one of the characteristics that distinguish Right Line Trading from our competitors is really our transparency. We're live on the right edge of the charts every morning on YouTube, and I'm going to put a link in the chat box and invite everybody that's here today to come check these bots out tomorrow on a live market. You're in for a real treat if you haven't seen it live. And that's one of the key characteristics that distinguishes Right Line. Let me take just a brief moment to acknowledge my team. It's important to know also that I'm not here alone flipping the switches and pulling the levers. I'm a part of a really highly educated, experienced team of professionals. We've been around for 14 years now, and it's our mission to develop innovative trading strategies and indicators that help predict the future direction of price. Now that's very valuable information. I always liken it to having the winning lottery numbers prior to the drawing. If we only knew in advance which way, with absolute certainty, which way the market was headed, imagine the money that we can make. It'd be incredible. Unfortunately, it's just a dream, but we want to offer our members with an edge and help to predict the future direction of price. Along the way, over the last decade or 14 years, we have built a beautiful community of traders of all experience levels. If you're a complete newbie who's never traded before, this is a perfect fit for you. If you're an experienced trader looking to supplement or add to what you're currently doing, I think this would be wonderful as well. Very quickly, just to introduce the members of our team. We have 3 professional traders here at Right Line Trading. We have Mr. Craig Emery and David Kushner, who trade our futures instruments. We have Mr. David Wise. He's our professional options trader. He's a leader in the Reddit community. He's been trading professionally for 14 years and maintains a 90% win rate. So if options is your thing, I highly recommend checking out David. On the website, we have a 14-day free trial. Behind the desks here at Right Line, we have Mr. Brock Miller. Brock's my right-hand man, great guy. He's a college student. He's getting his degree in computer science. We have Mr. Sergio Luque Rodriguez. Let me tell you, when it comes to coding and developing, software, there's nobody quite like Sergio. I've really known him for a long time, been working with him for over 10 years. And, he's gone from coding complex mathematical algorithms, mathematical equations, mathematical modeling, and now heading into this AI revolution that we're currently in. He's coding AI integrations like it's nobody's business. The team is led by Mr. Mark Miller. By the way, I want to mention Sergio does have a master's degree in computer science. If he can't code it, nobody can. He's just a whiz on the computer. Mark Miller is the owner and leader of our team, and he's the owner of Right Line Trading. Mark is an MBA. He has a master's or an MBA, excuse me. He has an MBA from Cal State. He's a U.S. Army vet. Yes. He was actually a sniper in the U.S. Army. And, what I love about Mark the most, not only is he highly educated with his MBA, his background, his expertise lies in automation and robotics. He's an engineer. But what I really respect the most about him, he's a man of God. He brings those core military values of honesty, integrity, transparency into the forefront of everything that we do here at Right Line Trading. If something does not conform to those principles, it is eliminated quickly. I assure you of that. So I'm very proud to be a member of this handsome team. A little bit about myself, the voice that you hear behind the screen here. My name's Rory Powers. I reside down in South Florida, and my passion, other than trading the financial markets, is saltwater fishing. I live a stone's throw away from the Florida Keys, and this is a recent picture, well, a few years old now, of Mark Miller, Sergio, and myself. Went fishing down in the Keys and caught some beautiful snapper and grouper. But listen, every fisherman has a fish story, and I'm going to make it a short one. But I've got to tell you I got to tell you about the best catch, the biggest, best, most fruitful catch of my lifetime, and it is the one that did not get away, thank God, is my beautiful wife. My beautiful wife is a Haitian American. I'm so proud of her. She just recently got her master's degree in nursing education, and she teaches other nurses how to become the RNs. God has blessed us, and it is God, I know it is, with 2 beautiful children. This was taken just last week on my front patio of my 2 little girls. I have a 6-year-old and a 2-year-old, and the 2-year-old is the boss, for sure. These are really the apples of our eye, our purpose. So God is good. And enough about me. This presentation I'm going to show you is really, this image really puts it into perspective. If you've blown out trading accounts, if you've had problems with inconsistency, if emotions are sabotaging your trading results, and let me say that again, if emotions are sabotaging your trading results like they do mine, and I always like to put myself in the first person because I'm the biggest culprit of making emotional decisions that are based purely on emotions. I get schooled by this market day in and day out. Left to my own devices, we have a solution, a viable path to profitability with this AI leveraged automated system. The genesis of the AI auto trader was our lack of consistency. This professional woman, if a picture can say 1,000 words, I'm going to shorten it to 100. This is a professional who has watched her trading account dwindle over the course of the last 4 to 6 months to almost nothing. She's a beautiful conservative woman. She's wearing a business suit in an office building, but look what she's about to do. She's become so enraged. It's come to a bursting point, a boiling point, and she's taken that sledgehammer out of the bottom drawer of her desk, and she's ready to smash it through that monitor. And listen, I answer the phones here. I know that you felt the same way at some point because I have the privilege of talking to so many traders over the phone. Listen, we all have felt and have been exactly where this woman is. You see, she's absolutely convinced at this point that there's a conspiracy going on, right? Nobody could be that unlucky. She thinks there's a conspiracy between the market makers, the prop firm, the broker. They're all out to get her money, and it's got to be a setup. You know, the fix. It reminds me of that movie, The Sting. You know, she's convinced that there's something underhanded going on. So that was the genesis of the AI auto trader. Because listen, we've all experienced problems making money. You know, I was right here. It's funny. It's deja vu. I was speaking right here at Traders Corner, and right before my presentation was Mr. Chris Vermeulen. Chris Vermeulen just preceded me. The guy's a genius. He really is. Extremely intelligent. And the presentation he did that day happened to be about human personality traits. These personality traits that we as humans all share in common. What makes us unique as individuals is we have a certain percentage of each one of these characteristics. So Chris had done a study. I remember like it was yesterday. And what he had found in the course of his study was maybe 1 or 2 out of 10 of the core personality traits that we all share as humans lend well to being a good disciplined trader. So what does that mean? That means 85 to 90% of us genetically are predisposed to being at a disadvantage because our own genetics, our own personalities do not lend well to just relying on the technicals. Okay, we let emotions get in our way. So that is the most common reason why we fail as traders. To give you an example of, I like to refer to it as stepping on a banana peel. Human errors, these bonehead decisions that I make left to my own devices. You know, I just heard Chris say he blew out 2 trading accounts. I used to blow out 2 trading accounts before lunchtime. You know, I was the king of blowing out trading accounts. And that's all changed with this AI automation. If you fall into the category of sabotaging your own results, I like to cut my winners short, which hurts us as futures traders. When I see those green numbers on my P&L, I'll have my little chart trader up on Ninja Trader, and I'll be in a trade. And if I see that green number, If I'm up $200 or $300, it's like a knee reflex reaction. I've got to grab my stop and pull it up, because God forbid I should give back or lose those little bit of profits that I just put in the bank. But we all know that the way the ebb and flow of the market works, you've got to give it a little room. You've got to let it go up and retrace and go up and retrace and be patient and disciplined and not make decisions based on watching your P&L go up or down. That's when emotions get the best of us and we start slipping on banana peels. Sure, we've bought indicators that just don't work or lack a proven trading methodology, but it all leads to the same cold, desolate place of blowing out our trading accounts. So this is what has really been the genesis, the motivation in our team, is our commitment to bring this to an end, to find a solution. So we've narrowed it down to two things that we believe are going to create trading success. And I'm going to kind of flip the script here. I know number 1 and 2, but I'm going to make number 1 software that can automatically get us in and out. Listen, left to our own devices, I've spoken to so many of you. A lot of us just aren't that great of traders. Sure, we have our moments where, you know, we can have great days and feel like we're finally, we've turned the corner and we finally are going to get somewhere, only to give it back again and again and again. So ideally, number 1, we need software that can do it for us, okay? We need to lay off and let this thing go to work for us. So an automated system, but not just any automated system. We need the proper tool set. What do I mean by the proper tool set? Well, listen, when you talk about automated strategies, the elephant in the room is always, well, listen, I bought the bot, you know, last year or in the past, and my experience wasn't a very good one. Listen, I've been, you know, with Rightline for over a decade. We've, you know, unfortunately developed strategies that in the past, that what happens is the settings will go stale. And what does that do to? The ever-changing market conditions. And it's really more pronounced now than I think it's ever been. We're trading in an extremely news-driven market. These economic news reports come out. These earnings reports come out, like we're seeing this week. These geopolitical unrest incidents come out. And we go from a choppy, ranging, miserable market to a market that's just flying one way or the other and in the drop of a dime. So having the proper tool set, listen, we happen to be in an AI revolution. I get calls all the time. They say, Rory, you know, why do you suppose you and your members are having so much success with this? And the reason is because these bots will dynamically change their own settings based on the current market environment, based on news reports that are just coming out, based on earnings reports, geopolitical incidents, with this new ChatGPT integration, which can make context-aware decisions for us. You see, we have an API that we've developed that connects with ChatGPT that has several endpoints. The endpoints are with the Forex Factory calendar, the news reports, the results. They're with the earnings reports that are coming out. Many different sites that publish economic news reports or geopolitical incidences, social media, and all of these endpoints in ChatGPT will provide it with all of the data necessary to make instantaneous decisions that are extremely accurate. And that's what I'm talking about when I'm saying you need the proper tool set. So in real time, your automated bots are making decisions that are straight out of ChatGPT with 10 or 15 different endpoints, collecting an enormous amount of data and making context-aware decisions on the fly without our input or without our optimization efforts whatsoever. So that's what I'm referring to when I say we have to have the proper automated system, okay? Not just any automated system. The benefits from using AI, well, there's no more overthinking. There's no more slipping on banana peels. There's no more hesitating on a perfect trade setup. I'm going to go into the 4 ways that our software is leveraging artificial intelligence. Listen, it's no secret. I know you haven't been living under a rock. We're in an AI revolution, okay? NVIDIA this week became the first 5 trillion market cap company. That's enormous. And what do? They're developing these AI chips, and they've got this gentleman, Mr. Huang, who's the CEO, that happens to be a visionary. He just reported just this week, a collaboration, an investment that he was doing that they're doing with Nokia and T-Mobile, where they're doing their new aerial RAN computer platform, the Arc Pro, and they put together this consortium. It's a collaboration that's centered around creating AI-powered, efficient, upgradable telecom networks. It's the future. It's the 6G network. Okay, I remember not too long ago with Apple is the 1G network. Well, now we're at the next level. We're at 6G network. So this AI revolution that we're currently in, we're seeing every sector of our economy benefit from the power of this AI integrations. Just to name a few sectors that are currently leveraging AI. There's energy, agriculture, education, transportation and logistics, retail and e-commerce. Number 2, finance. Did you know that 95% of large institutions, that's hedge funds and investment firms, are trading with AI algos? Listen, don't get left behind. These guys aren't behind their desk clicking a mouse, trying to trade this market, which is just, at days that it's flying. But the number 1 sector, if you're curious, is healthcare. They're finding hopefully new cures for some of these diseases that our loved ones are dying from. So hopefully they have some breakthroughs there. But these are the top 4. Those were the top 10 sectors that are currently benefiting from this AI technology. We're in the midst of an AI revolution. So the way we are leveraging it, let's get back to our bots. I always like to bring up the actual strategy itself and show it to you. And I'm going to show you a video, a very short video, don't worry, of our leapfrog trade management. What we've learned is, yes, the trigger of how we get into a trade is very important, but maybe even more important is how we manage that trade once we're in it. Okay, trade management is just so tremendous. So I'm going to be showing you about a 1 or 2 minute video of our leapfrog trade management automation that's really changes the whole game, and I'll explain why. So the way that we're leveraging AI, and I want to get through this fairly quickly because I know it's been a long day. The way our technology works, each one of our bots runs in tandem with what we call a drone. Okay, we call it a drone. It's really just another bot, but we call it a drone because its job is just what you would think of a drone. When you think of a drone, what do you think of? You think of a small aircraft hovering above the environment and getting a bird's eye view of the overall landscape, right? It has a vantage point kind of above, floating above, and it gives it a bird's eye view of everything. And what it's doing, the drone is trading 23 hours a day. It has a very liberal stop an ambitious profit target. And it's trading all of our triggers. We have 4 different triggers that set these bots off. It's trading them all, and it's doing it 23 hours a day, okay? The drone is sharing a database with your bot. It's all housed on your computer, or you can run it on a VPS, but it's running locally or in your VPS. So this is the ways that we're using AI currently with these bots. So the drone is going to dynamically change the trading hours of your bot, okay? If you're going to set it and forget it, the bot is the way to go. You see, our mandate as developers of these automated strategies is not necessarily to get you into every winning trade. More importantly, it's to help us sidestep the losers. We've got to filter out the losers, okay? We have to. Or our risk to reward comes into play, and that becomes a very integral component, but let's stick with where we're at. One of the ways that we filter out the losers is the drone trades all 23 hours. It tells the bot, hey, every day at the Asian Open at about 11 p.m. between 11 and 12, man, I'm doing great. Look at this P&L I've got. So what it'll do, the bot do, it will dynamically change that first trading hour for that session in the Asian session. And then it finds in the London Open at 4 or 5 in the morning, it does good for an hour or two. Well, that second window is going to open up and just trade that section. And then it might find in the New York session another window of opportunity where it consistently brings home the bacon, has a really nice winning percentage, is able to filter out the majority of the losers and get profitable results. So it's only going to trade during the times of the day that it does the best. The other component that it does is, like I mentioned, we have 4 triggers, A, B, C, and D. Listen, we can make these strategies as conservative or aggressive as we want. We've got really great conditions that look at a number of different metrics. Market profile, contracts per minute, the volume, how far the distance we are from our 50, our 15 and 50 moving averages, areas of support and resistance. We're able to make these bots extremely conservative or at times aggressive as we see fit. So this AI is going to pick the trigger that is working in the current environment that we're trading in now, okay? If there's a certain trigger that's pulling in losers, it's not going to allow your bot to take it. Number 3 is the position of our stop and our profit targets. God, this trade management is so important, you have no idea. Robert is a member of ours. He's a member of our community. He does the optimization of strategies. And he told us, he said, hey, the first thing I do is I look at the data series, the time frame I'm going to trade on and the trade management. And then he worries about the conditions and the trigger. So he even prioritizes this. But the trade management is huge. This particular trade management, I'm setting up my video. I'm going to show you our leapfrog trade management. Where we go wrong as traders, where I go wrong, is I let my losers run and I cut my winners short. I am the biggest culprit of cutting my winners short. And what that does to us as traders is it puts us behind the 8 ball in a really bad way. Because what happens is we'll get 2 or 3 winners that we've cut short, and we're feeling great. We might be up pretty nice and we've got our confidence going, but then we'll take a loser that will totally eliminate all of the earnings, all of the winnings that we just had on those 2 or 3 trades. It's really deflating. It's heartbreaking, to say the least. So all of that blood, sweat, and tears is out the window on one trade. Okay, we're going to put an end to that. what we've done is all of our strategies, number one, this one in particular is kind of modest, not as extreme as some of the others. But we have a stop loss of 60 ticks and our profit target is 100. This is the drone. What it'll do is if the MFE, if the average true range of the market, it mathematically looks at your winning trades and it looks at your MAE. What that means is it looks at your maximum adverse excursion. How much heat did your winners take? Okay, that's how it determines where to put your stop. This is done mathematically in milliseconds. It's very quick. It's like a computer, a calculator. So it's going to dynamically change the position of your stop and your profit target based on the range of the market. Is it a trending market or is it a choppy ranging market? And it's going to put your stop and profit target mathematically in the position that it's going to make the most money. Okay. Then we've taken it a step further. I'm sure we have your standard trailing stop, which is so-so. Sometimes even better is if we have an ambitious profit target of say 100 ticks and we make it to 50 ticks, we could go to break even at 50 and then take maybe 20 or maybe 20 ticks of profit. But remember, our profit target is 100. So then we have our next leg of profit that we're going to start kicking in. And I say that plural because this is called a leapfrog that continuously leaps forward. And it starts with an initial profit target of 100, but that could go up to 200, 300, even 400 ticks if the market is trending. You see, once it gets in my profit window, which is 25 ticks in this example from 100. So I'm plus 75 on the trade. My stop flies up and locks in 50 ticks. Now it puts me into what we call the leapfrog. The leapfrog, I know I'm talking fast and I don't want to confuse anybody, but to set this video up, this is the leapfrog trade management in action, okay? Just to set up the video, I'm in the trade about to get into my profit window. Remember, once I'm plus 75 on this trade, my stop automatically flies up and locks in 50 ticks of profit. From that point, my stop and my profit target are going to leapfrog. Both of them simultaneously will jump forward. My stop will jump forward and continuously lock in more profits, and my profit target is going to continuously leap forward and allow the trade to continue to mature. So this is how we even that risk to reward ratio that hurts us as traders. No longer do we need a 70 or 80% win rate. With this leapfrog integration, it gives you the ability to hit a home run on every single entry. And if I let this tape play, and I'm not going to let it go all the way through because I think you'll get my idea in just a few moments, this thing is going to continue. Sometimes it goes 300-400 ticks, and I kid you not. So if you pulled in a loser or two and you're a little bit deflated, listen, on the very next entry, it could put you in the green and eliminate those 2 or 3 losers. You see how we kind of flipped the script? We flipped the script. Now it does not take 3 winners to eliminate 1 loser. Now we can eliminate 2 or 3 losers with 1 winner with this leapfrog integration. And this trade just continues to mature up. There's only 2 ways out of this loop. We always have the ability with these bots to drag our stop manually. That's a very common question I get. Hey, can I manage the trade myself? Absolutely. That's why we put the stop and the profit target on the chart. I do it all the time and I mess up my own trades, to be honest. If I would just leave the darn thing alone, I'd probably do 5 times better than I do now. But the 2 ways out of this trade is for it to stop out and come back and hit my stop, or I could hit close on my chart trader. And that leapfrog, as far as trade management goes, I believe it to be the best thing we've ever come out with, hands down. Okay, let me keep going. So just to briefly recap, without going through all of everything again, we've outlined the ways. The one way that I did not leave, that I left out, was our pattern recognition. Listen, these charts are, these candlestick patterns are repetitive. The charts are very geometrical and symmetrical. Fibonacci is very symmetrical as well. But these candlestick patterns reoccur. Certain candlestick patterns reoccur. We have a machine learning algorithm that looks for certain candlestick patterns. And when they recognize them, they take context-aware reactions to those candlestick patterns that they recognize. This is the setting in the strategy itself that has a number of different candlestick patterns that the system has the ability to recognize. The way the drone and the bot works is the drone is running 23 hours. The bot sees, hey, the drone gets killed during these hours of the day. I'm just going to sidestep those hours and not trade. See, that's patience and discipline that I don't have as a trader. Left to my own devices, if I'm trading in this area, I want to get into a trade. You know, it's like going to the barber shop and watching everyone else get a haircut, and you sit there and you don't get your haircut. Well, sooner or later, you're going to get in that chair and get your haircut. So it's much better to not even get into a trade if you know your chances of winning are, you know, not that good. 50-50 at best. Average true range of the market, we discussed that. And what we just released. I know my slide says coming soon. It's come. It's released. If you decide to come aboard, the ChatGPT integration is now available, and it is going to be included in my offer at no additional cost. Okay, the ChatGPT integration does come with this AI auto trader. So listen, I could talk until I'm blue in the face, but all it really boils down to is the numbers, right? I'm a numbers guy, and the numbers make the most sense to me. So if it makes dollars, it makes sense. So looking at the numbers, and it's important to know that these numbers are not based on some back test on a strategy analyzer, which can be a helpful tool to help us optimize templates. However, we know if we have any experience with backtesting, we know with the strategy analyzer backtester with Ninja, we know the numbers are fictitious. They're inaccurate. They look fantastic, but when we actually trade them, we're disappointed because they're just not true. So it's important to know that the numbers I'm showing you is performance that took place forward testing, trading on a live market, okay, not a back test. So from April 1st to September 26th, one of our top bots was the 150 range RJ, made just under $10,000 after commissions. This was trading one E-mini, one NQ mini. The drone up just over 20,000 in that same time frame. The ES Starbot, this was our gift from Robert. I alluded to Robert as one of our members who happens to be a professional in this niche. Robert, and this is him here in our Discord community. He's an expert at the optimization of bots. He's got these bots from 5, 10, a dozen different vendors. He actually optimized this template on the NASDAQ, okay? Mistakenly ran it on the ES, and it's been the best bot by far that we've ever had in the history of our company. This was an equity curve of over 6 or 7 months that he made over $60,000 at one time trading this ES30 range. And that was one of our members. Listen, this thing is continuing its winning ways. The ES30 Starbot up over 20 grand from March 1st to September 26th. I'm always somebody that likes the what have you done for me lately's. If you've ever heard me on YouTube, I always look at the what have you done for me lately. Listen, if you made me money back in March, I was very grateful back then and I was happy. But you know what? Unfortunately, we need to make money every day, right? So if you made money back in March, what have you done for me today, right? So I always like to look at some more recent results. So this is from September 1st to, let's make it to the 30th. So this ES30 range from September 1st to October 30th, the bot is up just under $7,000. Okay, just under 7. Let me regenerate it, make sure it's accurate. Now remember, the bot is the one that's being optimized by the drone. So if I look at the drone and compare it to the bot, the drone made $2,000, okay? And the max drawdown was $6,200. If any of you are prop traders, you probably said, oh, a $6,000 drawdown. How am I going to trade that thing? Listen, the bot will take this lemon, and it's not a lemon. You made 2,600. So if you're trading a cash account, you're very happy, okay? Even if you made 2,600. But the bot kind of made lemonade out of that. It significantly reduces the drawdown, and it increases the profits to just under 7,000. So that's how that bot drone relationship, works together for the good. On the ES30 bot, the ES30 Starbot, $7,100 on the bot between September 1st and October 30th. If we look at the drone in that same time frame lost $2,000. Okay, so you see that this optimization process that we're using is working. It's working. These ES30 bots, you can completely set them and forget them. If you watch them trade, I assure you'll want to get involved because some of the trades go on for 2, 3, 4, 5 hours, and you'll think it's going to lose 5 different times, and it winds up making $1,000. It's just very hard to watch and not touch. So it's almost better to set it and forget it. Now, if I don't have time to get to all the questions, if you would, because I'm going to do my special offer here in just a moment, I'm running out of time. If you would please put your name and your phone number in the chat box. I'm going to do my best to give you a call. If not this afternoon, I know it's been a long day. Definitely by tomorrow, I'll give you a call and try to answer the question to my best ability. I always refer to this system as prop trading on steroids. And I thought of it because I watched Mark Miller. He's the owner of Right Line Trading. I watched him on YouTube one day, and he was using a trade copier with 20 different Apex accounts. I kid you not, 20 of them. And he traded what we call a one-day pass. So one-day pass, you could take an evaluation account. This is good on the evaluation accounts only. And in one trade, it takes the maximum number of contracts to go the minimum number of ticks in order to pass your eval in one trade. And it uses all of that logic that I described earlier on deciding exactly when to get in and where to put, which trigger to use and so forth. But I watched Mark, I kid you not, make $40,000 or $50,000 using a trade copier and trading these bots. When we first started trading and we were getting these emails in our inbox of all of this money that people were making trading and how easy and how fast it was going to be. This was the first time ever that I saw somebody actually do it in real time. So I was like, holy smokes, this is prop trading on steroids. And listen, if you ever see it, and tomorrow I'm going to put a link in the room to our live streams. Come check it out tomorrow. I don't have the guts like Mark does to do 20 at a time, but I'll do 3 or 4 at a time. So prop trading on steroids, we have templates that are customized for prop traders. You have 2 phases. You have the evaluation phase, where you have to get, say, for example, in a $50,000 eval, you might need to make 3,000 before you lose 2,500. In that evaluation, it could be a seesaw ride. It could take weeks of going up and down and all around. A lot of blood, sweat, and tears and time. This one-day pass will make very quick work of it. To give you an idea of the one-day passes, what to expect, I'll show you my ChatGPT. My ChatGPT, before I came on, showed me the winning percentage in the last 2 months of all my one-day passes. Our hottest one-day passes are the crude oil and the ES30 range. Those are 40 and 56%. Then we had gold, which was at 0. We had the 2-minute at 29% and the NQ30 range at 25%. Listen, I answer the phones here, and I don't want to mislead you. I like to underpromise and overdeliver. Right? Somebody who answers the phone, believe me. I've been on the other side and called somebody up and said, "Hey, you told me this," and that's not what happened. Let's put it at 33%. Okay, I know my slide said 40 and 50, but let's put it at 33 because this is trading. And anything can happen. We could take 5 losers in a row. We could take 5 winners in a row. But over the course of a few months, let's put it at 33%. Okay, 1 out of 3. So when you have these prop firms that put out 80 or 90% discounts and the accounts are 20 or 30 bucks, if you throw $100 out there and get 3, statistically you're going to get a PA account on one of them. Okay. However, once we get the funded account, obviously we're going to transition to something that's a little more sustainable, a strategy that's more sustainable. We're going to pivot off of the one-day pass. We're going to start trading bots that have much less risk, and we have a much higher win rate. So one of them happens to be the power play. This equity curve that you see here is my results of trading live on YouTube, up over 40,000. And that's starting from January 15th. I know my slide says October 10th, but I'll pull you up something more current. This is right to today. These are my PA accounts. If I uncheck them, this is between January 15th and today. We'll put the 3 PA accounts up, and you'll see the beautiful equity curve, the profit just over 40%. When we first released that power play, it came out of the gate like gangbusters. We were getting winners. We weren't even getting heat on the trades. It's been a little more rugged these last few months, but still, we've been able to maintain a really beautiful equity curve on these PA accounts over the course of 10 months now, 10 months. Very common question. Can we get payouts? Yes, yes, and yes. You can use these bots to trade your prop accounts. Make sure that your prop firm supports NinjaTrader 8. That's the platform that this system runs on. We have some, let me tell you, we have such a great community. I really hope that you decide to come aboard. We really consider you part of our trading family. We've got just a wonderful family of traders. Judy is one of my favorites. You know, I told Judy when I grow up, I want to be just like her. She's retired and she's now a traveler, a world traveler. She had a bucket list of locations that she wanted to go to, and she throws her portable, you know, trading computer into her travel bag, and she's even got a, you know, this monitor that goes with it, and she trades with us every morning on YouTube. I kid you not, in different regions of the world. She's come from Dubai, from off of an MSC cruise in the Mediterranean in Italy. Right now she's in Hong Kong, I think, or China, excuse me. She's in China. I kid you not. And she joins us every morning from these locations, and she's partially funding this traveling with her trading, by trading these bots. So she's really a lot of fun, a great member of our community. Simon is is one of our members from across the pond. You can trade these bots regardless of where you are in the world. If you're in Australia, New Zealand, if you're in the UK or Singapore, regardless of where you are, as long as you have live data and NinjaTrader 8, you could trade these automated bots, okay? But Simon was crushing it. Had a day, made over $16,000. Limit Up, lit up the scoreboard. Steve Cherry, countless other members that are running this AI system that are doing extremely well. Ron N, Vietnam vet. Ron, I know Ron for going on 14 years now. It made $10,000 trading our gold bot. Right now, Judy's making a killing on our gold bot. Gold over the years has not been our most consistent bot, but it's a very valuable tool to have in the toolbox, because when it gets volatile like it has been lately, and I think with Donald Trump in office, it'll continue, gold makes these huge moves that we can capitalize on. Suzanne is a leader of our community. So these are some examples of some of the members that are currently doing extremely well. Okay, here's our Auto Trader, our AI Auto Halloween Traders Corner special offer. What we're going to do is we're going to include the full Monty, okay? The full Monty, what I mean by that is the system comes with the chart templates. We have just these beautiful chart templates. This was the Mack truck that runs on a 20 Unarenko. It made over $5,600 today. If you look at some of these entries that it took, just one after the next, a short, bam. Just to put it into context, there's a 20 Unarenko. Every bar in the direction of the trend represents 20 ticks. So this entry that covered 1, 2, 3, 4, 5, 6, 7, 8, 9 bars represents 200 ticks. Okay, it's not a small move. $5,600. But I wanted to show you the beautiful chart templates and the indicator suite that this system is leveraging. Just beautiful indicators that really provide us with a look into the future. So the discretionary component, all of the automated strategies are included. We're going to include all of the one-day pass and the PA account templates if you're a prop trader. Normally that's a $16.99 add-on. We're also going to include our brand new ChatGPT trading analyst. It will analyze a tremendous amount of data, provide you with which bot to trade and when. Okay. So the monthly membership, we're going to discount it from $5.99 to $4.99. My associate Brock just put a link in the chat box, and you can take advantage of that offer by clicking on that link. Our lifetime membership normally is $49.99. For this Halloween special, we're going to discount it by 50%. So the one-time payment, lifetime membership, 50% off. at $24.99. Okay, because we're here with Traders Corner and we love Traders Corner, let's take it to the next level. Let's really give you something juicy here. What we're going to do is we're going to drop the one-time payment down to $19.99. Okay, we're going to knock off an additional $500 to make that one-time payment $19.99. On our checkout page, if you use coupon code SAVE500, it's going to bring the $24.99 down to $19.99. Let me tell you, for $19.99, you'll have this system and all the updates that we come out with for this system free of charge. There'll be no ongoing maintenance fees. There'll be no charge whatsoever. We're going to do a fast, easy setup, a white glove installation. We're going to trade the system with you every morning on the right edge of the chart, and you're going to have the full Monty. Okay. Out of the corner of my eye, I see the PayPal later. I love PayPal later. Why do I love it? Because there's no interest. There's no interest. I love using PayPal later. You can get up to 6 months if you qualify with 0% interest. If you divide this by 6, spread it out over 6 months, it's a little bit of an easier pill to swallow. Okay. Thank you, Vincent. I appreciate that. Vincent, Mr. Vince is he's a trader from Philadelphia, and I've known Vince for years and years. But we have got great tech support, great customer service. Please, if I don't get to your question because I've run out of time, please put your name and your number in the chat box. I want to put the YouTube live stream in the chat box. On YouTube, if you were to go to our channel, it's Right Line Trading, and click on the live. Remember, we pride ourselves on our transparency, and I'm not just saying it, I mean it. Every single one of our sessions is memorialized. If we had a bad day trading, there's no hiding from it, okay? So I'm just gonna create a session for tomorrow, and I'm gonna put the link in the chat box, and I'm gonna invite everybody to join us, and we're gonna let these bots go to work tomorrow. We'll start the stream off at on Halloween at 9:15 a.m. These bots can also be traded on the micros. Okay, here's my link, and I'm going to wrap up. I want to just take a minute and thank everybody for joining me today. It's a great presentation. I enjoyed it. I was able to watch most of it. I'm putting the link in now. Okay, there it is. We'll also send you an email and invite you in by email tomorrow. All right, so that pretty much concludes it. I see everybody's number that left their number in, and I will be giving you a call to answer your questions. I just want to wrap up, and I want to say this. I want to thank you for joining me today. And it's important to know that if you've blown out trading accounts in the past, if your journey in this trading world has been full of potholes and speed bumps, I just want to give you a word of encouragement. I was there myself. I'm not kidding you. I work for Right Line Trading, but I am a terrible trader. Left to my own devices, I will blow out a trading account quicker than you know what. These results that I made this year were not my doing. They were because I had these bots trading for me. And I'm not too proud to tell you that. Over $40,000 in profits. So I come with a realistic, viable path to potentially take you to the next level with consistent results. So I want to thank everybody for joining me today. I hope you have a blessed weekend, a holiday weekend. My 2 little girls can't wait till tomorrow. They want to run around and get as much candy as possible. But I want to thank you once again for joining me, and God bless you and your families. Anthony, thank you so much for having me again on Traders Corner. It's always a privilege, and we really appreciate the opportunity.
Rory, I appreciate the opportunity, getting to meet so many incredible presenters, to be quite honest with you.
Oh, thank you. Appreciate that.
Thank you so much. And Right Line Trading has, just such a great support staff. So thank you. Another great presentation by Rory Powers. Thank you, Rory, for teaching us how your AI bots work. The AI edge is the real deal. Everyone grab the link in the chart to explore this further. What an incredible day, and what a wickedly smart group of traders you all are for joining us. Thank you to all of our presenters and for delivering such practical, powerful strategies. Remember, this Halloween Summit was all about helping you chart a roadmap to frighteningly good profits, and it's been scary. And I think we nailed it. So great job, everyone. Great job. From all of us at Traders Corner, trade smart, stay curious, and keep your edge razor sharp. Until next time, happy Halloween and happy trading. Thank you.